Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no. Just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Tuesday to you both.
Hello.
Same as it ever was. Same as it ever was.
Seriously.
We're on an 8 or 9 day market time frame. All hell is breaking loose. We're going to the abyss. Everything is fine for 8 or 9 days. We are there now, back at basically unchanged for the market. What do you do now?
I don't know. I did mention, oil futures, if you're looking at them right now, they're marked at 71.76. They had the roll yesterday.
Oh,
They're rolling over the next, they expire at the end of the week. So just keep that in mind for everybody.
You said 71? What did you say?
Yeah, they're at 71.76 right now, but we're looking at the M contract. K
91.
91. Sorry, 91.70.
Okay, I was like, what was I looking?
I was like, I'm gonna go get gas.
Did I say 71 or 91? I said 91.76.
That's correct.
I didn't want to correct you because I don't trade oil, and I was like, maybe there's some month of contract. I was like, maybe Nikki's in 2027, and I'm just a dumb bitch. I don't know.
It's better than the front contract.
Okay.
But excuse my. We're only 2 minutes in, so I've already.
Yes, I got it. I know you haven't been watching. Haven't been watching.
Yeah.
I missed 50 handles of that yesterday. Move to the upside.
Yes, I did too.
I didn't roll aggressively,
despite my bullishness.
Yeah, no. Well, I've been leaning bullish, but I didn't keep my deltas. I lost them. I started. Now I'm basically flat here. I mean,
unbelievable.
It's
an unbelievable day.
Unbelievable.
Crazy.
What do you think the split is between the tastylive personalities right now, between bullish and bearish?
Ooh.
Obviously, Tim Knight, number one goated spot on the bear side.
The perma bear.
Right, yeah.
But that's every day.
Right.
I don't know.
Is Dr. Jim our biggest bull?
That's a broken record.
Well, I was giving Mikey crap the last time I was on with him because he was kind of bearish.
Okay.
So I don't know. I mean, we switch though.
Okay.
I think a lot of us trade what's in front of us.
Right.
Less about the macro. I think the macro boys have gotten bearish.
Oh,
Well, I know my man Vecchio.
And Slappy Poo Poo.
I'm gonna get him back.
And Slappy Poo Poo.
I'm gonna get him back. He went to the dark side for a little bit, but we're gonna get him.
I tried to warn him, but he didn't listen.
Are you bullish?
I've been bullish.
Yeah.
I'm a little more neutral now. I mean, like I said, I didn't roll up puts as aggressively as I should have yesterday. I need to close some short puts I have in SPX on a broken wing butterfly. I did a couple
option trades today.
Option trades today, which is every day now, Vanetta, as you know. So
this man working
again, when I was on vacation, I wasn't doing very well, losing money. Mm-hmm. And since I've come back and righted the ship for the market,
correlation is not causation.
On my shoulders.
Nope, correlation is not causation.
Things have been better. Anyway, I just thought yesterday's action was just a step higher.
Unbelievable.
And it was a very tough trade after 8 days, 9 days of straight
low
up
volume.
Yeah, that's what I was going to say. No one's talking about the volume except for the people in our comments.
Yeah. It's been low volume. It's been relatively low volume for the last 2 weeks.
Are people just sitting on their hands? How do you?
You get a reset. It was where's where I was going this morning. I mean, you're unchanged for the year. Like, I don't care what you think. You're unchanged for the year. You've got a reset. What do you want to do now? Like, if you didn't like it, 16 days ago, lighten up. If you didn't catch the wave, volatility is still relatively high. Although you pointed out this morning that volatility is in
contango. It went from backwardation to contango. It's usually kind of the sign that things are like not
normal.
Crazy anymore.
Oh,
normal. Whatever that means.
Because the astronauts
normal.
are
It's
home?
like dysfunctionally normal.
Maybe. Yeah, I did see. I don't know. This could be AI slop, but I did see the picture of the capsule with the NASA logo. That was like, it looked perfect. Like nothing had happened to it, and then
never went through re-entry.
And then the rest of the spaceship was just burned.
Did you ever get your picture of the old lunar module that's on the moon?
No, I didn't get that. But I will say that I signed up to be on the memory drive.
Oh, for the next time up in space.
No, I did it on that one.
Oh.
So I've been to the moon.
Wow.
Oh.
I would not lead with that on your Hinge profile, but okay.
I have
the moon, Alice.
I have a picture of the ticket. I will get it.
Is that like you're like, hey baby, I bought you a star?
Yeah.
Yes, exactly. No, I bought you a plot of land.
I love whatever sector of capitalism this is. I love it.
Yeah, it's basically I bought you a plot of land on the moon.
I bought you a plot of land in Scotland. I bought you a star. You're on a memory drive.
Nothing says love like buying a star for your loved one.
Yeah. Yeah.
That's good, Vanetta.
Well, I'm funny.
My boarding pass. I have my boarding pass. This is my boarding pass.
Oh, there you go.
Oh, there you go.
Nice.
Boarding pass.
We're all
Yes.
We're all capturing that code now
Yes.
you have on there.
No, I think that code just like brings you to like the NASA website.
Oh.
I was like, you get a discount at Tim Hortons.
Yes,
I don't know what's going on.
Yeah,
but there was a very cute video of astronaut Christina Kirkman returning. Her dog was so happy to see her. It was literally the farthest someone has ever been away from their dog because like she was like a 250,000 miles. So like, and then
good point.
So, but no matter when you return, your dog always happy to see you. So.
Yes.
How was your evening, Nikki? What'd you get into?
It was good. Didn't really do much. I'm back on my pickleball.
Yeah.
Oh, wow.
Yeah, the back already tight.
Oh, you got to stretch, Nikki.
I know I got to stretch.
You got to get that plyometrics in.
Old.
Like, yeah, I know. Parts of my body are going out of warranty too, and I'm like, could you not?
The warranty is well past the expiration.
So do you play single pickleball? I don't know what
doubles.
You do play doubles with your lady.
No.
Oh no. Oh.
No. Competitively.
Okay, so with a dude from your summer camp?
No, they're like open plays, so it's just like.
Oh, okay. Like, is there a handicap? Okay.
Yeah,
like, how do you know what level
play with people like at your level?
But how do they know what level you're at though?
There's also
honor system.
Well, it's like golf where you get like a handicap of sorts.
Okay.
You can play against people, and then like as you win or lose, you get like moved up a ladder, basically.
Okay.
I play in like a 4 or 4.5.
Out of.
I don't know what it's out of.
Oh, okay.
But I think like 6.
Okay, because I was going to say if it was out of 5, like 4 out of 5 or 6 is good. But if it's out of 10, then I would not.
I don't know what I honestly don't know the high.
Okay.
But I'm on the higher end of like.
Of course you are, sweetie.
Like,
big strong man like yourself.
Yeah, of course.
Yeah,
of course.
Yeah.
Strapping young man like yourself. Mm-hmm.
So I'm on the the upper tier.
Okay.
Of course, the upper 1%.
You're the Steph Curry of pickleball.
Yes.
Or the Rory McIlroy, if you will.
There you
pickleball.
go.
There
Very
you
timely.
go.
Very timely.
Well, nice. I like that for you, but I want you to be careful, though. Okay, I want you to
Thank you.
Not hurt yourself
Thank
because
you.
we need you here.
Yeah.
Yeah.
Thank you.
Because you're already hurting your back carrying this guy.
That's what brought me to all these back problems started.
Right.
With this.
Right.
Not yet. Not yet with the back problems.
Not you? No, I'm saying my back problems started as I had to carry you.
Yes. Oh, absolutely.
Through this whole thing.
Of course. Of course. When the student becomes the teacher, I got it.
You got it. How about you, Tony? How was your evening last night?
You know what? It was a beautiful night.
Yeah.
Last night. I kind of did like a fart walk. You know what I mean? Like after dinner. You know what I mean?
Call it a hot girl walk.
Okay, hot girl walk.
Fart walk?
They have those too now. Yes, where like after dinner you go for a walk. So it's supposed to be good.
Hot girl walk.
You'll get there. You'll get there. You'll get there.
That's nice. I like to walk after a meal.
Yeah. I love it. I the warm weather when my hot tub I love the warm weather.
Yeah.
I'm so
You turned your
winter,
air on
although we're
yet?
gonna have it again.
Have you turned your air conditioning on yet?
I have it on dual now.
Oh,
So
okay.
We cannot go with the window open. Because old Italian guy thinks you get like sick if you have the window open.
I am into, I don't know if it's the Germans or the Swedes or if you're European, drop a hello in the chat also. holla at your girl. But the whole house burping thing, I'm like real big into it. So
What is that?
again, I don't know if it's German. I'm just going to say European.
About the fan in the ceiling?
No, it's just like 15 minutes every day. Americans, we're super weird and we never open our houses up to breathe.
Right.
And it's bad. It's like carbon monoxide from us breathing. It's mold, it's dust, it's pet, it's everything stuck in our houses. So 15 minutes a day, you just open up all your windows, get a cross breeze in, even in the winter. It's called house burping. I've started doing it. And I mean, I have allergies, but I'm just like, but I live it's better. House burping.
Yeah, nah, maybe if you live in like
It's
Montana,
free. It's
like you could do a
free.
house burp. You know,
I live under the L tracks.
Construction that they're building new homes around me. Nah, asbestos flying in the air.
I mean,
I'm gonna keep it all.
But everything that is trapped up, like your houses are sealed.
If I could
so
get it
tight
sealed
now.
in plastic, I would do that. Okay, that's how I would do it. That's how I would.
I think you'd be surprised.
I don't want a fan
Try
on
it.
me. My wife's into like fans while we're sleeping and stuff. I
You
just.
gotta get the air circulating. somehow.
Yeah, I know. Nah, I'm all right. All right.
Okay,
I'm
just
alright.
try it once.
Yeah.
'Cause I was like, I'll just try it once. I'm like, if it sucks, then
Yeah.
I mean, I did do it once, and then the rain started, and I was like, oh crap.
Close that, Squirrel.
Yeah.
Squirrel update. Squirrel's been missing for 2 days.
Oh no.
Oh no.
She's back last night.
Okay, good.
She was back last night. I didn't want to panic. I was going to wait a couple of days, like 3-5 days, something like that. But she's back now, so it's okay.
Yeah.
Our piping plovers are back here in Chicago. If you were a birder, it is a rare bird. They nest on the beaches. Monty and Rose were the first piping plovers, and they fell in love. Named after Montrose, like the beach where they're on, Monty and Rose. And then they had babies. So Imani, their son, is their baby. And then Imani had a baby, but they were worried about him. But being like the Chicago gangster bird he is, he lost his foot. Because they saw he had like something like wrapped around it, and they were worried about him. But he came back this year because they saw him yesterday. But like a G, he's missing a foot, and he's got like he's got like a pimp walk. But he's okay. But the piping plovers are back. If you care about birds,
That's
and James, our producer, says house burping is a German practice. So wunderbar. See, I knew that. It's German.
nice.
So there you go. It's pretty good.
Okay.
Hey, just real fast, can I tell you something? It's not really that exciting. So I had to go to the grocery store yesterday because, I eat. And I was returning my cart, and I parked over here, and the cart return is like on the other side of the parking lot. So I was returning my cart, but there were cars, that were coming into the to park. And so I was like hurrying, because I'm trying not to hold up the traffic. And so the car that was waiting here, this old man rolls down the window. He's like, "You ain't got to hurry, sweet thing." He's like, "You take your time. And I'm like, whose papa is this?
He was also doing the pimp walk.
I was like, somebody come get your grandpa. Oh, he's hollering at me out the passenger side of his best friend's ride. I'm just trying to live. And like, it's never like some hot dude. It's always somebody's pappy. 0 stars. Don't recommend. Hey, we got a great show for you today. It's a terrific Tuesday here at Tasty Live. All you procrastinators, you got one day. Lock in to get your taxes done. So
This is it.
Do or die.
Or file.
Call an audible if you have to. But on today's show, you are getting a refund. No. We got a great show. At the top of the 8 o'clock hour, we got an options jive, risk management tips for uncertain markets. What is that?
So this is a good one. So we're doing both our segments today have an air of correlation to them.
Oh, not an air.
They're both about volatility and correlations. And so we're going to talk about like kind of risk management during times of high correlation, like when markets get a little goofy. And then we're going to look at the market measure, how correlations change as volatility increases. So we always talk about like correlations go to 1 when things get crazy. We're kind of going to like quantify that and show some actual examples. So
Okay.
Yeah.
Then at 8:40 himself, Mr. Darkside himself, Chris Vecchio in the house for Let Me Explain. What are you going to talk about with Chris?
We're going to get him back to the bright side.
Okay. He's Mr. Brightside.
Yes, he's Mr. Brightside. We're going to get him back.
It's so hard to flip teams after.
We're going to get him. I need him.
Okay.
Okay.
Fair enough.
Yes.
Fair enough. You got to get enough.
Even though I'm slightly short delta now and kind of, playing for a little bit of a downside.
Understood.
Yeah.
Understood.
9 o'clock for market measures, market storms and portfolio correlations. Nikki, what's that about?
So we're talking about like pops and volatility correlation, how it gets or goes to one with some real life examples. It'll be a good one.
Okay. And then we have live from the trade desk at around 9:20. Quentin and Glenn in the house. Quentin counting down the top trending tickers over at Tasty Trade, and Glenn G Money on the FX side of our business. Check out Tasty FX if you haven't already.
He was, he didn't like it's his spot. So he was a little, I heard some rumblings over there that Q was a little upset, that we were replacing him.
Okay, Diva, if you're not here.
It was a little diva.
I had Marty this morning.
Yeah, we had Momo.
He's always early.
Jason comes on.
You didn't have me on again. You know. All right.
I mean, that's show business. There's always a hot young thing waiting to take your place. Yeah, looking at you, Marty. I know, just kidding.
Oh, that can be arranged.
No, I'm good. Thank you. But it is Tuesday, so Liz and Jenny together reunited live from the floor of the SIBO. It's always electric when the ladies are live. It's going to be at 10 a.m. Today, so always interesting. And it is an actual floor that the ladies are from.
Real human.
We are aware of how it sounds. We don't need the comments.
Traders do it on the floor.
Traders do it on the floor. But if you would like your comments featured on the Liz and Jenny show, use the hashtag LIZJNY, and the ladies will answer your comments live during their show. What?
You don't need no alibi.
That's right, LIZJNY. You don't need no alibi. But hey, in the meantime, in between time, you guys want your daily dose?
Sure.
You don't have a choice. Hit me with my theme music. Let's go.
Our leading story, breaking news,
across the wire,
leading story.
top story, just in.
In today's headlines,
This just in.
Breaking news.
All right, everybody. Today is a terrific Tuesday. It is April the 14th. This is a part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Ready for the news.
Just real fast first. I'm not plugging this, but I had this morning.
Oh.
Not bad. I'm a little concerned. I bought this when I was at the grocery store yesterday. It's 20 grams of fiber. No, 20 grams of protein, 10 grams of fiber. Pray for me.
I want my cut of whatever's going on here. You had Gold Belly yesterday where you had an ad read.
L&B Spumoni Gardens.
Yeah, it was
correct.
an ad read
Look.
thing. You just pulled out it was the Truman Show.
Here's the thing. I'm watching.
Here's the coffee that I
am
drinking.
watching the Influencer Olympics right now, aka Coachella, and your girl wants to go on a brand trip.
I
want to go on brands. Holler at your girl.
Yeah.
I saw a great tweet. I think it was from our buddy Michael, who said something like, if you've ever wanted to come to Vegas and meet a nice girl, you should come to Vegas now, immediately, because all the hoes are at Coachella. Which I thought was great.
That's hilarious.
That was good. Come
any
on.
earnings, Mr. Bat?
I think
more banks. I mean, you had some banks yesterday.
Yes.
Citigroup, last time I looked unchanged. JP Morgan looked like it was down 2. Wells Fargo looked like it was down 2. Subject to change. I haven't looked at them in the last 15 minutes. Johnson & Johnson, not a bank, but unchanged. Morgan Stanley, PNC, and Bank of America. We're all waiting for Netflix later in this
Thursday. Yes.
Yeah, that's.
But how about this? If you've ever been tempted to sell in May and go away, the coming year is the only one of the next 4 where stock investors should seriously consider. I guess it's the seasonal pattern where stocks perform poorly between May Day and Halloween, aka the summer months, and then the stocks perform better between Halloween and May Day, the so-called winter months. But when we get into this part of an election cycle, it's normally this second year of the 4-year cycle where this pattern really lines up. Again, of course, take everything with a grain of salt, but
is the moon also in or is it Venus
Mercury Mercury's
something?
in reggaeton.
Yeah, thank you.
It's in Gatorade.
Yeah.
No, but there is some seasonal patterns. But we have had historically low volume, and we can talk about volatility. What are you guys?
I would more phrase it like, if you were really scared that we were going to crash a month ago, now is your time to get out.
Yeah.
because
Yeah.
you are back to all.
That's what I said. You got to
like,
reset.
yeah, you got to reset. Like this, yeah, I get it. But the context of the market right now, we're 1% from high, 2% from all-time highs.
All-time highs. We're unchanged for the year, maybe up a little bit this morning.
So you got to reset, despite the headlines.
Do you want to know how many people reset?
Right now?
0.
I don't think so.
That's correct. People put on new short positions, but people will not go into their 401ks. Take a look back at what was happening to your 401ks. People will look and just say, it's part of the secret sauce. I'm just going to stay in. They don't leverage.
Yeah, but you can't reset that. It's
you can go to. I agree. You can go.
I've
You
done
can go
that
to.
a handful of times, and
You get destroyed.
Well, it's not even you get destroyed, but it's like not even worth the time because it's so you have 24-hour settlement, and then it's too much, and then you have to allocate it again. There's fees to allocate it. There's fees to close it. There's all these other things. Like it's just not worth.
That's why you have to be a self-directed investor and trade what's in front of you and have what's there.
Yeah.
Yep. I agree.
Yeah. Like this move, you could have theoretically, if you got out like at the beginning of March and then rode this wave down, it probably took you like 3 or 4 days just to get everything like back in place and just figure out how to.
Sure.
You can't.
Agreed.
Well, BlackRock has raised their view on U.S. stocks on belief that the war is over. What? Girl, I didn't get that memo. And profits are up. Asset management giant raised the outlook for U.S. stocks, reasoning that contained impacts from the war in Iran and strong corporate earnings will create a favorable backdrop. Earnings season is just getting underway, but S&P 500 companies are expected to post a collective 12.6% profit increase for the first quarter.
For the umpteenth time, can we all just agree, like Dylan Radigan had said years ago, if the market's going lower that day, they go into this drawer and get the articles. If the market's going higher, they go in this drawer and get the articles. It really just feeds for eyeballs. Nobody does what we do here, and I'm not saying get the market right or get the market wrong, but at least make math model proven by math results to try to benefit from a market move that you think is going to happen. Whether you're right or wrong is a 50-50 shot on direction. I don't know if anybody else does. These articles and everything else, it's all background noise. You got to throw it away. I can't tell you the amount of emails I was getting from people about all of a sudden everybody, now you're an economist. Now you're a general. Now you're a politician. We're all.
I'm Barbie.
Right, I'm Barbie. Exactly. You just got to trade and do the best you can.
Is the dollar doing anything? Bonds this morning?
The dollar has been weak.
Okay.
It has reversed basically all of its rally that it had through March, so it's back to near the lows here.
Prior to the war, it caught itself a little bit of a bid and exactly.
And bonds have been nutty. I mean, they haven't gone anywhere because they've been in the 113 to 114 handle, but they move like in like a second, like a blink of the eye. It goes from 113 to 114. A lot of volatility there in terms of like the magnitude of the move. It's been a little crazy there. Gold and silver are both up as well, presumably on the weaker dollar and lower rates slightly.
In a just amusing headline, and a major investor in President Trump's World Liberty financial crypto venture has claimed that the firm secretly implemented a tool to unilaterally freeze and restrict private holdings of the WLFI token. I have to say he did not provide any proof that this was happening, but it is a wild headline. In posts to X on Sunday, the crypto entrepreneur said that World Liberty had embedded what he described as a backdoor blacklisting function in blockchain-based contracts used for the tokens. Wanted to just get into crypto overall, but sinister if true.
I mean, is this shocking to anybody?
No, come on.
This was a money grab. I mean, you gotta
What's Bitcoin doing though now?
74.5. It traded up to 75,000 on the futures. This is the high end of the range for Bitcoin since, well, not the beginning of the year, say February. Beginning of the year was closer to 90.
Oh, wow.
Bitcoin, unlike the market, unlike just about everything else, oil is obviously higher than it was to start the year. But Bitcoin is one that has not regained its old highs from the beginning of the year.
Yep.
Okay.
Super strong.
Yeah, same thing with with Ethereum. It's at the high end of its range since February, not anywhere near the beginning of the year. It was in the 3 handle. Remember, it's 2,300 right now. It was 3,000 and change at the beginning of the year.
What about Coinbase and IBIT?
Coinbase is dead in the water, although it is up $4 today. Since we're going back to about February or so, it's about $20 off of its February highs, about $50 off of its end of the year highs, which closed on its lows, meaning that it was going down October, November, and December.
Okay.
Put up a couple bucks pre-market.
What is
Hood?
Yes, Hood is up a couple of bucks. Yeah, they've got definitely a little bit of a crypto aspect to them. 74 up around $2.50 or so. But it too is about where it was in February, but well off of its highs at the beginning of the year, which was over 100, trading 74.
Oracle stock popped nearly 13%, leading a bounce-back rally for software stocks yesterday. The company announced they're expanding their Bloom Energy deal days after receiving $400 million stock warrant. I'm on the Oracle story here. What are you doing in Oracle?
We had some long delta. I closed out the puts there. We did a Jade Lizard, so I have an at-the-money short call spread. Bloom is at 200 this morning.
Yeah,
We're
it
just
soared
off
after hours, yeah.
I have a call ratio spread, the 150, 175. That's going to be painful.
Oh, no.
This morning, that stock has had just an absolute face ripper. Software stocks in general had a squeezy type day.
Yeah, I think CRM
yesterday.
up too.
All of them were.
Yeah.
All of
I
them
mean,
are.
CrowdStrike, you look at some of the cyber stocks, CrowdStrike went from death at 360 to, bullish at 400 here. PanW as well. You had ServiceNow was having a good day.
We hit ServiceNow a little bit.
Adobe was up $14. Like it was it felt a little squeezy. The surprise was that you've had kind of this widening out of semiconductor stocks going to new highs and beyond, and software companies trading like they are going to zero. And so, the thought a lot of people have been kind of trading for this to get back to kind of like a more equal pair, or at least tighten that range. It didn't tighten because the semiconductor stocks were at new highs. So everything has just continued to get wider here. Mm-hmm. Kind of crazy. Mm-hmm. Big moves.
Big, huge moves. Intel stock on a historic 9-day winning streak. Love that for you, Intel. Up 58% over that run. Got added to the government portfolio and said, "See you later, alligator." Shares of the semiconductor company are soaring after a series of announcements and major partnerships from everyone from Google to Elon Musk. Let's talk about Intel.
65 and change here. It's had an unbelievable
Face ripper from
Face
40, low
Face
40s
ripper.
to 65 without a downtick.
unbelievable. Volatility is still super high. You can do whatever you want there. It just you got to be careful because it's the government portfolio. So you have to.
More like lip boo damn as the CEO. No? Okay. That joke was just for me. In other news, Meta this is crazy. Meta's poised to surpass Google in digital ad revenue for the first time. Google, yes, Google owns Google. Like those ads, Meta is going to surpass. Like this seems crazy to me. Why aren't you more excited?
I'm excited. I've been long Meta, and this feels great. I will acknowledge that just about 2 weeks ago, Meta was dead.
Yeah, it
And
was.
Meta was going to zero.
Google
it
too
was just
was kind of dead. Not to the degree of Meta's past.
Yeah,
run,
a year ago, Google was dead. Nobody was going to Google anymore because you were going to use.
No one was going to Google anymore.
Open API, and
Sure.
so it just the pendulum swings sometimes a little too much, and so,
market seems like it's swinging a little bit too much here too with some of these movements that you're getting. I mean, you got Google up $3 and change. You just mentioned Meta a moment ago. You got Meta up $6-7. It's gone from, I don't know, 540 to what'll be 640 in 2 weeks. Seems like
the Instagram owner's global net ad revenues are expected to reach $243.46 billion in 2026, ahead of Google's projected $239 billion. Look, I complain a lot. It is what it is. But I will say Instagram's ads for me are the best. Like, I have bought more stuff off of Instagram because I was like, yes, I do need this t-shirt of a cat lifting weights.
Of course. How'd you know?
It just says all I want to do is lift weights and pet cats.
I've been looking for this thing.
I was like, I need this. Do with that what you will. Texas Attorney General is probing Lululemon over potential forever chemicals in its activewear. Attorney General Ken Paxton has launched an investigation into the athleisure brand over the potential presence of forever chemicals in the activewear. The probe will examine whether Lululemon's contains PFAS, which the health-conscious customers would not expect.
I mean, isn't it all like plastics and oil products? Like,
I'm full of microplastics.
I would think that they're all made the same way pretty much, but yeah, I agree.
Yeah.
Well, no, but if it's like cotton, like that's a natural fiber.
Right.
Like it would be free from those chemicals. Like if it's a natural, especially organic fiber.
But cotton doesn't act like a legging.
Right. No, I know that, sweetie. Right. It's bad for moisture wicking. Yeah.
Lulu stock, as well as I put on a position in Nike, and I would sit there thinking, with the small amount that I've put into putting this position on is just so uselessly used in this sector when there are things that look so interesting to trade. Lulu has not moved. Like, it's right here at 162. And I don't know why you would trade this right now. Go to SMH.
Yeah,
and
I agree with you.
Or like
agree with you.
the Qs. I mean, it's just,
Lulu gets some bad press, don't they? I mean,
sure. Well, they do it. They do it to themselves.
Company too. I wouldn't think that they would get this kind of bad press, but they really do. 162 looks like it's unchanged. Really hasn't caught itself a bit. Although, if you were long it 2 weeks ago, it was trading under 150. So I guess it's caught a little bit of a bid, but it's not. Doesn't get any love, Lulu.
In a wild turn of events, we found out yesterday that United Airlines CEO Scott Kirby raised the potential of merging with American Airlines. Girl, what? Ooh. In a meeting with President Trump in late February. According to two sources, that's how the news broke. United declined to comment, but I don't know how this would have gotten approved. I am a United girly. If you are an American girly, I know you are, Nikki.
No, I'm United.
Are you Delta?
I'm United.
Oh, you're United? Okay.
Yeah.
United
with status.
Yeah.
United up $2.50. I don't know what to.
No, I'm more excited about AAL here. I'm gonna be able to get out of some of this junk that I have on. I have some
up a buck, $12 and change.
I have the 12 strike puts. I was gonna take stock on them. They expire in 3 days.
Hey.
Take those off and run like a thief in the night.
And nothing wrong with that. Nothing wrong with doing that.
Yeah. Airline stocks have been an interesting trade. I mean, they all have very high implied volatility. They've had some two-sided action. Delta already reported earnings. I actually put on a strangle for my Johnny trades yesterday in Delta. UAL, very high volatility, pretty liquid markets. AAL, covered calls. You could do like short puts in smaller sized accounts. And then Boeing's another one that has relatively high implied volatility that's been kind of range bound that I have recently been putting more trades on. It's not something I typically go to, but with the current volatility, it's been interesting.
If you spot a Lucid Gravity SUV blinged out with sensors, it could be a self-driving system developed by Nuro. It could be on the streets of San Francisco. Select Uber employees can now request a ride in a Lucid robo-taxi through the Uber app. It's the latest phase of testing ahead of the planned public launch later this year. Uber also partnering with companies like NVIDIA. So now this is Uber, Lucid, NVIDIA. Boom, boom, boom.
How does Lucid stay around? Like, how do we keep getting...
I mean, their cars are good. They just don't sell a lot of them. Like, you don't hear about them getting into crash. You don't hear about them catching on fire.
It's like saying a restaurant has good food, but like nobody eats there.
Okay.
So it's like, okay, but So, like, does the restaurant stay around?
I mean, they're making cars for love of the game.
Yeah.
No.
I don't know.
I don't know.
I don't know. But now they might get hot.
is
Like
what it
no
comes
one,
down
well,
to.
no one wants to pay for gas now. So maybe a Lucid
Yeah.
makes sense now. I don't know. What's the stock doing?
Yeah. But they don't even make money.
Gas is the
on-
same price it's been for 5 years on average. Let's call it as it is.
No, it's not.
Let's see here.
I mean, if you're going to take in like the statistical highs of the pandemic,
Yeah, you're not inflation adjusting it either.
right? Like you only believe in inflation when it suits you. What's Uber doing?
At basically low, 72. I have a strangle on in there.
Okay.
Leaning a slightly long delta here.
Hey, McDonald's is adding refreshers and crafted sodas to U.S. menus. The additions come about a year after the fast food giant shut down their 5 beverage center Cosmix concept stores. But McDonald's plans to introduce a dirty Dr. Pepper, and a mango pineapple refresher. They also want to launch energy drinks. Expected to go on sale starting in some stores starting in August. What are you doing in Mickey D's?
I actually have traded Mickey D's a couple times, diagonal spreads. I sold some calls against it, which worked out well.
It's gone nowhere quick.
It's gone nowhere.
It's had some good movement, though, for a $300 stock.
Because it used to get pulled into the we're all going to be poor trade.
Yay!
Like when you get the inflation headlines, you get like these bounces in like McDonald's and Pepsi and Coca-Cola because like
Consumer staples.
Yeah, it's like consumer stuff, but it's like low-end consumer stuff. It's like
McDonald's is expensive.
now it is. Now McDonald's, I mean, you can either go to
Expensive,
Small
yeah.
Cheval or McDonald's.
Yeah.
That's the question.
When are McDonald's earnings?
May 7th.
Okay.
May 7th.
So relatively soon.
Yeah.
This is a funny trend. I've seen people do this with their dogs, but I think this is the first time I've seen this level of eliteness in pranks with a wife pranking her husband. Watch this.
Hey, what's up? Oh, really? He's playing Pebble Beach tomorrow? He needs a fourth? A fourth what? To play golf on a beach with pebbles? No, typically he plays like in a park with like grass. Yeah, tomorrow we're going to a kid's birthday party anyway. And then he needs to stop at his mom's because he told her he would fix the roof. I don't think he'll go today because he said he was watching like golf on TV. Yeah. But I'll tell him he was invited though. Like he'll be happy about that part. Hey, what's up? Oh, really?
Oh, that's good. That's evil, actually.
Why do you want to play on a beach with pebbles?
Yeah, that's evil.
He normally plays in the park.
That is evil.
That's rough.
That's funny. He's like, no, we're going to a kid's birthday.
That is not funny.
That's sad. We got to watch our backs at all times.
Yeah, you don't do that.
That's funny. What's coming up next?
That's going against the team. We're going to take a quick 90-second break and come back. Even the S&P's up 18.5. You want to call them mid-range, higher mid-range for the day? For the morning, for the night?
Near
We
the
had a tight
highs,
range
near the
last night,
highs.
30 handles.
I mean, 69.49 was the high. So I guess we're in the middle of higher there.
What he said. We'll be back in 90 seconds. This is Tasty
It's
Live.
been choppy. We got nothing. 30 points.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs, Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, cover calls, iron condors, jade lizards, become a trading mastermind. Get the guide at tastylive.com/guide.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade. Think you know where ball's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want with Tasty Trade.
On Tasty Trade, adjusting your option positions is a right click away. Rolling just got quicker. Switch to Tasty Trade and earn up to $3,000 in commission rebates.
Nicky, we are back, son, and you know what that means. Time for a little bit more Tasty Live with, look back at yesterday. So let's do that. Then we'll get to what's going on right now, and then we'll get to confirm and send. You want to do it?
Sounds amazing.
Let's go.
Almost like we do this every single day.
Sounds like we do it every
Sounds like the routine.
But you do it every single day. Every single day is the same, and every single day it's different.
I will push back on that.
Okay.
Well, no, you said it. You said it right because everything's the same, but it's also different.
That's right.
I will say one of the greatest things about markets is that it is different every single day.
It's like a painting in real time, changing the landscape.
I could not imagine sitting and doing something just tediously every single day, all day, forever.
Well, I have to fix your mistakes every day. I mean, like, that's the only tedious thing I have to do.
Oh my
Let's take a look at yesterday.
Oh, my God.
65 handles to the upside yesterday.
The truth will set you free.
That's right.
Okay?
Yes. Someday.
Yesterday, amazing day. Shockingly amazing day. I mean, Sunday they looked awful. It looked like we were dead. It looked like the war was back on.
We opened down 80-ish handles.
Down 80. It was the low of this.
By the time we got to the show, we were down about 30 handles. By the time we opened, we were down 15, 20 handles. Volatility had contracted, turned red.
Unbelievable. It was unbelievable. I did not have it in my crystal ball that was what was going to happen. But it was a 1% move across the board here. Basically everything you had
on top of a 1% down move from Sunday.
It was like 2% range.
Right.
Huge. Unbelievable. Yes.
That's what you said.
That's what you said.
Yes, God.
Broken records over here, just repeating ourselves. Just an incredible day across the board. Big name tech stocks moving, obviously.
Not really a face ripper. It was just a quiet.
It was the gap and nap. Or it wasn't.
I don't know. It was a gap and nap.
No, it wasn't.
No, it was just a stair step. Good old fashioned stair step higher, as we stair stepped lower too. I mean, the prior weeks.
The climb and
continuation.
The climb and dine.
The climb and dine?
Yeah, I don't know.
Okay,
I'm trying to think of something just
that's
like
rhyming and
climb and then just kind of just chill. I'll think of something.
Okay, good.
Yeah,
good.
But it wasn't the gap and nap.
No, it was not the gap and nap.
We haven't seen one of those in quite some time.
No.
For the Mag 7s, we had some big moves across the board here. Microsoft, I think it was the first time Microsoft has, because we've had some moves in Microsoft specifically, in Meta too, to some extent. where you have kind of the opening, 10, 15 point rally. And then by the end of the day, it's basically unchanged or down $1. Like it has been in that 375-ish to 380 range for quite some time. And it doesn't seem to hold any sort of rallies. All rallies have been sold into in Microsoft. This was the first day I can remember in recent history that Microsoft ended basically at highs, or if not into highs, because we rallied like 20 handles in the last like 8 minutes of the day.
Yes.
So Microsoft, very, very strong. Google as well has had a nice rally back. It's a couple points from all-time highs. Tesla.
To give you an idea, it was 9 cents off its highs, Microsoft.
Microsoft was.
So it closed on its highs.
But it was the first time, even on the ceasefire day, that's the other huge red bar right here.
Yeah, it didn't.
Where we rallied up to, the high was 385 and we closed at 374. Like we rallied, we opened at 284, which was basically the high, and then sold off $10 back down to 175. This was the first time we've got out of that spot.
Rise without size for the market.
Ooh.
It's coming from the peeps in the chat room.
Ooh, that sounds kind of sexual though.
Sounds like my Saturday, but go ahead.
I'm not going to go there. Meta was strong as well. Apple was really the only one that was kind of weak on the session here, but it's been choppy there. Across the board, it was a strong day. Obviously, Mag 7 land and the markets as a whole. As the sector ETFs as a whole, tech obviously leading the way here. Biotechs have been very, very volatile. Financials having a decent day despite the move that you had in Goldman Sachs earlier in the morning. It was down 20 or so after earnings. We had some of them this morning. JP Morgan down $4 and change. Vanetta mentioned BlackRock. That's up 20. I think Wells Fargo had earnings as well. It
did. It was down $2 earlier this morning. I'll look right now.
And then Citigroup is kind of bucking the trend up $2 here. They're very inside the expected move here for the financials. So they've had some deviation between the single names in terms of direction. JP Morgan has been kind of on the like choppier / weekend. You have like Citigroup on the more bullish move. So those have been kind of choppy. Semiconductors as a whole hitting new all-time highs. I mean, just unbelievable moves there. SanDisk is going to be 1,000. I mean, it looks like
that got added into the S&P, right?
NASDAQ.
NASDAQ.
So it's
up another $15.
It's had a 300 point move in the last 2 weeks. Just incredible. Some of the lights, the coherence, Sienna, optical stuff, those are moving. This
is your heat map ETF standing on its head as opposed to looking at it, broad-based or vertical, right? I mean, you're looking at this. Yeah. Utilities were the only ones that were weak, and if you knew what the market did yesterday,
and the consumer staples has been kind of your hiding spot.
Yeah.
You had Costco.
But you would think this would happen on the type of rally that we've had over the last couple of days.
Yes.
There's nothing unusual here.
No, definitely not. To your point, Costco, Walmart were pretty weak yesterday, and some of the like McDonald's, Coca-Cola, stuff like that.
Kind of surprised that energy hung in there. I know it's basically unchanged or up 0.3 when you've got 2% moves in other places. 0.3 doesn't seem like a lot, but that's kind of resilient for energy.
Yeah. It seems like the top.
I think you'll see the opposite today, but we'll see how it goes.
Biggest movers in the market here to the upside. Oracle had a huge move yesterday. You have SanDisk continuing to just fly to new highs here. Cadence is another one in like kind of the tech space there. You had some of the service stocks like ServiceNow is on our list here.
Who did a bullish trade on ServiceNow for our video?
Me multiple times, but you took that idea, so it's fine.
You really are unbelievable. Okay.
So it's a big day for tech in general.
Believe me, I get the emails when I'm wrong, okay?
Yeah.
I mean...
Yeah, I
got an Iron Condor and SPY that's going to lose money.
Put it on the table on Sunday.
Put it on the table?
Yeah, and bought some NASDAQ futures. It scalped a casual 500 points. So it's pretty...
But what about me?
Yeah, where was your trade? To the downside here, A handful of names here. They're not as interesting. Newmont on that list. You got like some of the consumer staples or defensives as we have them labeled. Target was on this list. You had the like dividend paying stocks like AT&T, General Mills is in there. Like it was a pretty bullish day. When you see a list like this on the downside, you're like, wow, this market was probably up at least 1%.
Right.
Because these are the names that you try and hide out in. A lot of these names. And then when you look at the heat map, just to give you an idea, lots of green across the board here. Apple really the only one on the downside of the big names there. You had AMAT as well, but it's had a massive rally. And then the defensive sector, that was kind of where people were getting out of. And utilities a little bit too. So.
Very good. Fair enough. Good job out of you. We're going to take a quick 90-second break. Even the S&Ps haven't gone anywhere since we've been on the show. But let's talk about what they're doing in about 90 seconds.
Yeah, are we going to just chop here now?
Speechless.
That might be I don't know. I talked about this with Jamal. I was like, what do you think the sentiment like in the world outside the non-trading realm would be if we just chopped between like 6,500 and 7,000 for the entire year? We have like a year where the market goes up or down 2%. Like that's the closing mark. What do you think the sentiment is for the non-trading world? Because for us, that's an amazing year. Because you get two-sided action, buy dips, you can sell into highs, you can trade around this position. I'm sure our world would be, the bullish grind higher is good because most people just naturally lean long. But from a trader perspective, if you end the year at basically nowhere, you're going to way outperform, or at least you would expect to.
Yes.
Because you're trading on both sides of the market. But what do you think the world at large, after years and years of 10, 15, 20% up moves, would say about a 2% year? If we're down 2% on the year, what's the sentiment on the street? If we're up 2%, what's the sentiment?
They're going to be really disappointed.
I think so too.
But the numbers have gotten so big in between there, you're going to have the 10%, 15% move lower and higher inside that 2 or 5% move up or down that we end for the year. So I think it's not going to be as loud as I would have expected it to be if you would have asked me this 10 years ago.
Okay.
That makes sense?
Yeah. I think the sentiment would be
complete disappointment.
Complete disappointment / bearish, because and
probably be the most bullish thing for the market if you had that.
Probably be the most bullish thing for the market, and would be the best thing for like a trader trading.
Correct. We'll take a quick 90-second break and come back. We got more Tasty Live after this. Even the S&P is up 14.5.
Crashing.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Nikki, we are back, son, and you know what that means. Time for a little bit more Tasty Live with, confirm and send. But before we do, yes, go ahead.
I was going to say, don't look, and you probably already have seen it, but what do you think the expected move is rest of the day in ES?
Oh, man, I haven't looked.
Okay.
And I will say 31 points.
23.
For
the rest of the day, 0 DT ES. SPX is closer to 31, but it's not open yet. I got people in the chat calling out just like, wow, that stinks.
Yeah, and that was fast.
That was fast.
How it contracted so much. Well, let's take a look at that. Volatility /VX trading around $20.23. You know, that's after all the rolls. You can see here as the chart updates, we are basically at lows.
Unbelievable.
In volatility, it really, really is. VIX, if you're taking a look at that, 1829. We'll see how that opens. It's not open yet. Even the S&P's down, up $15. I almost said down, heaven forbid. NASDAQ up 127. Russell's your strongest of the group, up 19. Look at the Russell here, trying to gain highs on the year as the NASDAQ and trying to do the same. Even the S&Ps are, or at least the market is at highs. Bonds, 114.06. What do you think about bonds? I know they've taken a backseat to the rest of the market.
I don't know what to think there. I have no play on bonds. I
agree with you. We've been buying dips. We haven't been selling rips.
I'm short the Russell because I think rates are going to stay high. I mean, the move in bonds, we've gone nowhere, so it's not saying really anything about changes in rates. Like we haven't moved. Mm-hmm. But I am short the Russell because I just don't see how rates could come down from here.
Bitcoin 74.6, just about 500 points off of their highs last night, up 1.5%. Ethereum doing better than that, up $110. That's almost a 5% move. Oil. Now, I don't think anybody had this in their bingo card too on Sunday night. 91 and change. $90 is the low for the session.
Yeah, but that's so 95 is the front contract, which
almost 96. Yes.
Yeah, which is expiring at the end of this week.
Sure, you can go /CL. That would be the. Let's see. This is
the K contract.
Contract. Thank you.
Yeah, is the front one.
There you go. You can take a look at that.
You can see it on the trade page there. Yeah.
Yes, you could. Yeah, no, I see it right here. I just wanted to show you how much it's down. I just changed the code from M, which we're trading right now. That's why I said 91 and change. Yeah. Here's your K. I put K up there. You didn't have to put the 6. It populates it automatically. But it's down around 3% when you're looking at the oil that we're trading that expires in 30 days. It's only down, not only down, but it's down 1.75%. Let's take a look at gold. Kind of taking a backseat to everything else too, although it's had a nice little rally going sideways the last couple of days. Up $30. Silver making a bigger move up almost 3% or $2.10. Stair-stepping higher to 77 and change. Nat gas can't get out of its own way. It traded into the 5 handle. 5 handle we have not seen in quite some time. Good for the opening of the pool, though, which will be a week from today.
Beautiful. Can't wait.
Tuesday, April 14th. Let's go. Confirm and send, please. One day before tax day. Get your stuff done.
Oh.
I'll read this since it's long and you have a hard time reading. Suppose I want to reduce my Vega exposure by buying a put diagonal spread. Here, this is right in your wheelhouse in SPY. However, the risk on the trade would be near the max loss limit I'm comfortable with on my account of 5 or 6%. So they got about 5 or 6% that they're risking on this trade. Would it make sense for me to purchase a diagonal put spread out of the money and shift the spread down instead of at the money to reduce the max loss on the trade?
I mean, so with
it's a great question.
With the diagonal spread, the debit is the max loss, and it assumes you hold all options to expiration and they expire out of the money. Realistically,
so completely directionally wrong, and
you hold
stay
it
in
for
duration.
60 days.
Yeah.
So it's kind of
or if you're doing it for 2 weeks, you stay in it for 2 weeks, whatever your diagonal time frame is.
Yeah, whatever the duration is. I'm assuming this is like 60-30 or something like that.
Fair enough. 45 days being optimal. Sure.
Yes.
Go right ahead.
So that is the max risk. However, the realistic risk of that trade in the short term, assuming there's not like a huge rally higher or there's going to be extrinsic value on that position. So if it's $1,000 to put on that put diagonal, your risk over the next couple of weeks is probably like $300 to $500, like half of that.
Yeah.
So, there is still risk on the trade, but the max risk is far less realistically than what the debit is, at least in the short term. You also have the short option, which is going to decay is going to decay in your favor against that time decay that you're getting that is hurting you in the longer option. So, yes, that is risk on the table. I think it's hard to look at it and be like, okay, if I lose that, it's too big of a loss because if your directional assumption changes in the next couple weeks and you're out of that trade, your loss is far lesser than that amount. And so I would say stick to the normal or my setup that I like, buying the 40 delta and then selling a 20 delta against it. When you go further out of the money, it's going to be a faster moving trade. So although it's going to be lesser max risk, it's going to move quicker against you because you're further out of the money that is going to decay quicker. So the short answer is I would not worry about it in terms of like that being the max loss because it's very unlikely you're going to hold it for that long.
Very good.
But you can.
Yes.
Is it?
I think it's an appropriate placed size the way you're explaining it. You seem to explain it all. I mean, you seem to understand it all here. I think it's an appropriate size trade regardless of where you go to it, either at the money or a little bit out of the money. It all comes down to delta. I'm going to think in a smaller sized account like this, if a diagonal spread is taking up 5 or 6%, it's definitely a smaller sized account. You probably should go to the out of the money. You need a little bit more convexity to the whole trade than being at the money.
Yeah. Yeah, but a 40 delta long is out of the money. I mean, it's at the money, but it's still out of the money. I mean, I wouldn't go to a 20 delta.
No, 20 delta, 10 delta. Too far.
Because that risk is going to move a lot quicker than the 40 delta, 20 delta, because you're right at the money. So that long option is going to hold some sort of extrinsic value.
That's correct. And if it goes against you, you need to roll down and probably make it into a calendar spread. And then when the market you think reaches its bottom-ish, maybe you have to put on another one to capture that. You might be early. I mean, we all are early. Next one, please.
I'm confused by some of the terminology I've heard on the network, as well as others. What do you mean by orderly selling, a squeeze, and a washout?
I mean, all subjective, just trying to be students of the game and trying to put out content there. I mean, I think we can all agree, you had a 65 handle move yesterday. If you didn't watch the market all day long, you would say, wow, I mean, we probably had a face ripper to the upside. But it really was just an orderly buying, meaning if you put something in on the bid, you probably didn't get filled. You had to be aggressive with your buying because it just stair-stepped higherly. That would be the opposite of orderly selling, orderly buying. A squeeze. You mentioned
FOMO. I called it FOMO.
Or FOMO. How somebody like a Microsoft, up 6% in a day seemed like, it was a kind of a capitulation to the downside, and the move was outside of the expected move for the daily. And you would, you're just surmising and saying, but nobody knows.
Nobody
right?
knows.
You're just saying it. Yeah. And a washout.
Market awareness type thing.
Yeah, exactly. And content, just putting things as you're watching. It's like watching a baseball pitcher. He's striking out everybody, so he really has his stuff today. I don't know. It's easy to say because he's striking out everybody, but you're just adding content to it. So
for sure.
Next one, please. As I understand it, all assets become more correlated during times of a large drop in the market. Does the same hold true if the market is moving higher? Or do assets correlate?
That's a great question. We're going to have 2 studies today on correlation. So some of that will get answered specifically for the downside correlation. It does tend to increase. I would say into upside moves, you do, if it's kind of a stair step upside move, you do tend to get that correlation. But it's not as predictable. When you have these big downside moves, everything moves to the downside. When you have upside moves over a duration, some things are going to go up, some are just going to stay flat. Like there isn't that same level of correlation. But yes, when markets are up 20% or 15%, pretty much anything you throw a dart at is up some sort of number.
Yeah.
It's not like you get a broad-based market rally and half the stocks are down 10%. That's just not how it goes.
Great. Good job. Nothing to add. Next one, please.
What is a put and call ratio and how is it used? How do you use them, Mr. Bat?
Generally speaking, and by generally speaking, I mean, 90-ish% of the time, if I'm doing a put, they're saying, what's the put to call ratio and how is it used?
Oh, I'm sorry. I read that. That was.
So they're asking a lot of times Frankie will come out, volume was.
Put and call ratio.
Yeah. This is not a trade. This is more like a news thing. Yeah. Like Frankie will give it to me a lot of mornings where volume was average, more puts traded to calls by some percentage, and that's I believe that's the question that they're asking. I have no idea how it's used. I mean, some things are good to know. Some things make you money. I guess you could surmise or try to be some content to the market, and if we were lower and more puts traded, you could say that people were aggressively buying puts. But remember, for every sale or for every trade, there has to be a buyer and a seller. Mm-hmm. So it's really hard to figure out or really make anything of it. That's why I look at Ivy Rank, and Ivy Rank's going to tell you. And remember something. Ivy Rank moves when options are bought. That's on both sides, calls and puts.
Yeah, that's volatility is both sides.
Volatility is both sides.
Yes.
Let's take a quick 90-second break and come back. We got more Tasty Live after this. We've got
Action Jive.
We'll be back in 90 seconds. Tasty Live. Gonna go to Florida. I got Rob. Rob in Florida. What's up?
Hello, Tony and Nick. I am a big fan. My wife and I watch you guys for hours and hours every day. You can be very, very proud of your son. He is doing a great job. I really didn't know anything about stock prices or options or anything until I started watching probably 500 hours of Mike and his whiteboard from years and years and years ago and learned all about it. And we've been trading actively since February. and just couldn't be more pleased.
Awesome, man. Thank you so much for the kind words.
Thank
Really
you,
do
Rob.
appreciate it.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Think you know where ball's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want with Tasty Trade.
It's option jive. Nicky, we are back, son, and that's right. It is time for an option jive. Really no movement across the board here from the last time I quoted everything. So we'll just go right to the option jive.
Let's do it.
Risk management tips for uncertain markets. Is this an uncertain market?
Yeah, I would think so.
Okay.
I think this has been the most
We're violently unchanged for the year.
Yes, but this has been the most uncertain people have been about the market.
I tend to agree with you.
In recent
war
history.
going on, yeah. There's not. You don't usually say that.
Yeah.
You know, we got a war going on, and you're trading a market.
Yeah,
I agree with you.
yeah. The comments are very tail.
Yes.
Super bullish, super bearish.
Yes. Agreed. All right,
Let's do it.
Option jive.
So this year so far, the market has experienced unprecedented high volatility. I would call it that. I mean, we've had pretty sustained volatility the entire year. The VIX above 20 for basically the entire year, except for right this moment, which is kind of shocking. And so we've had with more uncertainty likely emerging in the coming weeks or months. Traders need to understand and control some of the most important risks in the market. So we're taking a look at just like SPX and volatility, and giving you a little bit of a breakdown there as the peeps get the slides back up. We'll just wait a second. E-mini's up 17 here. NASDAQ up 130.
Where it's been sitting since we've been on the show, since the
30-point intraday range, including the overnight session.
Yes.
With a 20-point expected move through the rest of the day. It's unbelievable.
Yep.
So the SPX is down around 3.5% at the time of this study making these slides, which it is currently not down about 3.5%. It's basically like at highs, near highs. What are we down? 1%?
Yeah.
From highs?
Yeah.
Definitely some elevated volatility though. Option traders need to pay attention to the following risks. So you have directional risk, correlation risk, buying power and capital risk.
No,
and of course, tail risk.
Down for the year it's unchanged.
It's unchanged on the year, but 3 days ago or in the middle of last week, when they made these slides, we were down a couple percent, which was, we were down like what, 10% from the highs at one point?
We were down to 6,300 or so.
Yeah, and we started at 7,000.
68, close enough. Amongst friends. Yeah. Amongst
When they made these slides, we were in the middle of that range. We've now reversed that middle, and we're now at the top, basically. So a couple of the things that you can look at in the platform here. So your directional risk, each position carries its own directional risk, which is quantifiable by the delta of that position. So a lower delta indicates a lower level of directional risk. You can see the delta on your platform, so you can have two different deltas in there. So we have the normal delta here, which is labeled ETF because you can actually beta weight it to the ETF. So if you have futures positions, it'll give you ETF delta. And then you have the beta weighted delta, which is your beta weighting to SPY. That's the next thing we're going to mention here. So an effective way to measure the whole portfolio's risk is going to be from the beta weighted delta side. We're on the next slide here. If our portfolio exposure is exposed to too many long or short deltas, we may need to make adjustments there. So when you look at the beta weighted column, that'll give you your overall position risk. And we sum it up so you have one number for your total portfolio. You can also look at it from a position perspective, so you can see where you're most heavily weighted towards on the ETF or on the SPY, the market as a whole. You also have correlation risk. So theoretically, a low or non-correlated portfolio can weather through bad markets better since the underlyings don't tend to move in the same direction. We talk about strategy diversification, product diversification. Those all kind of help lower your correlation. So if you have bullish delta in Apple and short delta in NVIDIA, they kind of offset in terms of like your overall risk because they have a high correlation. And so when you do that across 20, 30, 50 positions, it even further, dulls the effect of your directional exposure in the market as a whole. And so here, which we're going to expand on as well in the market measure, we're looking at the correlation to SPY for just a bunch of different names here. So you have airline stocks represented by Love here. You have emerging markets, which are tend to be thought of as a non-correlation to U.S. markets, right? You tend to think they move in different directions. They really don't. Everything kind of moves in that same direction. You have Apple there as kind of your top dog, or at least big, Mag 7 stock. You have energy stocks in here as XLE. You have some of the defensive stuff like Costco in there. So you kind of get an idea of correlations and what, they are across different sectors. And the big takeaway here is they're very highly correlated, despite the traditional thought that, there might not be that high of a correlation here. A lot of things go in the same direction, especially when volatility gets really high. You can see when you have a VIX above 40, everything's kind of moving in that same direction, even something that has that quote unquote non-correlation of like an XLE or a defensive stock. Those are going in the same direction as well. So diversification is a good way to get a little bit of a diversification correlation, but you have to keep in mind that when things get a little crazy, everything is all in one basket.
That is correct. They throw the baby out with the bathwater and so on.
Yes.
But that's opportunity, right? That's what you have to look at it as.
For sure. So your correlation risk, so this is why balancing a portfolio with low or non-correlated assets, such as like a SPY or bonds, is highly recommended. And so also diversifying types of option strategies can be an effective way to further mitigate risk. I think this is the easier one to do as a retail trader versus kind of worrying about correlations like having some SPY and some TLT. If you're in a $25,000 to $50,000 account, I don't think you have the capital to really use that as your diversification. You have to diversify with strategy and position risk. We had that question about like put diagonal spreads. A put diagonal spread in a smaller size account is a really good way to reduce your delta in a non-static delta perspective. Like it gives you a little bit of convexity to it, has some decay that helps in your favor if you're wrong. It has a positive gamma aspect, so it can be a big position. Like you got to kind of diversify with strategy, especially in the small to mid-size accounts. When you get into the big boy accounts, you can start looking at more static delta, bigger buying power positions like a static delta.
Very good.
So buying power and capital risk. So optimizing capital allocation, increasing buying power usage can lead to higher returns under favorable conditions, but also increase the risk of greater losses. So, you keeping your buying power in check in all market conditions is key to longevity and staying around and keeping the lights on. The ideal range for capital allocation in options portfolios between 25 and 50%. This is more applicable to the mid to larger size accounts because you have a little bit more flexibility. Maybe you're in a margin account or a portfolio margin account where you get a little bit of added leverage. But just traditionally, when you're in a smaller size account and you're using 25 to 50% of your capital, the question always becomes like, what do I do with this capital that isn't being used, or I'm losing out on something? That really isn't the case, because at just a normal Reg T leverage of like 4x, if you're using 25% of your capital, you're fully leveraged.
Right.
But it gives you the opportunity to add when opportunities present themselves, which happens during volatile times. But also lets you like hold positions and allow for them to get bigger. When you have 25% of your capital allocated with the VIX at 18 and markets at high, and then the market goes down 5% and the VIX goes to 25 or 30, your allocation isn't 25% anymore, it's 55 or 75%. So it allows you the flexibility to maintain and withstand moves against you as well. So buying power and capital risk. So the buying power of existing positions may increase when you are under pressure. That's another part of this kind of discussion. If the portfolio is over allocated during unfavorable market conditions, meaning like it's something's going against you, you're going to find yourself in a undesired position or a tough spot to be in where, I got to close this position because it's gotten too big. And that is like the worst place to be in.
Agreed.
I want to be bullish, but the position is too big, and so I have to do something. There's no worse spot. Or I want to be bearish, and I have to close it or close part of it because it's gotten too big. You can't do that.
Agreed.
So talking about tail risk. Tail risk is obviously something you have to consider here. So the tail risk is not something that we typically trade for, but you have to incorporate this into your risk tolerance, into how much capital you're using is really the key here. You have to understand that, tail risk is going to happen. You're going to have these huge moves to the upside, huge moves to the downside, and you have to kind of account for that in your trading here. 5% is roughly, the probability of realizing that tail risk. That's what we're looking at here.
I mean, again, this is what option jives are, right? I mean, they talk about things that options are trying to show you, or at least things to take advantage of, and that's what you're looking at here. You're looking at tail risk and position sizing, which they're going to get to right now.
Of course, reducing tail risk, you reduce the size. You can do defined risk trades, so spreading off positions is naturally going to cut your tail risk. And then consider longer duration trades. So, a lot of people ask, this market's really crazy. I don't know if I want the 30-day risk. Go out to 60 days. You still have the exposure to high volatility. You can make the directional assumption or non-directional assumption. That's totally fine too. If you've been trading 1 week options or 1 day options and you're like, this has gotten too much, then go to the 30-day, 45-day options. Like those, there's total flexibility to you across the option chain. You don't have to stick to one thing. So just a couple takeaways. During uncertain market conditions like the one we are in or experiencing now, remember to control for the 4 risks as they are heightened with rising VIX levels. You got direction, correlation, buying power / capital, and tail risk. I think the biggest one is probably your buying power.
Very good. Let's take a quick 90-second break. Let's catch this opening. Do you want to catch this opening? I mean, because we haven't really moved too much. Are you excited for this opening?
Yeah, I'm ready to rock.
Let's take a quick 90-second break and come back. We got more Tasty Live after this.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
In the 20 plus years you and I have been working together, our trading has really evolved.
Yeah, no question.
Completely.
Yeah.
And one of the things is that we're not married to a strategy.
Oh, of course, yeah.
If we can do something better, we will do it better. One of the misconceptions there is about being a professional trader is that we do such complex strategies, and that's just not the case. What we do are simple things very frequently every day. That might be taking 50% profits, that might be rolling a position to a different expiration or a different strike price, that might be selling some premium to improve the cost basis of a losing trade. What I want people to learn is an effective way to approach the financial markets and to use options to their fullest advantage.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Pay for back testing? No. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial in the DTE, and stack the legs. See what survives. Check out Tasty Trade today.
Nikki, we are back, son, and you know what that means. The opening bell is imminent in about a minute and a half here. Even the S&Ps are up $17, where they've been for most of the morning. NASDAQ up 120 and change. Russell up 17 and Dow up 40. Volatility in by 50 cents, but you can see here /VX, which is really what you should be looking at a daily move, and volatility has been steadily falling.
Unbelievable. The volatility move, I think, is probably more unbelievable than the move in equities. Because you expect with volatility high, I know most people expect the tail risk to be to the downside, but it's pricing in upside tail risk as well. So like realizing that huge move to the upside is actually not outside the realm of volatility. It happens with a contraction in volatility. But to see the contraction volatility going to pre-war levels this quickly is pretty awesome. I mean, it's crazy to see. I feel like that I missed that. I thought, and I even got long volatility at the end of last week.
Yes, you did.
Because I thought 20 vol was going to be like kind of our lower end of the range. We could continue to go higher, but I just did not see volatility coming off the board this quickly. That's been the more shocking.
I think volatility stayed elevated longer than we thought, and I think it contracted a lot faster than we thought. But that's usually the pattern, right? I mean, it usually stays elevated a little bit longer than you expected. Now, it stayed elevated for 2 weeks. Now, we had a war. I mean, so there's, I mean, I guess you'd have to look back at, when was the last time you had a war? You could look back at volatility, how things behaved. But it was a really interesting couple of weeks, these last weeks. Yeah. I think right now, I'm starting to, and I have no reason to, just like yesterday. Remember yesterday we spoke, bonds weren't doing anything unusual to stop the market from going higher. Volatility wasn't doing anything to stop the market from going higher. Oil wasn't doing anything to stop the market from going higher. There was nothing there. We both kind of felt like we were at the extended point of view to this up move in the market. You have to have the same kind of feeling, I think, today, and that's why I say sell both sides and let the market kind of beat you. But even the S&Ps are up 18, NASDAQ up 141, Russell up 19. The Dow just turned red for a second. It's unchanged right now. Volatility down by 46 cents. Bonds are up one tick. Bitcoin hanging out at 74,700. Ethereum hanging out at almost 2,400, which it ticked just a moment ago. That's a 5% move. Oil down $1.85. We are on the M futures. If you go back here and look at the futures that are going to expire on Friday, I think everybody's pretty much out of these by now. In fact, let's take a look at what the volume is. You're looking at 67,000 contracts in / CLM. And you're going to get a lot of rolls too, so you're going to get a little bit more of inflated on K. But let's take a look at that / CLK. K6, there we go. 91,000. You actually have a lot more trading in the front month. I think that has to do with the rolls that I just mentioned a moment ago. Gold up $37. Silver having a bigger move to the upside, up 2 1/4. Let's take a look at what some of those movers are. You click on net change. We'll go to the Buckers. MSCI, haven't traded that. Don't know what it is, but it's a $500 stock. Wells Fargo for earnings was down 2 earlier. It's down 3 and change. CME Group with a rare downtick, down $3. JP Morgan for earnings down around $2. That's where it was earlier in the day. It had earnings. Johnson & Johnson, I just saw up here a moment ago. It's down $2.70 from earnings. Also, the rest of the group, Intel with a rare down day, down $1.25 right now. Let's see what the upside looks like. Tesla up $7. That's the first time Tesla's kind of caught itself a bid here of any extension over the last 3 days or so, going from around 240 to 260. Ivy rank relatively low in there. What is that?
I closed out of a short put in Microsoft. I had the 350s, took like $2 out of that, and then Apple I put in a close for the strangle that we did like middle of last week. We started the day, it was marked at like 575, and I put in a 555 order just to like let it sit, and I was not expecting to get filled right now. Like volatility is dead.
Volatility
is dead. Like that moved 20 cents in 3 minutes. I mean, and I was the 55 was beyond the bid-ask spread range. Like it was an out.
You put it in at your price and you got filled surprisingly quicker than you would have thought.
Yes.
Understood. That's a good thing though, right?
Yeah. I mean, yeah.
Citigroup for earnings up $3 and change, bucking what JP Morgan, Wells Fargo, and Johnson & Johnson. ServiceNow up 2 and change. VRT up $3. That's caught itself a bid. Not really the greatest trading vehicle, but it certainly has caught itself a bid up $2.50 some odd cents. ServiceNow, I mentioned, up $2 and change. IBM up $1 and change. Netflix has earnings later in the week on Thursday. It's up $1.40 and change. Talk to me, Goose.
I'm just taking stuff off. I'm not putting a ton of. I did some. I have a couple of them. I closed half the ServiceNow, all diagonal spreads. I mean, those were $2, $2.95 to $4.60 in 4 days. I mean, like we did those middle of last week.
It's a beautiful thing, right?
Yeah.
Okay. We'll push those through for me. You did. ServiceNow, Apple, and Microsoft. You did. Beautiful.
I mean, some of these moves are just crazy.
Some of these moves are crazy. You are correct. But so far, so good.
Yeah. I was trying to close a Disney put too.
What are you trying to close?
On Disney.
Oof. How is Disney? I haven't traded that in forever. Disney up 68 cents, 101 change, almost 102. Ivy rank is 64. It must have earnings looming. It does, May 6th.
Yeah, so I just closed out of that put. I'll push that through momentarily.
Okie dokie. Even the S&P's of 25. All quiet.
Unbelievable.
It really is unbelievable.
69.50 and we just chop here. Is that the MO?
I guess.
Is there a JP Morgan collar? Here. Is this a collar strike?
Should we put that to bed too? I mean, I don't know. I
think because they rolled it, and I think the high
we're 69.50. I mean, we're a skosh, as Mr. Tim Knight, the bear, would say, from 7,000.
Yeah, it's unbelievable.
I mean, the market always surprises me. Does it ever surprise you? I mean, like, everything is in reach these days.
Yeah.
It really is crazy.
Yeah, it really is nuts. I got to do something in Hood too.
I mean, look at this.
Yeah.
I mean, I got us back to, 6,800 or something like that.
Don't even.
No. Like, I could understand us getting back to 6,800 and change, or 6,800, but 69.50 did not have that. Not this quick in my bingo card. No way.
I sold some calls against Robinhood. I'm long stock.
Okay, you probably should. Let's see what
stock
Hood
is up
doing.
$4. So
Hood up $4 and change. Big move there. It doesn't tell you the whole story though. Hood's kind of been on its butt, right?
Yes, for sure. I mean, it's the one day.
I closed my SPX trade that I did about 2 weeks ago for about a $2.50 profit.
I like it.
Don't have too much else to do at this point. Speak to me, Goose. I know I'm looking around for things to do.
I
got to
close these.
Amazon up $6 and change. I put on a Delta neutral trade there. It's basically unchanged.
Yeah.
I did a bullish trade in GM. It's up $1.50 or so. But again, just like I said on the show, I did both sides. I did more of a Jade Lizard.
I got it. Amazon's up 6 now.
Amazon's up 6.25. Yeah. MU, I did a trade in there. I'm basically unchanged, maybe down a couple of pennies. Nike, tried to buy that after the dip lower. It hasn't moved anywhere. I think I'm down small in there. Palantir, I had some long delta in, but again, sold both sides. Just to give you an idea, I did a Jade Lizard in there. I sold the 110, 115. Oh, no, I'm so sorry. I didn't do a Jade Lizard in there. I did a put ratio spread in there. 115 as my long strike, 110, 105 as my short strikes. It's 136 right now. That's how far Palantir has moved over the last couple of days, going higher. Should have been a little bit more aggressive, but again, trying to take it from a cautious point of view. You don't make as much. And then I did a Iron Condor in SPY at around 250 or so, out at a 15 delta, above the old highs, below the old lows, and I'm out about 50 cents on that. So kind of a mixed bag of tricks on my own two-sided portfolio here, not leaning long enough on option trades today, taking off the trades that were long. General Motors, just to give you an idea, General Motors trading 78. I did a Jade Lizard in there with the 75.80 call spread. So it was an out of the money call spread. It's now $3 in the money. So I need a little bit of even though I have bullish delta in there, I need a little bit of a downturn in General Motors. You can see General Motors here going from around 72-ish and change to around 78. So everybody's got a little bit, in my eyes, a little bit extended. But hey, what are you looking at? What are you looking at to change direction here? I think everything looks good. There's nothing in volatility to tell you that, we're moving in a different direction. Bonds have been 114 to the downside. They've been 114 to the upside. So you got no indicator there. Bitcoin just traded 75,000. Definitely looks like risk off.
Yeah.
Risk on. I don't know. 75,000 is the old high there. Oil down $2 and change. No look there for the bears.
Mm-hmm.
I mean,
I just closed out NVIDIA. I still have some left, but call diagonal spread there that moved like $3 in a week.
That's a good thing. And you closed something in AAL also, right?
Yeah, I closed those short puts because AAL is up 10% today. I have long shares too. I'm going to hold those, but I mean, you're just getting these moves that like I don't want to short them, but I don't want to carry as much long delta after such a move.
I agree with you.
Here. Okay. I think I'm going to take some of my risk off on USO here. I did these.
I think you have to.
You have to
do a little bit of something here, right? I mean, don't you agree?
Totally.
Yeah.
I can get filled here.
If you can get filled here.
I did like a 1x3 crab trade, but USO options are not great. So I did that 1x3.
Up 31.
Yeah, unbelievable. So I was long one of the May 125s, and I sold 3 of the 135s against it in the 3-day options that expire at the end of this week. I did it at 237 and closed it at 695. I did that middle of last week.
In how many days?
I mean, including the weekend, it's been like 3 trading days.
Unbelievable. I mean, it really is unbelievable when you think about it.
Unbelievable.
Didn't expect it. Happy it happened. What are you going to do about it is what you got to look at now, right?
Yeah. I think I got to do something against my SoFi position too.
SoFi position?
And just long shares. I've been trading around this thing too. I just sold calls at the 20 strike for like what did I just get filled there? 67 cents. And the stock's up, 5% today, 84. The numbers are just
unbelievable. I agree.
Microsoft having a huge bounce back here. Like I had this silly butterfly with Mikey that we did last week couple weeks ago, 370, 380, 390, and it's now blown through that in 2 sessions. It was a short term, like we were just taking a shot to the upside. We did it at like $1 or something. It was a cheapy just shot. And you're just getting moves that are way past what I would have expected here.
Way past humanly possible.
I mean, it's a good day.
So far.
Yeah.
So far. Subject to change.
Yes, subject to change for sure.
Are you ready to take a quick 90-second break here?
Oh, I got to do something in BE too.
Even the S&P's up 35. BE,
this one, it makes me sick because I know as soon as I do this.
BE up $25.
I sold the
150% move.
I have the 150, 175 call ratio. So my break even is up at 200 where we're at right now in one session. I sold the 150 puts because I already have the naked risk on the upside, so it doesn't use additional buying power. But I've seen this story play out, and it'll be at 150 in a week, and I will be mad that I did this, but I'm being mechanical.
And so you should be. Let's take a quick
SanDisk down 33.
What is?
SanDisk.
That's a little weird. SNDK.
Yeah.
Guess they don't have to buy that anymore for the. You told me it was going to 1,000. I had my 1,000.
It probably got 1,000 today. Did it? What was the high of the session?
It got as high
965.
as 965. Yes.
Yeah.
Yes.
Do you play for that butterfly?
What do you mean? Oh, the 1,000 butterfly.
Yeah. You do let me see.
Earnings April 30th.
No, just for the end of this week.
No, I know. You want to go into the 3-day options. You got a $76 expected move, which does get you there, the upside. I'd rather do it now with the stock down. But what do you think about the overall market? I mean, if you're more neutral-ish, I don't know. I'm
going to get...
Anything's possible these days. Right?
Yeah. I'm going to try and get filled on this.
Do it.
For $1.80.
Beautiful.
So $9.75... 1,000, 1,025. Right at the upside expected move here.
I love it.
I can't believe we're here. We're going to be 7,000.
Yeah, put your 7,000 caps on. A friend of mine said, Aaron said 7,000 by last Friday. I mentioned it
by lunch.
I mentioned it to Chris, who's coming up next. We might get it by this Friday. We might get it today. We'll take a quick 90-second break and come back. Let me explain. He got some explaining to do with Chris right after this. Let's Tasty Live.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Wolf! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Dr. Jim Schultz, Central Michigan University. Number 51, because trading the Tasty Trade way, that is our minimum probability profit.
Kai Zan, University of North Carolina, Chapel Hill. Number 16, because 16 is one standard deviation on one side.
Brittany Sherrick, Bradley University. Number 15, because I like to carry a positive theta of 15 to make $15 a day. Whoop, whoop.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays to see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
Looking for market insights you can count on? Check out Option Trades Today, your go-to podcast for timely trading analysis and strategies. New episodes drop every Tuesday and Thursday at noon. Available on YouTube, Tasty Live, or wherever you listen to podcasts. Don't miss out on the trades that matter. Stick with the bat, stay ahead of the market. Watch Option Trades Today.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80-plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
That's right, son. That music can mean only one thing. It's time for Let Me Explain with Chris. Chris, explain to me what's going on.
Humidity's dropping, but we're probably going to get rain here later today.
Oh, come on. We got rain all week anyway. It's been...
There we go. Yes, give the man a hand.
That's pretty good. That was pretty good.
Mm-hmm. Is that the best
I'm
you
trying
got?
to distract. Yeah, I mean, I stayed up last night to watch the Mets-Dodgers game. The Mets are in LA, and they haven't scored a run in like 28 innings now.
That sounds bad.
Sound like a man in denial about a lot of things.
Tony, I just don't know where to go from here.
Akio, just know that you're always welcome back.
That's right. You're always welcome back to the trading side, to the not the macro side, just the trading
macro
side. Buy low, sell high.
Yeah.
Strategy, duration over direction.
Duration over directions work for the most part, although the short iron condors, I'm sitting in an ES, which are short strikes at 7,100 or so on the upside. Getting a little hot under the collar here.
I asked you a week and a half ago, 68.50 or 66.50. You said 66.50 immediately. We're 60.
Wrong. I was wrong.
We're 69.50. I jokingly said what my buddy Aaron said to me, 7,000 by Friday. You didn't answer.
Nobody had this in their book. Let's be honest. I think it was a hard trade to say back to all-time highs in the middle of the kerfuffle that we have going on. But I mean the move in volatility has been insane. It doesn't seem like anything has changed other than asset prices.
That's probably about right. But I mean, I think, coming into the start of the week, we had all this, bad news. On first call on Sunday, Ilya and I were talking about this whole escalation to de-escalate Trump's conditional re-engagement, type of negotiation style that he's done on so many issues. And so it wouldn't be surprising if this week or even yesterday we would get a headline that we've returned to the negotiating table. So that's kind of where we're heading right now. The market's treating this as we just got to stitch up some details.
Yes.
And ultimately, the Iran war impact in the short term is running out of steam. So S&P 500, 69.60, we'll call it right now. That's beautiful. It's also right where the inverse head and shoulders measured target we've had outlined on the charts for the past week and a half would arrive to. So for technical traders,
so how are you playing that? That's an interesting. So you've been waiting for this.
This is the higher end of the range.
It probably came a lot sooner than you expected. Fair. Who knows?
It did. Yes, it did. It did, and that makes me question some things. Also, if this is a recovery rally, then it's going to be more V-shaped than anything else. Your sustainable and durable bottoms typically, they take a little bit of time to get carved out, but 7 days in a row, up more than 7% of the S&P 500 is a rare occurrence. Since 1950, since that occurred over 90% of the time, that has led to gains of at least 10% or more in the S&P 500 6 months later. So I don't want to dismiss the fact that this is a bullish setup here, but my plan was, should we reach the inverse head and shoulders target, which is where we are today, probably means we're getting to the end of the rope in terms of this bullish catalyst. So thinking about looking at some short call spreads up here. Okay. I need to find the right duration, the right price. I want to be able to ride out whatever headline that we have coming the next few days. There are some good things and the bad things about this market rebound. The good news, of course, is who's leading it. Telecom, that's great. Semiconductors, awesome. Take a look over what's happening with the Dow Jones Transports DJT, the OG DJT, not the new one. That's at highs. And so just from pure economic cycle theory, Tony, I want to keep it macro for a second.
Sure.
But when the growth stuff is sitting at highs and volatility is coming in, that's not an environment to exactly be pushing your bearish bets. And that's what gives me pause right now, because the cycle rotation at the top line level is still incredibly growthy. And that was one of the few things, Nick, and I know you and I spoke about this on last call a few times. Telecom held up the entire war. And it was a leadership group. And industrials were a leadership group. And all these leadership groups are back being leadership groups again. So that is the positive here. The one downside to this, though, if there is a problem, the breadth could be better. It's improved for sure. The number of
piling
stocks
into the same things that have worked. Semiconductors, big tech. I mean, that's the pile-on. Feels a little FOMO-y.
It does feel FOMO-y, and that's ultimately, Tony, I don't think that's a surprise, right? The winners held up better than everyone else, and then they stayed winners on the other side of whatever issue was caused. I'm curious to see how a name like IGV responds down here, because while the software is obviously under a great deal of pressure, and this Claude Mythos system that's making its rounds around right now is feels almost like the narrative doom keystone. Like, this is the Terminator headline that people have been worried about, and the market's not even responding to it that negatively. Maybe we're at a point of exhaustion down here because we're not cracking into new lows despite seeing new lows formed in recent sessions. Either way, though, guys, it's a market where if you've been a bear or you have not been bullish, it has been incredibly difficult to watch from the sidelines. So the direction of neutrality served me really well through March. Thus far in April, it's testing my patience. And, been wrong before. Some reason chose the Mets over the Yankees as a young lad. That was a lifelong mistake.
It's like, what do you do now, though? If you were bearish the whole time, do you add to it or do you just hold like?
Oh gosh,
it's a hard. You've got volatility contracting, so we kind of talked about this over the last couple of weeks of just the move to the downside was a tough move and it was painful, but it wasn't like doomsday move, and volatility remained high throughout it. So if you were at any point buying puts or doing anything to that nature to the downside after about the first week of the downside move, even though you got 200 or 300 handles in the E-minis, you probably got vaporized on those because volatility was so high. Like it almost put a floor. If you were buying puts, you had to be doing them on a 1 day or 1 week time frame. And if you were doing 30-day puts, even though you were at the money by the time they got to expiration, you weren't making money because volatility when you were buying them was at 30 and then it went down to 25. So you like that. You
literally was Ilya's problem last week when he was on vacation. So this isn't a theoretical here. He was getting close to the end of his expiration window. He was looking at the put price. He's like, these are just far too expensive. Let me hold these for a little bit longer. The market ripped, vol collapsed. He had a really nice winner on his hands. It became a much smaller winner. And now it's like, well, I was looking at the 6,300 strikes. Like, do I really want to go out that far now?
I think that's the problem with, and markets are so fast now, but the news, like everybody sees the headline and like the people in the chat, everybody bearish, call me an idiot, blah, 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 blah. It's so hard to trade the downside unless you're doing it short term.
Yes,
I agree.
Because volatility prices it in so quick. Like everybody,
this has been a 5-minute market, right?
So it has been a 5-minute market. I will give you that. That is fair.
Yes. Everybody is looking at the same news headline of bombs and oil and all this stuff, and it gets priced in instantly.
Right.
It gets priced in instantly. The stuff that doesn't get priced in is the opposite side of that. And that's why you see it as like sort of convexity where nothing has changed, but the market has ripped higher at least to my perspective, just because everybody was so bearish, just because everybody's trying to hedge. That's it.
Yeah, and we were getting in the AAII survey, which I've touted before. It has reached a point where when you look at the net 3-month change, it swung from bullish to bearish in excess of 20 points, which we've used historically here on the show. September 23, October 23, those lows were called using this exact metric, in part because when people get too bid up too quickly, then there's no one left to sell. But what's driving this market higher here, and I want to give credit where it's due, Frankie has been calling out the fact that CTAs, by nature of how they position themselves throughout the month of March and the market rebound that we saw coming over recent days, they were going to be over $30 billion of forced short covering in a slew of products, SPX, SPY, VO, IVV. And it coming into this week, the argument was that maybe there's a cushion under the market here. So it feels like people are covering right now. This does not feel like there's enough ammunition in the tank to produce a rally to like 71 or 7,200 from that perspective. I keep going back to the positioning in the futures market, Tony. Mm-hmm. In May 2023, right, there were 430,000, a little bit more than that, 430,000 net short contracts held by speculators. This week, there's about 44,000. It's a tenth of the size.
Yeah.
So, that's summer 2023. You get that the government funding deal, the shorts get vaporized. The market goes from like 4,400 up to 4,800 in the span of a few weeks because all these positions they have to flip. There's not that kind of fuel in the tank right now. So this has been a really nice rally driven by short-term traders who were short. I guess I've been wrong. I should have been long a few days ago, obviously, in hindsight. The directional neutral stuff is working-ish, but it's hot under the collar. If I'm up here near the top side of the range, I'm looking to sell, not chase, even though chasing has worked the past 2 or 3 sessions.
For sure. And I am leaning short here, much to my dismay, in static delta, but I have long delta in single name equities, which I think is like really the only way you can trade downside is you have to be statically short delta. Or like you do something with some sort of gamma, like a put diagonal or something like that. The selling calls just does not give you the juice here. But that's my prerogative. But to your point about the CTA is buying, because we always hear, retail is the dumb money, CTA, like we're always looking at kind of those reports. Are they going to be the bag holders now? Like, because they're buying right here this whole week into the highs? Because we had the reports that retail was kind of missing out on the early part of the rally because they weren't net buyers. And there's been all sorts of like back and forth of retail's not, buying calls anymore. They're doing covered calls or like whatever. So now, so if we flip the script, is retail now the smart money? The CTAs are the ones that are always late to the party here a week after we have our 10% face ripper to the upside?
Look, given what information is publicly available, and this is sourced from Bloomberg, CNBC, FT, and these are all predicated on reports from JP Morgan, Goldman Sachs, Citadel. Retail positioning, yes, they become less net buyers, but it's been away from single stock names and moving more into index exposure.
Sure.
And so you're seeing names like, Micron, Broadcom, SanDisk actually stay lower on the charts, and names like SPX and VOO and triple Qs, like those are near the top of the list for traders. So given what we're seeing there in that regard, it's not just feeling like, but it's looking like in the numbers that are publicly available, there's buyer's fatigue right now in the market. And so people, instead of trying to time the swings in single stock names with idiosyncratic risk, they shifted over into just, I'm going to buy the index and sit back for a little while. And to their credit, the retail crowd's been right. If in the month of March, if at any point in time, Tony, in the month of March, if I said, you know what, I have no idea what's going on, I'm just going to, instead of buying and selling ES call spreads or put spreads or iron condors, I'm just going to buy SPY and check back in a month. I'd be doing fine.
Yeah.
Right. And last April, I remember you, me, and Tom having this back and forth. Was the retail crowd right? And the retail was right to change their behavior ahead of time. Yeah. And sure enough, you get to June and you look at the retail versus the institutional spread, and retail is up and institutional is flat for the year. So I don't think retail is the dumb money. I abhor that term. Retail is the smart money. Retail is the money, Tony.
I didn't think I'd hear that in my lifetime, but sure.
I mean, I think the playing field has just been leveled over the last 5 years.
The marginal cost of information and knowledge is zero. Right now.
And the speed of it.
That's not your edge.
And how you can act on it.
Frictionless.
I can act way faster than some hedge fund manager that has to rebalance every quarter. They're forced to buy this right now. That's exactly what's happening.
Well, they were forced to sell too, right? I mean, I guess. I mean, everybody was talking about how they were deleveraging. I mean, it really is.
Yeah, but they weren't deleveraging at the top. They were
they were deleveraging after a 7, 8, 10%.
Because you're below the 200-day moving average.
And that's what happened last year.
Blah, blah, blah.
Yes.
But that's what happened last year, right? Isn't that's such an important part of the market structure again? And check the tapes from all of last year. I was out here arguing, folks, the institutions were selling the lows in April.
Yeah.
They are now behind. If you are a fund manager, right? Time immemorial. If the market's down and you're losing money, you get a pass. If the market's up and you're losing money, you get fired.
Yeah.
So they had this incentive structure for most of last year then to chase and keep the market elevated and paint the tape. And I'm curious to see how the positioning changed for these hedge funds and these institutions through late March and early April, because if it's a deja vu like last year where retail held firm, they moved away from single stocks but moved into the indexes while institutions sold everything, all of a sudden we have a replay potentially where
the squeeze higher,
right?
Because you got to catch up.
Squeeze higher. You got to have this catch-up trade, and now we're in the seasonally bullish window. It's April, May, June, buy through July, and we have volatility coming in. And oh my God, I sold out at the end of March, early April, and now I've got to catch. And so it just feels like 2025 again. Even if we have, the inflation concerns and the Fed not being able to cut rates for the foreseeable future in our back pocket, we have a very similar psychological setup at hand. And Tony, the psychology of the market matters more than whatever the Fed's doing.
Oof, that's a hard one for me to swallow too, but okay.
Because we spent so many years talking about the Fed, being the arbiter of truth for markets, of what direction they're going to. And we haven't seen that in the bond market. I mean, the bonds have stayed between 113 and 114. They're arguably at the highs that we've seen in terms of rates, at the highs that we've seen in quite some time. It's interesting that we've flipped that narrative that now rates don't matter. Now it's just momentum again.
I'm going to say rates don't matter. I'm going to take a page out of Tony's book. I remember when I was just a blossoming tasty trader. It's 2021. You guys have just come into the fold with IG, so I'm listening to you guys more and more because I had this bad experience with Tom actually in the 2010s where I said hi to him at a money show and he ignored me. He's like, "You're with the enemy. Go away."
Oh no!
I digress. I was like the guy in the beret. So in 2021, when we first joined the company, I remember listening to you and Tom have a discussion about what the Fed was going to do, and you guys were like, "Who cares what the Fed says they're going to do? Just pay attention to the 2-year yield."
Right.
And I think an environment like this, where we think about the misinformation, the propaganda, the confusing signals, the 5-minute macro of it all. I'm going to listen to my elders. Follow the 2-year yield. If you want to know what the Fed's going to do, the 2-year yield is going to tell you it. Everything else is noise around it.
Agreed, but it's a known, right? I mean, does it really matter?
But everything is a known in an environment where the marginal cost of knowledge or information is zero, and there's effectively frictionless trading. So that's not where you get your edge these days. I think that's gone out the window, personally.
All right. I'm gonna let you go. I'm gonna take the high road and just say E-mini S&P's up 36, flirting with 69.60.
We got our moving gold though, Chris. We're back.
Gold up $50,
Gold looks back.
48.18.
Silver looks back.
Silver looks back. Crypto looks back. Sort of. Not as much.
You know what? Better to be late than never, Nick.
That's true.
Better to be late than never. I will give you that. We're going to take a quick 90-second break and come back. We got more Tasty Live with a market measure right after this. So let's Tasty Live.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, cover calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Pay for backtesting? Nah. Trade that capital instead. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Check out Tasty Trade.
Nikki, we are back, son, and so is the market with a vengeance. Really, I don't know, 41 handles on the E-mini S&Ps without a downtick
Incredible.
this morning. NASDAQ up by 210, Russell up 24, Dow up 244, volatility in by 50 cents, volatility in 2.5%. I'm rounding up, market up around 5/8, 0.5% to almost 1%, rounding on both of those. Enough for you? What do you think?
I have not been adding long delta here. I'm actually taking off long delta. I'm shocked.
I did too. I'm about as flat as I've ever been.
I am so flat right now. I actually have slightly.
And I have FOMO.
I have slightly short delta. I do have FOMO. I mean, I've been long NASDAQ and selling into Russell and E-minis to a smaller degree over the last 2 weeks or so. And it's been a great trade because the NASDAQ has just been absolutely a rocket ship. But now I'm not long the NASDAQ anymore. So I don't have that pair on. I'm just kind of short delta, and I'm taking off some of the long delta convexity type trades that I had. I had some diagonal spreads in Circle that I closed. I closed NVIDIA. I was long, stock in Robinhood. So I've had some stuff that has just gone to moves that I was not expecting that I'm now selling some short delta into. And so I'm now very, very flat, which typically would feel good into an upside move. When you lean long into the upside move and now you're flat, at 10% higher, you've captured that upside. It feels great, but now I feel the FOMO. I felt FOMO. I felt like the market has been FOMO-y for a couple days now, but now I'm starting to be like, oh God, am I missing the scene that's playing out?
I agree with you. I mean, I agree with you. If I'm putting things into perspective here, if I'm a 10-lot trader on one side of the market, I'm a 2-lot trader with both sides of the market right now. Yeah. Maybe leaning, stupid, silly delta long, like nothing here.
Yeah.
I mean, I've taken out of everything. Now you got E-mini S&Ps up 42.
And look at the move in oil.
Oil is just 88.80 now, under 89, still relatively high. I do not have an oil position. I got out of that the other day too. Yeah. I mean, that one worked out good though because volatility really contracted there. OVX, CGI. You're looking at 74 and change. Remember, this was well over 100. Let's throw out the highs. It traded between 105 and 95 forever. It's down to 74. That was a better trade than the directional trade of the market. It certainly was a lot more capital intensive too.
Yeah, this has been just amazing.
How about let's take it a different direction for a moment. You've got 31 days in May. Do you still put on opening trades in May, or do you go to June? 45 days being optimal.
You have to stay in May. I think you have to stay in May.
I mean, May is going to move a lot quicker than June. You look at some of these puts. These 25 delta puts have gone from $12, $13, $14 when at this time frame down to $5 now with volatility. I don't have the answer, son.
You're supposed to have the answer. I did a Super Bowl in oil futures.
Yes,
I sold the put spread 74.70 to buy a call spread in 99.102. So play back to like 100 here.
Right, you're buying a call spread. That's a bullish trade. Selling a put spread.
I don't know. If we go back to 70 handle oil while this is still going on, you might have to throw every finance textbook out the window.
And some. Yes, I agree with you.
So, I don't know. Unbelievable.
Yes, sir, Senator.
Okay.
All right.
Market measure?
Let's do it, son. Let's do it.
Market storms and portfolio correlations. You might need this the next time we have a market storm because ours is over.
That is fair.
Unbelievable.
That's fair.
All right. So we're talking about correlations here. So There's a common saying in financial markets that during crashes, all correlations go to 1. This implies that diversification benefits diminish precisely when we need them the most. You expect correlations to help you when things get crazy. They tend to not so much because of the correlations getting higher as kind of volatility increases. But what does the actual data tell us? So we're going to be looking at correlations during market volatility here is really what we're going to be looking at. So when we look at long-term data, and we're looking at Apple and SPY here, they typically show a correlation of 0.51, which is moderate positive relationship. As you get closer to 1, they move in tandem 1-to-1, basically in the same direction. Of course, this doesn't incorporate beta, which tells you the magnitude of the move. So a higher beta, like a beta of 2, means that asset moves twice as much as whatever the other asset is. But that you have to take correlation and beta together to kind of, it's not perfect. A correlation, you would need correlation of 1. Yep. Correlation of 1 and beta of whatever number would tell you, every single time they do this. That is not the case because correlations are very rarely 1. After a market pullback begins, and we're looking in March, these two stocks showed a stronger correlation during that move. So typically when you have big downside moves, correlations get get stronger relative to when you have two-sided or choppy up markets in the market as a whole. And one practical approach to measuring market stress is examining VIX levels. So if our hypothesis is correct, we should observe stronger correlations between assets like Apple and SPY during periods of elevated VIX. So when volatility increases, does correlation increase? That's kind of the question we're going to answer here.
Love to know the answer. Even the S&P is flirting with up 50.
The data confirms our hypothesis. We clearly see correlation spike between SPY and Apple during major market downturns over the past 2 decades. This chart pattern shows distinct periods where correlation strengthens precisely during these market events. You can see here in terms of correlation between Apple and SPY, when you have big moves in volatility, that correlation gets closer to 1. When you have these little spikes, you have short-term moves in the same direction. The correlation increases for a short period of time. It further emphasizes that, when there is volatility, everything goes kind of in the same direction and even into the upside. It doesn't necessarily mean down. Vol up, correlations going to 1 does not mean everything's going down. Like we have a period of time right now where volatility has been high into this move and everything is going up. They're going in the same direction. SPY in the market.
Yes.
It doesn't necessarily mean down. Is the
correct.
Key. And we talked about that a little bit with just how volatility is priced. It prices both tails. Puts, usually you see the greatest increase, but it prices both of them.
That is correct. It's buyers of options.
Yes. So looking at just the numbers themselves, the data reveals a systemic pattern. This progressive increase confirms that asset correlations strengthen as market volatility increases. So we're looking at VIX levels and the relative correlation of Apple and SPY. You can see as you get further up the volatility slope here, the correlations get closer to 1. I mean, 0.8 correlation is about as high as you'll see with 2 distinctly different assets. And I mean distinctly different because we're not talking about like 10-year yields and 2-year yields that are very much of a similar asset. Here, these are distinct assets and they get closer to 1 as volatility increases.
I don't know what to add there. It's correlation, right?
So the question becomes does this apply to other things? So to ensure our findings aren't just limited to tech stocks, which have been kind of the focus in recent years, we're going to look at a diversified basket here. We're going to look at Love, we're going to look at EM, Apple, XLE, and Costco. So you're getting a basket of very much diversified stuff here in this group. And Love would not be my airline of choice.
Even though your aunt works there?
I'm actually flying to Arizona on Southwest because they had like a 1-day sale. And I haven't seen tickets that price for 5 years.
See?
Unbelievable.
It was a good price, right?
It was a really good price. So maybe I'll add them to my search list moving forward. So the pattern holds across sectors. Correlations shift from moderate to strongly positive during high volatility periods. We looked at this during the option jive as well. I think it's important for people to understand that just because there's a lower correlation between these two assets doesn't mean that that is going to stay. Like Love is going to have a lower correlation to the market than Apple does. But when shit hits the fan, it all goes together much stronger. A 0.74 correlation when volatility is high, like at 40% on the 40 VIX or even a 30 VIX, Love it is going to be the same correlation as Apple is to the market, which means that everything's going down. Same thing with emerging markets. When you look at energy and defensive names like a Costco, it's all kind of the same story. When things get crazy, when volatility presents itself, everything starts moving in the same direction. There is no hiding. It's very hard.
Can't hide.
You can't hide from the big moves.
That's correct. That's correct. No hiding from this move either.
No. But volatility is kind of hanging in there.
Yeah, down 46, 2021.
18, though, is just incredible.
Yep.
It's just incredible.
Yep.
Couple takeaways for you. During significant market declines, assets that normally display moderate correlations tend to move in the same direction. Traditional diversification strategies become significantly less effective when market volatility spikes. Risk management during high volatility periods may require reducing overall market exposure rather than relying on diversification. And the other flip side of that is that when volatility is not high, this is the reason why you are less allocated towards positions, because you want to be able to not only withstand the downside move, but be able to take advantage of the opportunities that are present.
And what an opportunity we have today. I just wish I knew how to take advantage of it.
Yeah, what do you do now? I mean, are we going to get like 7,000 this week? We probably are.
You're 30 handles away from it. First of all, I think good no trade on the /ES with the relatively small expected move, which is in even more. ES, what do you think the ES expected move is right now?
For the rest of the day?
Yeah.
10 handles.
18. Don't get crazy. 18 handles on the even S&Ps as they flirt with new highs for the day. Just made it 69.72. NASDAQ up 240. Russell up almost 30, and the Dow up 211. Volatility in by about 50 cents. Bonds up 9. You got volatility contracting, although it hasn't moved too much. It's been perfectly priced with the market rallying here. Bonds up 9, helping the bulls. Bitcoin traded 76,000 on the futures there, just under for the cash. Ethereum traded 2,400 on the futures, just under right now. Oil going lower, helping the market, about $1 off of its lows. Gold catching a little bid here, trading up 55. Silver up 3 and change. You look across the board here, what bucker do you have? You really don't have any. Wells Fargo for those. Listen, I told you that banks were going to come out. You're talking about some of this other risk in the asset classes that banks like to deal in that don't deal with an open market that's disseminated to the world, having some issues there. You'd think that maybe the market wouldn't be doing as good as it is, but Wells Fargo down $6 and change, paying the price. JP Morgan down 2 and change. But across the board here are the stocks that we trade or look at, those NASDAQ type stocks. Tesla up 9 and change. Everything. UNH up around 5 and change. IBM, which was lower this morning, up around 3 and change. UAL up 3 and change. Love, even though you don't want to fly it, up 2.5. So far, it looks like
put on a diagonal spread in SPY.
Put diagonal.
Yeah.
We haven't seen one of those.
We had them to the downside. We had some of them.
You've been doing them a lot more to the upside, right?
Yes. No, I have some short.
Flipping the cards over a little bit here.
No, we're right at 7,000. I mean, are we finally going to break through that? It took us all year. I mean, the all year 7,000 was like the spot to be done.
Yeah. I don't have an opinion. I've been selling both sides and I've been wrong. I've been selling both sides since 68. We've rallied too far, too fast for those trades to be profitable. They're not huge losses, but they are. The narrative was wrong.
Yeah.
Got the narrative wrong.
The volatility contraction helps.
Volatility contraction helps a little bit, but you need a little bit of two-sided action. You need a little bit of a move lower, and then those trades will be profitable, and you can decide what you want to do from there. If you just get a step higher, you're not going to get that. Let's take a quick 90-second break here. We've got our did you do the takeaways? You did the takeaways, right?
Yes.
Yeah. We got our boys from Tasty Trade coming in here. We'll be back in 90 seconds. I'm speechless. We'll be back in 90 seconds. That doesn't happen often. This is Tasty Live.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade. I'm just gonna wait for the stock to dip, then I'm a buyer. Buying into weakness is a phrase used to describe the action of getting long a stock into a down move. It's a contrarian trade. Most people want to buy what's hot, the stuff making huge upside moves, the chart line moving up and to the right. Nobody wants the stock at lows. But it's hard to buy high and sell higher, rather than buy low and sell high. There is a phrase for this. When the time comes to buy, you won't want to.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options, profit, and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Nikki, we are back, son, and you know what that means. Time for a little bit more Tasty Live. That's right, we've got this man.
He's back.
He is back. My man Q, how are you, brother?
Fellas, I am doing very well. Feels very good to be back. I missed you guys.
Oh.
Be honest, you did miss us, didn't you?
Yeah, I did. Yeah, I see Jason on the show. I see Momo on the show.
Everybody's replaceable.
Yes, everybody's
Jason
replaceable.
Said that you were like, hey, that's my gig. You can't be.
I am so not like that. I do think I do a good job, though. I do think I do a good job. So, that's why you guys asked me back, right? But no, I love spreading the love. And Momo needs to come back on because you guys didn't really get to see Momo as a person.
Well,
we'll have to get him back on.
With that tier of ex-trader, if you give him too much slack, things can get real. Like, we have an HR department now, and like we gotta keep things.
That is true.
No,
Momo's good at keeping it kosher, though. He's But yeah, you guys. He's also a little bogged down from tax season. We're almost there, though. I mean, tomorrow's the deadline, so we're almost like out of the weeds of 90+% of the stuff.
And he went over nicely how you've got the tax center and Tasty Trade that you can get a lot of your things that you need either if you do for yourself.
Yeah, tax center is great. Yeah, it's pretty straightforward. Like you just need to pull the documents, and then I like how you mentioned for the international customers as well, like the Excel sheet that we have, because each country has like their own rules and stuff like that. And so I know it's all so confusing. Why can't they just make it easier? Like I love the 1099B for futures because it's so easy to just see. There's one number and then it's 60/40 from there.
Oh, I just saw that was Palantir. I closed out those puts. Unbelievable. The one common denominator for tax season is everybody hates it.
Yeah.
No matter what country you're in, you hate it.
And I wonder, does every country? I mean, this can't be true. Like, not every country has the same deadline. Like not everyone has like April 15th.
We can't even decide when holidays are. You think we're going to get when taxes are? Come on. No way.
But so we're almost there at the end of tax season. I wouldn't say that's like a massive part of our business, but like that's Momo's world, And so and then he takes a week off. Put him
back in his cage afterwards.
Yeah, he takes a week off every year after tax season, so we probably won't see him on the show for a while. Okay. But we have to get him back on for sure. And I like spreading the love. I do think I do a good job though, and so that's why I enjoy coming on. And I think I provide a lot of value to the customers as well, which is what's most important.
Are you like up for like a review or something?
I'm just saying, I'm just trying my best. Always putting championing the client.
Ow, look at that. So this is why I don't go anywhere.
I know.
I can't.
So let's get personal with you then.
Yeah.
Did you go somewhere on vacation? Did you have a good time?
Yes, I had a great time. So I went with my mom to Tuscaloosa, actually. We went there. She went for like an event called Champagne and Shoulder Pads. It was like the
Okay, I am intrigued.
Yeah. I am so because it was like a all women's event just to like tour the stadium, the athletic center, and meet some of the players and stuff like that. Because she's so much more into the Crimson Tide than I am. Like obviously I understand the sport of football better, but she knows about all the players. Like just ever since I went to school there, like she just
that sounds high society.
You
what was that called?
I think you went to Alabama.
Yeah, I went to Alabama. Yeah, the Crimson Tide.
Crimson Tide.
What was that called?
Got it.
Pads and what?
Yeah, champagne and shoulder pads.
Champagne.
I don't know why I had Clemson in my head.
No.
That's hoity-toity right there.
What's that?
No. So hotty-toddy's Ole Miss.
No, hoity-toity, like
I gotcha. Yeah,
uppity, like not everybody gets an invite to that. You got
Clemson
donors list. Like it's hoity-toity.
Yeah, but. She went to this event called Champagne and Shoulder Pads. It was like the sickest thing of all time. She's shown me all these pictures of like, she went to the athletic facility, got to meet a bunch of the players. You have lunch with like the staff and stuff like that. She went on the field and like is running drills on the field.
Wow.
And I'm like, wow, man, this sounds like the sickest thing of all time. And then she just wanted me to go with her. I got to spend some time with my mother, which was super nice as well. And yeah, it was a great trip. I do also have to address one thing because Jason, was talking bad about me when he was on the show the first day. He was saying like, I called the
That's just him trying to get his feet under the
I just got to put some respect on my name because everyone was like fear mongering about like, the market's going to crash because of whatever announcement and like oil, this, that, and the other. And I was like, no, because everyone's saying it's going to crash, that means it's going to go up. And so I was like, Jason, SPOOs are going to be up 140. And then he's like, well, why didn't you put anything on? I didn't put anything on because I already had plenty of long deltas due to the down move. And so I want to make sure the customers understand that I am an active trader and I just need to put some respect on my name. Because I was like, Jason, you can't be set like because I'm not, some talking head, right? I'm really in this. And I'm like, what? You guys aren't talking heads?
We resemble that market.
Yeah.
Whoa. You guys aren't talking heads. No, but you guys are in it though. You guys trade. You guys aren't like, some of the other financial news networks out there that will just talk about
no markets
stuff
in turmoil here.
Don't trade and stuff like that. So I was a little upset that Jason did that, but I'll let it slide. It's fine.
All right.
Very nice. Can you wish my friend Joe Mama happy 70th birthday?
No
Happy birthday,
way.
Joe Mama.
Joe
Yes.
Mama, happy birthday to you. Because we don't really do birthdays like that.
No, we don't do birthdays.
No, we don't really do birthdays, but Joe Mama's special.
And you're all special to me. He has my phone number, so I have to give him a special.
Yeah, I've known
shout-out.
Joe Mama for a long time as well. So shout out to him. Joe Mama, happy birthday.
Shout out.
And he is a sexy mother too. I mean, just remember that. He really is. He really is. Happy 70th, Joe. I hope I look as good as you in 15,
Yeah, he does look
15
really
years when I'm
good,
70.
actually. Yeah.
Yes,
Okay.
yes. Absolutely.
All right.
Are you
let's
ready
get
to
some
get to
here.
business?
Yeah, let's get some business. Top 20 symbols going through the system and their IVR. At number 1, we've got Microsoft with 104, Tesla 12, Nvidia 2, Oracle 59, Amazon 57, Palantir 44, Meta 56, Micron 69, SLV 44, IBIT 32, GLD 46, SNDK 92, SoFi 41, Robinhood 61, BE 62, MSTR 39, Apple 43, Intel 94, Google 53, and AMD 53. I've got a question because every time anyone else comes on the show, they do 20 to 1. I always go 1 to 20. There's a reason behind that though. Because
do share.
Yeah, I go 1 to 20 because typically like the top 5 or the top 10 are usually the same. So then it's like I want to save the more obscure symbols for last.
Yeah, the juicier stuff.
Yeah, leave it up to, because Tesla's like number 1 like 80% of the time or something like that. And then so like I don't want to save it like, oh, the top 1 symbol is Tesla again.
Yeah.
I want to save the things that are changing for later on. I wonder if that's what, people like as
It's
well.
like
but everyone else does it differently. And I'm like, no, you got to go 1 to 20 because 1 to 10 is always this. Like there is a reason.
It's the classic conundrum of, do you eat the tastiest bite first? Or it's like on a cupcake. Do you go like bottom? Do you go top? Do you do the whole thing at once? Do you eat the tastiest bite first or save the tastiest bite for last?
So I have the answer.
You do?
Yes. So as a child, I would save the tastiest bite for last.
Okay.
And,
so that you remember it. And because the
it's trauma. It's a trigger for me. It's a trigger for me. And just before I would get to the tastiest bite, my father would reach over very quickly and fork my tastiest bite and then lick it.
I know this because once upon a time, there was a time, it was a different Tony Batista. This is young, high tea Tony Batista, where a steak would be licked at the dinner table. That one's mine.
Because you would skeeve things.
Yeah. Because
if you're hungry, you'll eat it.
Got to mark your territory.
Yeah.
Or you'll eat a different one.
Yeah.
And so he would
eat your tasty.
So you are a product of how you grow up.
Yeah.
I mean, you can change.
Yeah.
You can change. Yeah. So I now eat the tastiest morsel in the beginning of my meal. And you?
Best bite for last, for sure. I never had those kind of issues though.
and you having
Look at how I turned out.
And you having experienced those issues, how do you do it now? Do you mix it in?
I like to spread.
I like to spread it. I think that's the safe choice. I think if you had the best of both worlds, you could do it that way.
But I will say, I would go the tastiest bite last if I had to choose one.
If your father wasn't in the room.
Yes. Yeah.
Good job out of you, Q. We're gonna take no break.
Thank you for the family counseling as well.
This man needs no break, but we're gonna have a small dee. My man, how are you?
I'm good. I know.
Did you ever have anybody steal the last pork chop or take a lick of your most favorite morsel?
Glad you asked. Whenever we'd go out to eat with my family, and it was me and my sister, and we would get something like burgers and fries, Mama would always be like, "Oh, we'll get fries to share," and that pissed me off to no end.
Just get
and
your own
so
fries.
I would eat all of the fries before ever touching my burger. And that made my sister really upset. So then we started getting 2 fries.
So good.
And then nobody needed that many, but I would still do it. So,
Even in a well-adjusted family like your own, I mean, you went to a Ivy League school, even had a scholarship, I believe, right? Some scholarship? No scholarship?
I thought he was going to say like something like,
still paying.
I would want the Wagyu, and mother would say, no, you must eat.
Mother would lick my
Mother
tartare.
would say you get just the ribeye.
Okay, all right. So families are alike.
Yes, yeah. But
so they solved it by enabling you and getting 2 orders of fries.
I am on that side, though.
That didn't really solve.
We couldn't afford 2 orders of fries, metaphorically speaking. Okay.
Well, yeah, my mother did not want to pay for 2 orders of fries. That's how we got there in the first place. But now I'm adjusting. I'll still reach for fries. Quickly.
Do you go first bite, best bite, or last bite, best bite?
Oof.
What's your play?
I like to identify it early.
Okay.
Identify where the tastiest bite's going to be, and then it's never last. But it's
somewhere in the middle.
It's not first. Yeah.
Okay.
Exactly.
Oh, that's an interesting angle. I like that.
I don't have the
hide it amongst the.
I don't have the restraint to wait all the way until the last. No need.
Yeah.
I like it.
Yeah, that's
Everyone,
fair.
I
That's
like
actually I like that. I like that.
But it's just funny waiting in the wings here. Tasty is in the name. Everyone says it all the time, but you two saying tastiest 10 times straight was cracking me up.
I will say I asked if we make the videos, the like food videos, because there's that like they're TikTok / Instagram, the tasty videos. So that I've been asked if that was what we do, and I was like, no, not exactly. I mean, we do talk about food, but not to that level.
No.
How's the FX world, my friend? You got the shirt on.
We're shaking.
I mean, it's 80 degrees today. You're wearing a quarter zipped up.
Well,
the amount of gear
do you have like chest? Do you wear a t-shirt? Let's do this. Do you wear a t-shirt under that, or do you go skins?
Oh, you go vecchio. You go vecchio. No t-shirt.
I'll either wear a polo under it, or if
of course you do.
If I don't have a collar, then no.
Then it's skins. So you go in skins.
Yeah, so you can see my traps.
I'm gonna say
he doesn't have chest hair either.
I'm gonna say you're a hairless
like-
cat.
yeah,
I'm gonna
he's
go with
like-
my
he's
son.
like-
That's what I was gonna say. You were definitely a hairless cat.
Yeah.
You trying to make me unzip my zipper?
Yeah. Tasty after dark. Oh
yeah.
Oh, look at that.
He's got a little.
Yeah. A lot.
All right, a lot. All right, I'll give it a lot. I'm sorry, I'll give it a lot.
I want to know in the chat if you guys thought you were getting a little show today. Okay, this is we have gone off the rails.
Show us the kitty.
You guys, without fail, can make my heart rate highest of the day.
Yeah.
Is it
15
minutes
minutes
here?
for exactly that reason.
Yeah.
So thanks again.
Us too. The feeling's mutual.
The feeling is mutual.
No, we're off to a flying start here. To start this week in FX markets. We've got wherever you look, we've got a ripping rally in equities. What does that mean? Historic correlation picking up. Down day for the US dollar. Almost all of that safe haven demand is now out of the US dollar. And when you look across different markets, it's pretty interesting to see now. We've got across the major pairs, we've got the pound dollar is now back above its pre-conflict levels. Similarly, we've got Australian dollar back above its pre-conflict levels. Everything else is not yet. We've got euro dollar, it's absolutely ripping. That's getting pretty close. We're back above 118 in the spot market there. Pre-conflict, we were sitting around 118.15, so pretty close to that level. More room to gain in that dollar Swiss franc, as well as Canadian dollar and Japanese yen, both still lagging dollar, holding on there. But we've got a ton of idiosyncratic developments going on. That pound dollar is one we're looking at today on almost a week straight of gains for that pound. We had a gilt auction today. Those yields highest they've been since 2008. That plus US dollar getting out of the way has sent the pound through 135 and now approaching 136. Haven't seen that since, mid-February.
I sold it.
All right. And then if you're looking at, more of those.
These things are unlike equity markets where you can sell high, buy low. These things are just one direction.
They do fly trendy, although they're on like a 7-day rally.
It doesn't matter
on a 7 or 9 day rally.
It doesn't matter.
Is there any drag? I know it's going to sound like I'm asking a serious question. There's no drag to FX, right? I mean, there's no, inherent drag from the nature of the product, meaning
well, there's you either pay or get paid a spread.
I get that point, but there's no longer dated FX drag future to it, right? It's just the here and now. Is that correct? Am I wrong?
Yeah, no, these are the spot markets.
Spot markets.
So they're constantly subject to all of those rebalancings. There is an interesting characteristic when you're thinking about your own time horizon, comparing the spot to the futures, depending on the cost of carry, around 3 weeks of duration, it may be more beneficial to trade the futures where you have that carry baked into the cost.
Yeah, right.
And it's probably
but the buying power is significantly less. That's why you're paying for that.
Exactly right.
Yeah. But you'll have differences. Like if you look at the Euro futures, they do trade on a curve, but it prices in some of the expectations for changes in rates.
Exactly
which is further out in time, whereas the spot is trading right now. That's already priced into spot, obviously, too.
Yeah, I just operate under the assumption that whatever information combined with whatever product you're trading is pretty priced in.
Yep.
But good question. And then comparing just the kind of more risk sentiment pairs that have been driving a lot of activity over the past month now. We're looking at Australian dollar, like I said, back above those pre-conflict levels, but its neighboring New Zealand dollar still has room to run to catch up to where it was in February. But both from a past week magnitude of direction, those are both ripping simultaneously. So we'll see if this party can continue, but we've got a lot of Fed speakers and other central banks. We've got ECB Lagarde talking right now. We had a UK person talking a bit ago.
I'm going to sell the Aussie New Zealand dollar.
Nice. We had Trump telling the UK to drill, baby, drill just now.
Nice.
That
nice.
has not sent pound dollar in any
oil
direction.
down $4, by the way.
Yeah, that was probably the move in oil that we missed.
But yeah, if you're looking to get crazy, the news over the weekend in emerging markets, Hungarian forint.
Is that tradable?
Who trades it?
We have some traders. It actually is.
What is the ticker for this?
HUF.
HUF. Okay, euro.
It's in emerging USD. This one, as a result of a big change in political regime, a big election over the weekend. Not only did the ruling party that's been there since 2010 move out of power, but the new leaders have a supermajority or whatever equivalent, and the Hungarian forint was already on a tear from the lift in risk sentiment last week, and now it just keeps punching new lows. It's down over 7% in a week. USD HUF, that is. So the forint appreciating by more than 7%, which even in these markets is a huge move.
Yeah, I'm going to buy that too.
At TastyFX.
I just
So you're just trading price here. That's really all we're looking at,
that's
right?
it. And
trying to stay in it for the
there
duration.
was a period of time where I couldn't miss. It was free money. I was like, oh my God, I wake up.
That's because he's good. He was showing you good things.
I got $75. I got 100. Oh, let's start to size it up a little bit. Oh, I got 200 here, 150 here. All of a sudden, I lost on every single trade for the next 4 months.
What's changed? What have you done differently? Have you not been eating orange chicken? What is it?
We put $3,000 into this account. I think I took it to 6 without even looking at it. It just was when we'd get on the show with Mikey and I and Glenn, and I'd be like,
So it's a different spot.
I think I took it to 6. I'm back to 3. I'm 3,300 now.
And maybe you haven't been managing.
10% upside.
Maybe
Yeah, if you think about it that way,
That's not bad.
it's a great move.
But yeah, but some things got really big. Like
Right.
short
And-
Aussie, that really was painful.
And in terms of managing your losers, you let those ride. Are you still letting them ride?
Yeah,
So
yeah, like I'm out 200 on the long dollar against the shekel. I'm also long the dollar against the Swiss franc, which is not working today. So now I got some euro. I got a little bit of everything. I'm diversified.
Exactly right.
Diversified. I'm losing with some diversification.
Does that make you feel any better?
No.
So.
We'll work on some risk management tools.
I just feel like you bag hold me. Like you come on here and you're like, oh yeah, look at this one. And then like you know exactly where I'm gonna go with this.
It's just so easy what you're trying to say, right?
Appreciate the gravity of what you think my influence is, or me as the counterparty. I wish that were true.
Oh, you do. You want to take my money. That's what you want.
This what was interesting in looking at this Hungarian forint, which I don't look at, admittedly, all that often. Starting margin requirement only 5% here. So in these emerging markets, you can have some really volatile pairs that are held at 25% margin, only 4-to-1 leverage. Here you're still getting that 20-to-1 leverage that you get in some major. That's the same as Japanese yen, same as the British pound. So we'll see what's interesting ongoing there is this new leader, their willingness to get into Euro membership. I'll do some analysis what that might mean before they do it, but it would involve getting rates within a band of what the euro is.
I'd like that report on my desk end of day.
Immediately, if not sooner.
All right, I'm long it. I got a little small position.
You got him in. That's all. Your job here is done.
Ding.
You did great. You did great. Market's doing great too. Even the S&P is up 53 1/4.
Can't stop. Can't stop the
won't
buying.
stop.
Why
You
stop
must
now?
buy. You must buy. If you do not buy, the FOMO.
You want to hear? You want to hear my thinking? I've been sitting here thinking about this market.
Yeah, I
I'm
do.
sorry to interrupt
I do
you.
want to hear.
No, please.
Glenn. You're going to need ceasefire. Not the ceasefire. You're going to need war is over for us to go lower. Like this.
Oh, you think
this is like a buy the rumor, sell the news kind of thing.
Really?
Yes. I know we've all been looking for, the move to be, to the higher when war. That's going to be the hand in the market, at least for a short period of time. That's my new thinking with this behavior that we have. Volatility down 36 cents. It's actually upticking a little bit as even the S&Ps go higher. They're up 53 and change at the high of the session. NASDAQ up 265. Russell up 37. That's your leader in the clubhouse. The Dow is the weakest of the group, up 257. That's a half percentage point. Oil in by $4. I'm rounding there, although it is about 70 cents off of its lows. Gold really hasn't moved since it's been up $55. Silver up $3.60 is a almost 5% move, but it's been sitting here too. I'm going to take a quick 90-second break and come back. We got more Tasty Live after this with Liz and Jenny next. Good job out of you. Good job out of you.
Good job out of you.
Great job out of you out there.
Welcome to the Liz and Jenny Show. My name is Liz. Sitting to the left of me in the beautiful red shirt is Jennifer Andrews.
Happy Red Shirt Thursday, everybody.
The Liz and Jenny Show is probably my favorite hour of the day. It's somewhere where I get to be with one of my best friends that I've known since I was 14 years old and do something that I love. People get to take a look at how our minds work as ex-floor traders now transitioned into self-directed investors.
You know what's hot? Earnings. We are right in the middle of prime earnings season.
Well, we've got a big dog, Netflix. But you know what he did? And we've got those cards with us and we're going to keep them on us at all times. He made us each certified badass cards.
He brought me the card and I'm no longer afraid to trade anything. Just try it, Liz. Any strangle you want to put on.
Certified badass. And you know what? When she gets out of her comfort zone, I'm going to hand her mine.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Golf play, normal distribution, reduce speed, increase standard deviation for a wider angular strike. If you think like a trader, we've got your back. Tasty Trade. Join the club, genius.
Pay for back testing? No. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial in the DTE, and stack the legs. See what survives. Check out Tasty Trade today.
everybody, and welcome to the Liz and Jenny Show. My name is Jenny Andrews. This beautiful blonde is Liz Deerking, and it is a fabulous Tuesday in Chicago.
It is warm, rainy, but loud.
Humid.
Loud.
It's humid. You can't walk out of your house thinking you could blow dry your hair.
Warm, rainy, loud, and SPOOs are up and away. We're keeping an eye on the SPX right now. They're loud. There hasn't been any lulls. Not a single lull in the noise.
Are you surprised that the SPOOs are up today?
No, but Doug was.
Doug was, yes, Halo, Hollywood, whatever you want to call him.
The tan guy that walks by was very surprised.
He said that not only him, but most of the crowd was surprised that the market was up today, surprised that the market was up yesterday. We'll see what the day is going to bring, but there was shock and awe in the crowd today.
Shock and awe. It's great. I love being here. I love the energy behind us. This is the SIBO, as you can see right there. That is the SPX pit. And the SPX, there you go. It's the most, I think, one of the most liquid pits, open outcry pits that there is.
And it's busy. Busier than people would think. People thought, open outcry was dead. That's why we're sitting here, to show the world that it is alive and well and busy.
And we're going to talk about this a little bit, but why open outcry, Jenny? I think this is very important because people are like, oh, I will never forget. Even people that are in the industry at some point came up to me and said, wouldn't this be better served if everything was electronic? And I said, no. What these guys bring to the table is immeasurable because if you have big orders, you're going to get a better fill by the open outcry because they'll bring the prices in instead of hitting the electronic book and moving the prices. So big orders get better fills on the floor.
I'm going to show an example here, okay? I'm going to go to SPX. Yes. I'm going to go to SPX, go to the trade page, and Liz, let's say in these 2-day AM options, I wanted to buy the 169.50 call for 29.80. Fine.
Hit the bid. Or hit the offer. Like if you want to buy it, you can mid-market it. It will electronically get filled.
It'll fill. Let's say I want to buy 20,000 of those calls.
Or you picked the right one. Look over. So 4,390 have traded already today. Somebody comes in with a 4,390 lot. You're better off coming here because they will give you a price for one of those. If you go electronically, it'll be 10 here, 5 here, 6 here, 10 here, 20 here, and the price keeps going up.
Yeah. So I might get 10 at 29.70, and then 10 at 29.80, and 10 at 29.90, and then going up and up.
And 100 at maybe 100 at whatever price. But yes, if you're looking for big orders, these guys will give you a single fill. That's why they're so valuable.
And it's crazy because the smaller orders do fill electronically. Bigger orders come here for open outcry. Retail traders have taken over the SPX. I think there are more retail orders coming in than institutional orders now, especially in these 0 days.
In the 0 days, yes.
And we've got some big retail traders. We know. If you're on Twitter, following us on Twitter, we've got some big players out there.
It's been really fun to be down here. We love it because, and I know these last couple weeks, Jenny was gone and I had some people on and we were creating some YouTube clips. For those of you who are new or watching these clips, we came from here. Her and I stood toe to toe, shoulder to shoulder with these guys for a part of 2 decades.
We did come from here. We've been down here since the 90s. I'm glad you brought that up. I heard in the chat someone was calling us soccer moms.
I almost fell off my chair because on this network there are 2 people left, 3, Tony Batista, that actually were in the pits. Us and Tony Batista. And somebody said, oh, we've got soccer moms now trading 0DTE SPX. We're the OGs.
Yeah, we're the OGs. We've been down here a long time. I was a soccer mom, but now my soccer child is 22 years old.
I was never a soccer mom. Not that there's anything against it. I was a basketball mom, and I'm insulted.
All right, we have a lot going on today. First up, we have an amazing study. We're actually going to share this study with, if you're not watching the show, we're going to share this study with our YouTube viewers too. So if you're watching this on YouTube, like, subscribe, share with your friends.
Or jump into the live show. We're live every day from 10 to 11. You can jump on the live YouTube chat as well. We'd love to have you.
Okay, so this is a study we have from our in-house genius, Jacob.
We call him our resident genius, Jacob. Smarter than us. We love it. He back tests and does a lot of research for us.
Yes, so we are looking at managing expected move 0DTE spreads. I like this study. Honestly, we've done many SPX studies. I've really learned a lot from this. I was doing something that after reading this study, I found out was wrong.
You course corrected. So that's just it, is we're forever learning and growing, and we're learning and changing with the markets as they change. And the markets, you kind of go with what it gave you instead of like trying to muscle into something.
Well, honestly, the 0DTs haven't been around that long. So we have been doing studies on these, but they haven't been around that long. We've got 3 years of data now. I think there was a study long ago, maybe a couple of years ago, where we only had a year of data, where maybe these results would have been slightly different, and I was doing something that I thought was right, but now with 3 years of data, it's not.
Right, but keep in mind, nothing we do is a trade recommendation. When we open this up, and we're going to go to the next slide, you will see that there is really no right or wrong. It's just that if you want to tweak it to your own personal risk tolerance and things of that nature, you can kind of tweak it, and little bits help.
Sure. Okay, 0DT options continue to attract active traders with their exceptional liquidity and the appeal of same-day results. And the influx of traders only leads to more depth and more liquidity.
Heck yeah, more depth, more liquidity back there. I love it. The multi-year bull run has been particularly kind to put sellers, with the underlying trend consistently working in their favor. Using out-of-the-money short strikes offers premium sellers a high win rate for room to be wrong at the cost of a smaller initial credit.
But good entry is only part of the equation. Knowing when and how to exit can be just as important to long-run performance. That's what people always want to know. Where do I get out? 25% profit target, 50% profit target, let it go till the end of the day?
Close it at noon if it's not going your way? These are the questions we'll answer. Today, let's examine how different management techniques affect the outcomes of 0DTE short put verticals placed at the expected move.
All right, here's the study. Using 3 years of data in 0DTE SPX options collected every 10 minutes,
we considered the results from selling put spreads every day at 9 a.m., give or take 5 minutes. That's already been tried, true, and vetted. Placing the short strike at the expected move and long strikes either $10, $20, or $30 past there. So defined risk for all of them.
Experimented with closing winners at either 25% or 50% of max profit, as well as closing all positions at noon or leaving losers and small winners on through the close. So either you get 25% or 50% or close it at noon, or you get 25% or 50%, and if you don't, you let it go till the end of the day. That's what we're looking at. And I was and have been a noon closer.
You're a noon closer?
I do. I might not do it every time, but I'm often a noon closer.
I'm not a noon closer. I have a hard time locking in the losses. Okay, we examine the total number of winning trades, the total profit or losses, the maximum drawdown. Maximum drawdown is very important here. It's the largest amount someone could have lost if they enter every day at an unlucky time. Meaning, we'll explain that a little bit more when we get to that number, because it's bigger than you think it's going to be.
And all trades were assumed to exercise at mid-price. All times are Chicago. We are in Chicago Central Time. That's what they are.
Yes.
All right.
Now, I do want to give one addendum here, and I know they said this in the beginning. Given the 3-year bull run, put selling has been helpful. With these, even on down days, you can get out for a profit.
These are a daily trade.
Yeah.
So just because it's a down day doesn't mean it's a losing trade. We've seen plenty of down days where you get out of these. I mean, market opens down, you put one of these on, and if the market doesn't go down further, you're out. Or you just get a little pop and you're out, a little pop in the market after you put it on. So I don't like when people say, oh, these have only worked because we've been in a bull market. It drives us crazy.
It drives us crazy because that's not true. You're at the expected move. You have lots of room to be wrong.
All right, here we go. Here are some results. This is looking at $10 wide. So you're putting your short strike at the expected move. You're opening up the 0DT SPX options, putting your short strike at the expected move, making a $10 wide put spreads. These are the put spread, and these are the results.
It is not 9 a.m. It is now an hour past 9 a.m. But Jenny, let's pop in and just show the $10 wide, the $20 wide. We'll go to SPX 0DTE.
Okay, so I'm just going to open up the 0-day at the expected move, 69.20.
It will be farther at 9, but you're closer in now because an hour is gone. There you go.
And here we have it. I'm getting $1.65 on a $10 wide. Now, at 9 a.m., you're going to get slightly more than $1.65. I think it was like $1.80.
Yeah, so it was under 2.
Under 2.
Under 2,
but I think it's closer to 2.
So it was funny because it was close to 2, close to 3, close to 4. And that's it when it was, because I looked.
$10 wide, $20 wide, $30 wide.
Yeah.
Okay, so and while we're in here, I can just do it. So here we've got the $10 wide with the short at the expected move, $1.70 on a $10 wide, $2.75
close to 3
on a $20 wide, and $3.35 on a $30 wide. Now again, at 9 a.m., you're going to be getting a little bit more.
A little bit more because an hour has gone by.
Okay.
If the vol is high, you're getting a little bit more too.
But you could see the risk on those, right? If you're selling a $10 wide for $2, your risk is $800. So that's what we're looking at here, the results from $10 wide. So $10 wide taking 25%, 50%, and closing them at noon if they didn't close.
Right.
or 25% or 50% letting them go to the close if they never close.
So looking at this, I say with a $10 wide, and that's where I hang my hat, especially with my youngins that are doing this. I want a lower drawdown, which we're going to talk about in a second. But I hang my hat on the $10 wide and letting them go. Look at this. It's a big deal. If you close them at noon, meaning it's a loss, and you close it at noon, you're locking in that loss. And sometimes if you let it go till the close, you're making a little bit more money.
The market bounces back. So that's what earlier I said. I really learned something from this study.
Yeah.
I'll often close at noon if it didn't work out. Not anymore. Not anymore. After 3 years of data, looking at this, I'm not going to close at noon if it didn't work out because the results, yeah, they're still positive, but they're not great. But you're jumping from $11 or $18 to $57.74. And taking
look at your win percentage rate. It jumps up as well. Like that, closing at 25% or waiting, your win rate goes up to 92%.
And the max drawdown is less.
Yeah.
So here, looking at 3 years of data on this $10 wide put spread, 9 a.m. is selling at the expected move. Letting them go if you don't take 25 or 50%. It worked out. It worked out better than closing them at noon.
It did.
That tells me a lot of these closed after afternoon.
Locking in a loss. It's kind of like putting a stop loss in.
No, but I mean, a lot of them turned around. A lot of them at noon weren't winners, and they turned around.
But they might not have.
Or they could have been small winners.
That's what I'm saying. They might not have gotten to the 25% yet. You might have gotten a 5%, a 10%.
So we go back and forth on do we want 25%, 50%? I think 50%.
Oh,
here.
I look at this. It's funny because it is choose your own adventure. I look at this and I say I'll take 25 every time because it's a 92% rate, $57. Drawdown's okay. I go 25 every time.
25 every time.
That's me. When I look at this. But once again, these are a choose your own adventure.
So for me, if I'm putting this on, when you're looking at the credit you take in, if I'm putting on we saw right now it was like $1.60. Say it's $1.80. If you take 50%, you're getting $90 on that.
Oh, good point. I'm 25 when I'm at the money.
Right. So I know you take 25% if your short strike's closer and you're collecting more.
But
this, you have to realize on a $10 wide, you're only collecting $1.80. So you need 50% to get $90.
I stand corrected. I'm 50% because I usually bring mine in when I'm trading them. I'm trading at the monies. That's fair.
That's the difference.
That's fair.
Because you might have a set target in your mind, like, oh, I want to make $100 out of this or $200 out of this.
That's fair. That's fair.
If you want $100 out of this, you're going to have to do a couple of them if you're taking 25%.
That's fair.
Okay. Now we're going to look at the $20 wide wings. These numbers, let's see, we went from 11.18 to 8.14. These numbers of closing them at noon if they don't close for a profit are even worse.
And the maximum drawdown got astronomically high.
Yeah, that is crazy, right? You end up closing them for not enough of a win, closed too many losers that could have turned around or been somewhat profitable. The winner here is the same thing.
But let's just call this a $20 wide. We said I'm just using round numbers. Say you're collecting about $3. If you've got a $20 wide, you're risking $1,700. It's a lot more than the $10 wide.
Right. So if you collect, let's say, and it might be a little more than $3. Let's say you're collecting $3 and you're looking for that 50%. You're taking 150 out of it, or 25%. You're only taking 75 out of it.
Yeah. So I do kind of agree with you here. When you're doing the expected move, not the at the monies, you go higher, and it's kind of that common sense slide. The less you take in, the more profit potential you need.
I'm just warning you. My world is rocking. I just got off a ship, and I had to brace myself if I fall off my chair.
I'll catch you.
Thank you. All right, so they both work out. $10 wide or $20 wide?
They do.
Next.
They do.
$30 wide wings. To me, I don't know if the risk is worth that small shift in P&L. If you look at the 88 or 110 or 82 or 103, I'd rather do the $20 wide.
I would rather do the 20. My new thing is $20 wide, close at 50%, and then never touch it.
So and then here we got $30 wide. Again, same results. Don't close your loser. Don't close them at noon if it didn't work out.
Don't close them at noon.
25% or 50%. Hold till the end of the day if you don't get that.
I like it.
Yep. So it's interesting. We do these studies week after week after week, and sometimes we'll do a study and we'll say, "Whoa, this is the trade we're going to do from now on."
Yeah. So when we asked for the expected move, these are all springboarding off each other. You can go back and watch. We've been trying to get Jacob to do a buildable study from the SPX pit. We have, before last week, we drilled down into the at-the-money spreads.
Yeah.
And I still think if you were going to go grudge match one versus the other, I'm an at-the-money girl.
Because you like to collect more in risk class.
I like to collect $4 to $5 in risk class.
So you get an up move and you get out. So today was SPOOs up 50. Anything that went on at 9 a.m. is off because at 9 a.m.
For any percentage.
Any percent. Yeah, we were up 30, 35 at 9 a.m. and now we're up 50. So any put spread would be off. What's not off is I had the brilliant idea of doing the 0-day, 1-day calendar this morning. That's not off.
They're winners though.
I don't know. We were up. We put them on. We were up 30. Now we're up 50.
Mine is a $60 winner.
All right. Well, not terrible.
No, it's not bad. It's not bad.
Not terrible, but
it's not 20%.
Let's go to the takeaways. Every facet of zero DTE trading seems to demand its own playbook. What works for one setup doesn't always carry over to another.
It's very true.
Yeah.
And while smaller profits targets like 10 to 20 tend to work well for the at-the-money, that's exactly what I just said. The reduced credits of out-of-the-money strikes reward patience. Holding out for 50 paid off. 50% of max profit paid off.
Closing losers early is an effective risk mitigator for longer dated trades, like we close at the 21-day mark. But proved counterproductive here. An out-of-the-money spread that has been tested but not breached may be underwater at midday, yet well-positioned to collect as expiration approaches.
It's pretty good.
And it makes sense. And I remember that old study where we said if we sell options 45 days out and close them at 21 days and our outcomes are improved, then would we look at the 0 days like that? If we put them on it early in the morning, would we close them at noon? And that's similar to closing the longer dated at 21 days. But it doesn't work out here.
It doesn't work out here.
No.
It doesn't. I like this. This was a good study. Tomorrow, because we missed last week, tomorrow we're going to be doing one as well. And I'm going to give a teaser. Tomorrow is trading 0 DTEs using 1 DTEs.
Whoa, people asked for that. I'm glad Jacob did it because people asked for that. All right, that's a wrap on today's study. We have a lot to do in our account.
We do have a lot to do in our account.
And we are taking live tweets.
And you will notice, like I said, given where we are, we have to kind of use our environment, right? I do believe this is one of the first days. We've been down here on some crazy days. This is the loudest I've ever heard them.
It's busy. Well, unfortunately,
I said most consistently loud,
yes.
I should say.
I'm sad we missed last week. It would have been a busy week.
Yeah.
But with me out of town, we weren't down here.
Yeah.
So I wonder if it was like this every day last week.
I bet it was.
Yeah.
But it's been a consistent level of heightened trading.
Yeah, definitely busy. I posted yesterday's video. Liz has been doing this 7-day SPX Jade Lizard, and yesterday we took a look at one. Here's the video. I shared it on Twitter. And yours, is it already off?
It's off as of right now. So when I get on the train, I got to put on another one.
Okay.
And I took 25% out of it.
Oh my gosh, Josh, need recommendations for cruises? Help, family of 4.
Oh, I love a Disney cruise. It depends on how old your kids are.
I mean, yeah, there's a lot. I guess it depends on your kids and your tolerance. There's a lot to factor into which cruise is right for you.
Yeah, there is a lot.
I don't know. I heard a lot of complaints after this week. It's hard for me to recommend anything right now.
I know. You've been on 12 Disney cruises, and one bad one.
Right.
So and the ship was just kind of rocky for you. But that's what I'm saying. Like, you can't give it a bad name because you loved it up until that point.
You're right.
12. There's one bad one. I might close my calendar.
Bob on Fire. So, you're an inspiration. Maybe to us all, I'm sure. To me, and Liz taught me how to do this position labeling.
Yes, and so I opened up my account today. She goes, "How'd you get it to say Bob on Fire?" I was like, "Let me show you."
So,
and Fazia taught me.
I want to see in our account. You said you did that in places.
We did it in. If you go to positions, this is where Fazia told me this. Go to E-mini the SPOOs up top.
Okay.
So you'll see this. This is a paid for butterfly, meaning that we bought a butterfly a while ago. It rolled off. It was a loss, but we financed it with a 45-day put spread.
Okay, so
let's manage that separately, though.
Didn't we?
Not in this account.
Well, Okay, it's up for this one put alone is up 40%. It would be a loss because you used that money to pay for a butterfly.
We used all the money. We used $450 to pay for a butterfly. But once it's off, you have to manage it like it's a separate trade.
I think we have to manage this like,
yes.
That's a put spread. It's up 50%. I've got TP in my head.
100%. I was thinking the same thing.
So closed position.
It's easier to close it for 50% when you don't have the butterfly on.
I know. Okay, so I'm working closing that. What I thought yesterday, we put on a Bob on Fire and Intel, and I was going to go label that.
I don't think we did. Let's put one in though.
I thought we tried.
You talked about it. We never did it.
I thought we tried to put a Bob on Fire in somewhere.
I never put it in.
Okay.
You can go through our stuff from yesterday.
No, that's all right. Let's put one in. Because, Bob, when I said you're an inspiration, I never thought I'd close my Intel stock. I never wanted to pay the taxes on it. Never thought I'd close it. Yesterday, closed all of my Intel stock, turned my entire position into Bob on Fire.
And so let's explain what the Bob on Fire trade is. We do have it in a YouTube clip. Everything we did yesterday was 31 day.
Okay.
Or closed.
Okay, so the Bob on Fire would be going out far in time.
To January.
I'm going to go to January and buying the at the money, going finding an option for half the price.
Yep.
Here's the call spread, 62.5, 85.
And Intel's down today, so it's a good day to put it on.
62.5, 85. So we've got, what do we have? $2,250 in profit potential there when we cover the cost of that spread by selling 2 puts to cover that 675. So I'll sell 242 puts. Getting a small credit. And this is using only $1,500 to make $2,300.
It's a long-term trade, but Bob and I, we've kind of gone back and forth via Twitter about this, is that if you get the move you're looking for, you do get about 50% of it. So say Intel pops up $10, you're going to make about 5 here.
Right. If Intel goes up and goes through 85 and you want to wait the whole, from now until January to make the 2,300, that's your prerogative too. I have a lot of these that I put on that I'm just leaving. I'm just leaving them.
If they're through, yeah.
As a long-term trade. So I wanted to put this on because what I really want to do, I'm going to get...
Oh, she wants to try to label it.
Yeah, I want to put this on 56-cent credit using $1,500. So we've got this long call spread paid for with 2 short puts. This is the Bob on Fire. And this was what was so exciting to me today.
You have to change it. Oh, you have it in custom. Good. Okay.
Okay. So highlight these. Go to
Group Positions. And write it in.
Group as
Bob on Fire.
Bob on Fire.
Wait, somebody calls him a ratio something. Calls him a ratio butterfly or something. A ratio butterfly.
Super Bowl or ratio
something. But we call Bob on Fire.
Yeah, we like to call him Bob on Fire. So now, when we open up Intel and someone says, "Oh, what do we have in Intel?" It says Bob on Fire.
Yeah, it does.
I love it. And if we had more positions in Intel, if I sold a put in here too, then we could label that 1 short put. So it would all be separated.
It was nice. And it was nice because if you open my account, and I was doing it to Jenny today on the train, you just you open Microsoft and it's like pages and pages and pages. And I went through and separated all of it, which was helpful. And then Fazia says, as she does rolls, like if she's rolling something, she puts in there what the credit is for the roll.
Total credit
rolled, total credit collected.
I like that. Mm-hmm. I like that. And so it was nice. So I was in my account today labeling like Zebra, Bob on Fire. You could call them whatever you want, and I like the idea of totaling the credits and adding it up.
It is fun.
Love that. So, not that I was dying to get this Intel trade in our account here, but what I was dying to do was put on a Bob on Fire label.
Well, the Intel trade's good. It's down today. It's a perfect day to put it on.
Okay. So
it is a perfect day to put it on.
So we're in that. And like I mentioned, we're taking tweets. We have a lot of earnings coming up this week.
So ASML, Morgan Stanley, Bank of America, we did have quite a few banks this morning as well. PGR, PNC, and FHN.
Yeah.
So nothing in there is jumping out at me screaming, but look at what's on deck then.
Netflix.
Pepsi, Schwab, TSM, Taiwan Semiconductors. So
there's a lot.
There's quite a bit.
Frank posts the economic calendar. So if you want, you can follow Frank and get that every day, or you could just jump onto our hashtag LIZJNY Twitter feed, and you'll get that too. From the SIBO, Monday's option volume, 64.2 million contracts. We get below recent average levels, with calls leading puts 11 to 9.
So, it's interesting. Because I want to look at where the VIX is. I didn't look at that yet today. I actually didn't look at that yet today. But I feel like
where
we're
was it
in
yesterday? 18, 19. It was 19 yesterday.
18.23 right now. That's bullish
Average.
VIX.
We're average.
That to me means market's going up.
To me, at 18.
You know, you have this like bullish / positive drift up when it's an average VIX.
And if people think of the VIX as a leading indicator, it would be elevated. There's not fear. There's not the fear of the market's going to turn around and crash. That fear is not priced into the market right now.
It's not. What I find odd though, so the VIX is 18, but if you we were just in SPX, and when we were looking at that, it's still got a 36 IVR. So Intel has a 93 IVR. So there is heightened implied volatility in single names.
Can you believe what had a big one? A big IVR?
You were just in Intel. It had a 93.
Okay. I'm surprised we're down to 18, how quickly the VIX has fallen. Can't believe SPUs are up 60. Didn't see that coming.
I didn't see it either.
Look at this. And while we say this all the time, when there's fear in the market and vol is high, this too shall pass. It doesn't last forever. Now, is it gone for the rest of the summer? I hope not. I hope not. But I wouldn't be surprised if we settled down and did nothing for a while. It's possible.
With the SPUs up 62, the calendars have turned negative.
Yeah, the calendars.
They weren't at 50. At 60 they are. They weren't at 50. They are at 60.
Well, when I put on my 0-day, 1-day calendar this morning, well, it was interesting because SPX, I said, do I want to sell a put spread risking $1,000? I thought this market could have turned around. I didn't know. I wasn't sure. I said, I'd rather risk $1,000 on this 0-day, 1-day calendar.
Nobody knows what the market's going to do.
And who knows, by the end of the day, we could be right back at our strike.
Or we could be up 100.
Yeah.
So it is, like I said, it is pretty interesting that we're up so much and they're so active. Usually, when the market's down is when there's lots of orders coming in. But I'd be very curious to see what the most active stocks are that we've seen so far. Can we go to that?
Well, let me go to, and we'll get to any tweet coming in. Just throw on the hashtag LAZJNY. As far as the most active on the SIBO most active page, you see a lot of like VIX, SPX.
That's today. So most of them are VIX or
IBIT.
Whoa.
There was a big
IBIT's
IBIT
up
order.
Today.
Crypto. Maybe this is it. Maybe this is when the wind is going to get behind crypto.
Well, this is what Shelley said, and I don't want to put words in Shelley's mouth, but she said because the change where now institutional investors are buying it as assets, it goes up with the market.
Okay.
So we saw that market's up, crypto's up, right?
Crypto's up, yeah. So a lot of VIX, SPX, and IBIT was the only.
You can go down to equities.
Here we go.
Well,
Microsoft.
a lot of those are, if you look at the top ones, it's all April 14th. That's today. Tomorrow's tax day. Wow.
Did you know what? I haven't even heard from my accountant. I texted him today. I said, hey, are you filing my taxes or are we filing an extension?
Oh,
what the hell's going on?
I'm Extension City USA. I've never filed on April 15th.
I don't know what to say, but mine aren't done yet. And
He's going to work all night tonight to get yours done.
And I don't know if I have to file them for Logan.
You do.
I don't know. It's like if you make under a certain amount, you don't have to.
But you had a job this summer.
Yeah, but if you make under like $6,000 or something, I think you don't have to file.
You made under $6,000 with a full-time job this summer?
Yeah.
Okay. Then you're good.
I mean, he was an intern and getting paid like $20 an hour.
Yeah. Okay.
Yeah. Right? Yeah, but I don't know. He made a lot of money in his trading account.
I know.
I might have to go into TurboTax today and try to do something.
File an extension for your 23-year-old?
No, I'll do it today. I'll do it today. Let's see. What else? It's trading. Walmart.
But I did want to take a look. Let's take a look at those SPXs. Given where we are, let's look at the SPXs that are trading.
And we're going to look at all these because I want to look at American Airlines.
Well, American Airlines might be being bought by United Airlines, which I thought was insane.
Well, we heard that, but then we heard that might not be true. United did not say that was true. Rumors.
Well, they said it on Bloomberg.
Yeah, but I don't think it's confirmed.
No, but it was talked about.
Microsoft. Okay, what do you want to look at?
I wanted to see the given where we are in our current environment, I wanted to see the VIX and the SPX. Let's take a look at the April 14th, 69.90, 69.50, 76,000 calls.
Okay, where are you?
Where the top calls in the SPX.
Yeah. 69.50, April 14th. Yeah, I mean, is it today?
So I was watching this. So go to today's. It's the at the money today's. 69.50 is the at the money.
look at this move.
So 69.50s are the at the monies. Now, I was on last call last Tuesday with Tony Batista, okay? So last call with Tony Batista, and I was looking at the unusual activity. Not unusual activity, the most actively traded. And I was looking at the SPX. 145,000 of the, I can't remember which one it was. I want to say it was the 6900s.
Well, I'm going to go to volume here.
So 145,000 of the 6900s traded. This was last Tuesday.
Well, now we've got 80,000.
We gapped up.
Oh, that day.
We gapped up by 50 points that day on the close.
I mean,
during the show.
Someone made a lot of money.
Someone made a lot of money.
Someone made a lot of money.
Yeah.
Someone made a lot of money. 80,000 of these calls have traded today.
Yeah, the at the monies. It was very similar to what was happening before, where it was well, actually, I would say it was like the 69.65s for the just to use like comparable terms. It was the just out of the monies, and 144,000 of them traded.
And you know what I find fascinating? Take a look at this. The calls: 80,000, 40,000, 60,000, 30,000. The puts: 6,000, 12,000, 20,000.
Calls leading puts.
The people are trading the calls. People are trading the calls. I don't know. Do they think we're going to have a massive rally today, or are they?
Well, they were right if they did. So the calls are leading puts right now. It is fascinating. So keep in mind, if whoever's buying, they're selling.
And they're hedging. If they're selling all these, and I can look at the board right now, and I could see.
I can't see because the camera's
sold
my way.
the 7,500 calls in June. Sold the 6,800 puts. Sold the 50 calls in April. Sold the. So I see a lot of sold, meaning the crowd is selling, customers are buying.
Yeah. Yeah.
Well, we'll see. Let's talk about American Airlines. American Airlines up $1, which is big, almost 10%. That's
what was the option that was traded in the American Airlines?
Oh, let me go back and look.
Just because I like to look at that just for fun.
Just for fun, we had American Airlines calls.
Which you usually don't see. You got to go to equities. Yeah, there you go. AAL. It was the May 15th, so a month from now, 12 calls.
12 calls. All right. May 15th. Oh, we have just 2 short puts here.
Yes.
So they were the 12 calls. And honestly, if someone wants to play American Airlines to the upside, if you buy 100 shares of stock, it's $600. But if the stock goes down, you've got risk 1-for-1 on the stock. You can use options. You can certainly use options and have less money at risk or less. It's not terrible. I actually have long calls in American Airlines. I decided to use calls instead of stock because the calls are cheap and there's not a ton of premium in there.
Let's sell both of these puts and buy that stock. I mean, let's buy both the puts back and buy that stock.
But it's already. So it's already had to jump up. So for me, like now at this point, I'm selling out my calls and selling puts.
So the puts, we haven't made money on them yet, have we? They're just back to where they were. Oh, so no, we're actually up.
Yeah. I'll take both. I'll take all of this off. Oh, sorry. Let me look. American Airlines. Yeah, we're up on these. I'll take both these puts off.
We should.
Or the 13 put. Maybe we leave the 13 put. We'll take the 10 put off for 50.
And that was just added because the 13 put was a roll.
I mean, I get it that people are buying calls in here, or who knows if they're buying or selling. Really, who knows? But I hate to jump into something when it's already up. Or how do you jump in when it's already up? There's got to be a better way.
Well, you could do a bob on fire.
Yeah,
or a buffer.
A bob on fire or a buffer. Let's see what a buffer would look like.
So I like the buffers in the very, 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 very short term. But you can't do it in the 3-day.
Well, here's what I see in American Airlines. We're going through earnings.
Yeah.
Any trade we do, we're going through earnings. So maybe I do take both puts off, take off both American Airline puts, take advantage of that run up. And
so the reason I take puts off when it runs up is because it's a finite amount of things that you can make. You sold puts, you're the house. You're selling it, you know what you can make if it goes up. Premium's got to come in. All that stuff has to happen. We've got 50% right there. You only have another $1 to make.
Well, and the one put wasn't in the money put, so that was synthetically a covered call.
Right.
Synthetic covered call.
Yeah.
So if we had a synthetic covered call, stock went up, we're making money on the stock, we're losing a little on the call, but net making more. Now, if you want to go short term, I'm gonna pull up. I'm pulling up a buffer.
You can't do a buffer in this.
Oh yeah, there's not enough premium.
That's what I'm saying. I like them short term, but you can't. So try you can try the 31 day.
And like I said, And it is cheap to buy a call. It is. You can outlay $100 and play earnings and think you maybe keep the run going. I'll just do that.
That's kind of where I was thinking. I was going to go with the pay the dollar and get the 12. Let's go with the public.
But they're way out in time. But do you want this is a cheaper way to run through earnings.
Cheaper meaning she's paying more money. You're paying more money, but you're paying less extrinsic value.
Yeah, right. I'm only paying $25.
I know what you're saying. You're paying $25 in extrinsic value, so it's a cheaper extrinsic value way to play it.
Right. I'm paying a $25 extrinsic value. Why was the other? And the
it was
other
only
one
$98.
But it was a half a strike higher. So then you had to. The American Airlines would have to go so far.
And you're paying a lot more extrinsic value. I was just saying because we saw the unusual or the big print.
Activity.
Yeah.
This way, we've got $100 at risk through earnings. Otherwise. $1 for the 12.
I'm good with either.
It doesn't matter.
I just wanted to say when you said it's a cheaper way, it's a cheaper extrinsic value way because you were only paying $25 extrinsic value. Here you're paying $60.
I don't like the 64 cents.
No. But whatever, let's go with the big.
All right, $98. So if we pay $98 for the 12 call, our break even's like 13. So American Airlines got to go
Did you see what
above.
we got back for the puts by any stretch?
Oh, and buying power?
Yeah.
$300? Nothing really.
Great. So we switched it. So it's kind of like preservation of capital. You're up. We're kind of playing a fun game where we're going with what we saw.
I know we say that, but I hate giving up 63 cents extrinsic value.
Sell it.
Let's just
do the combo.
Yeah, let's do the combo.
Yeah, that's what I'm saying.
Deal. Deal. We're doing the combo.
We could shake and make it happen.
We're going to buy the call, sell the put. We're not giving up any extrinsic value.
There you go.
Fine.
Yeah.
Now it's like we bought the stock.
Yeah. We're just checking out American Airlines.
Yeah.
Go for it.
We're going to ride it through earnings.
Okay.
And it was $300 instead of buying the stock at $600.
Yeah. So now I know sometimes we go off the rails of the crazy train here.
I feel like we just did in American Airlines.
The combo is a synthetic stock. You're going to use less money than buying the stock. You could also do the jade lizard. I'm sorry, not the jade lizard, the zebra, because you could sell 112, buy 2 11s, then you have zero extrinsic value. It's all versions of the same
And
trade.
honestly, if American Airlines drops down $1 tomorrow, the dollar is up today, then we're out $1, but then we'll start selling puts in there again.
Yeah, we'll be fine. It's going to be okay.
I think if American Airlines drops back down to 11 or 10, I think we can make our money back this year.
I think you're going to be okay.
I think we'll be all right. That's American Airlines. And something else I saw on the active stocks was Walmart. That's not even really moving. And Microsoft, that was up. Last I looked, that was up $8. Where's it now? Up $8.
Up $8. Great.
Microsoft finally catching a little bit of a bid. All right, what do we want to do in this account? I'm going to sort P&L day.
Let's manage as much as we can.
Robinhood having a big move today.
Let's close it. You got 50%. I mean, I'm sure it's a roll because we collected $5. We filled an AAL.
Okay, we're going to get out of this. 280. That didn't give us much buying power back. I'm surprised. Look at this. The 31-day, we just bought this put back, but selling a 65 put in Robinhood only uses $600.
That's pretty cheap. 10%.
I know. Okay, Robinhood, high rank, but they have earnings coming up, so we'll probably wait on Robinhood for earnings.
Yeah, I would.
Yeah.
Unless you want to do an earnings setup calendar.
Oh, well, let's look. 80. I just went next round strike up. 80. So sell the 80 in the 10-day, buy the 80, and it's $1.80.
It's not bad.
Not terrible.
No, let's do it.
All right. This is just.
So it's also risk mitigation. You don't have a short put. You've got a calendar on. You can only lose $1.80.
Only lose $1.80.
And this account has kind of come back.
This account, it definitely has. Took some big hits in. Oh, you know what I wanted to see? What our Boeing calendar. Yesterday we took one Boeing calendar off, left the other. Oh, now it's through it.
Oh, the Boeing calendar. Let's close it for. Oh well.
I mean, we could. Yeah, if Boeing keeps running up, this will.
I mean, we got 100% on a calendar. I liked it when it was just under it.
Yeah, but now that
it's through it.
We can close it. We can leave it. I mean,
we didn't pay anything for it.
I know. We can see how the week shakes out. Okay, and I'm working that Robinhood. DraftKings up 77 cents, which we have 2 short puts. I'll definitely
take off the one, yeah.
And this 25 is in the 3-day. Let's roll that out.
Are we going through earnings in DraftKings?
Do you even care at this point?
No. Why would we be in the 3-day? Oh, there's something else that's in here that I don't. I'm hesitant not to show you.
What?
McDonald's.
Oh, I've seen it, and I just bite my tongue. I never like being long McDonald's.
I know. That was what's your assumption?
Although, yeah, what can we do?
Oh,
No, it was you and TP. It was TP. It was when I was out of town. Because I remember coming back and you're like, you're not going to like
40
this.
days ago?
TP and I put on a
Bullish McDonald's.
Bullish McDonald's.
Yeah, that tracks.
What are you going to do? Okay, DraftKings, let's just roll to the 10-day.
It's been on for 40 days.
I don't know if we can roll. I think we have to roll.
Everything's up today. McDonald's is still down.
ConAgra's down.
Oh, you're ConAgra.
ConAgra
and McDonald's.
Yeah. Okay, so DraftKings, we had 2 short puts. Now we have 1 short put that's ending this week. Do you want to change our DraftKings to a zebra?
Yes.
Something that's going to give us a little more profit potential?
Yes.
Because everything we've wanted to go up has gone up except DraftKings and Archer Aviation.
So let's. So I don't mind.
I feel
With
like
it down so low. I mean, the puts are great. You've got a 70 rank, but what can you make here? You can make another $1.80.
I know. So I'm going to buy this put back. And we're going to go out to May.
And there was no extrinsic value in it.
No, it was a 3-day. We're running out of time.
Yeah.
I'm going to go out to May through earnings and put on a zebra. So zebra, I'm going to change this to delta. Walk through mechanics of a zebra.
So hold on. This might be one of those where a zebra doesn't work. Because... Oh, no, it's McDonald's, sorry. So if you take a look at this, because you have $2.50 wide strikes, you'd be selling the 122.5 and buying 120.
So this is $1.36 extrinsic value. We're gaining from selling that option. And then if we buy 220s, we're only giving up 60 cents twice, so $1.20. So this, as far as washing extrinsic value is concerned, this sets up. But
okay,
we're
it does.
paying $519 to control 100 shares.
It's $1,100. It's $1,100 because it's 50% of it. I was just in my eyeballing it. I said, what you don't want to do is pay more money for the zebra than you're going to use if you were just buying the stock, because this is a fancy way of controlling 100 shares.
Right. So we've got 100 shares of stock for $519, or like Liz said, we buy 100 shares of stock. And
so it's significantly less. It's 50% of what, less than 50% of what it would be to buy the stock. So yeah, shift this.
But I want more profit potential in DraftKings than just that one short put.
That's how I felt in American Airlines.
Where's American Airlines going to go? 15?
What if they get bought by you all? 15, yeah, from 9 to 15.
Yeah. Our break even
DraftKings can go from 23 to 26.
I mean, I feel like American Airlines already had its pop from 10 to 13.
Possibly.
Or 10 to 12.
It used to be a lot higher.
17.
Yeah.
I mean.
Yeah.
Okay, so I'm working this DraftKings Zebra, and I'm going to make sure I get filled.
Well, $3.65 and $4 is expensive.
Oh, the market. Yeah, DraftKings markets are a little bit wide. We could. Okay, here.
No. Just buy the 17.5.
Or if all these markets are wide, we could just do the combo again. It's going to be $600.
Let's walk through. Buy the stock just for funsies. Okay. Buy the stock. No, don't buy the stock, but show how much it is to buy the stock.
All right, buy the stock.
$1,100.
$63.
50%. That's a total normal thing. You have 50% margin.
The combo, because these two markets are tight. Yeah, the 217 and 225, 135, 140
is $600.
$600. So
the zebra where we were looking at it, you're using $500. Is it less? Yes, but you're fighting markets.
And I was giving up too much. Those markets were too wide.
Yeah.
So I'm just going to pay. And someone might say, well, if you can do the combo for even, why are you paying for it? Well, 22.5 plus 85 gets me the stock price. That's how it should be the strike plus the credit equals the stock price.
And you're washing extrinsic value here.
So that only used $600, and now we're long We're long, essentially long 100 shares of DraftKings.
So when you look at low-priced products, sometimes the zebra doesn't make sense because there's always alternatives. You kind of got to look at it that way. And I was kind of alluding to that, saying you could just buy that 17.5,
Which we could have, but
it's wide markets.
That wide market.
Yeah.
I don't want to give up on a $23 stock. I don't want to give up 50 cents trying to get it filled on an order.
Yeah, no kidding.
Okay, so that's DraftKings. Robinhood. What are we? We are still not in that calendar. That's fine. Ibit. We have a zebra, and it's not. We can't really ratchet it yet. But
no, because we already moved
here's what I can do.
Oh. She's got a new trick, ladies and gentlemen.
Love it.
It is a fun trick.
So we have a short put in Oklo. We can probably close that. What do you think?
Yeah, 53%. I would for sure.
But then what do we want to do? Do we want to have nothing in Oklo?
So no, I'd like to roll it. I don't mind being bullish Oklo.
So we've got this short 50 put. If we close
it's still
that,
got 237 left in it.
I mean, if we roll it through earnings, we're getting 80 cents.
No, I'd rather.
Yeah, I don't know. That's why I don't know.
Leave it. There's still I mean, I don't mind being long Oklo.
So we'll just leave that.
I know it's 50%.
It's only up $3.84. I think it was up $7 or $8 today. Yeah.
Oh.
It was 61 today.
Wow. Yeah, that's a big move in Oklo.
All right. Anything? Oracle. Oh, these Oracle puts.
Didn't we try to close them yesterday?
We've rolled because we've rolled these.
And we tried to close it yesterday. Here, I will.
Why does it just smell like? We were just talking about McDonald's. Does it smell like someone just walked in with 5 bags of McDonald's?
No one walks by us.
Someone's hauling in.
Oh, it's coming from that way.
Yeah.
It hit you before me.
Order chains in Oracle. Okay. You see, we had the 50 puts. We rolled to the 45.
So we're up $58 on this one.
Oh, on this one.
In the year to
the
date.
last 60 days.
Yes.
Well, we get out. This has been a struggle.
This has been a struggle bus, and we're trying to close it. I would seal our profits in from these.
How did you learn the term struggle bus?
Struggle bus? Tom Sosnoff?
I don't know. New to me. I don't know.
Yeah.
All right, we're getting out of...
I feel somebody on the network says it.
That those Oracle puts were holding up $1,300.
That's good.
Who's up 70?
Okay, so...
All right, do we want to get out of our QBTS? And our Palantir. We can honestly, if we
So
take
Palantir, no. QBTS, yes, because Palantir is 21%.
Okay.
Let's try to stick with yeah.
With the market moving, I want to put GTCs in because if we continue to rally the rest of the day, these GTCs could get hit.
They could get hit.
So Palantir, GTC in, and QBTS. I'll take it off. I know this was also a roll because these are in the money, but.
Yeah, but if you kind of got to look at them with a fresh set of eyes.
I know. Now that's the D-Wave Quantum. There's a massive, I don't know.
Did you get filled in that yet? You didn't yet, right?
They're building, and there are already people there. Like a massive quantum campus in Chicago.
Oh, yeah. We drove by it a long time ago. Yeah.
And then with Logan's new job, he's going to be calling on them.
Oh, no way.
There.
That's awesome.
Yeah.
That is so exciting.
Or he'll be over there. He'll be working over there.
That is super cool.
At least one day a week, I think. Rivian, we have 2 short puts, 12 and 16. We're up 52% on the 12 puts and 38%.
Close the 52. Oh, if it's over 50, I think we should take it.
All right, so we've been closing. Do you want to try to put on something new?
Sure. We've got a lot of buying power back, which is good.
We do. And I know the market's been going up and people are happy about it. I'd like a pop back down to reload. I mean, you can see so many people are taking positions off, and I'd love a down move to get back in.
It was hard though. I mean, you had to be timed. You couldn't have thrown in the towel for this up move. You know, it was been down for so long that's part of the problem with trading is that sometimes you can't take the pain anymore, and then you're not in for the up move.
Yeah. Oh, and SoFi is another one. May 9th. Oh, that was a roll. I'll just put in a 50%.
So everything else is not 50 except for that Oakla, but we decided to leave that. Did we want to do any earnings trades? I don't think so.
What do we have? Let me see what we have. Let me make sure we get to all we have 5 minutes and we're going to get to all the tweets. That's what we're going to do. And then we'll get to the earnings. If we
Well, hey, we're on last call. I'm just saying that out loud so you remember. We'll be trading earnings on last call.
Oh, look, my Twitter's not updating.
I think your internet is down. Go back to the platform.
No.
Just go to the platform. See if you can go to it. We're going to stay on the platform. I can look at my Twitter.
I know we're getting tweets.
Good luck.
I know we were getting tweets.
So my tweet's coming in. So we got Brad, who is a new tweeter, and it says, did the new study mention entering time at all? Yes. Give or take 9 a.m. Central Standard Time.
Yeah, like plus or minus 5 minutes, 9 a.m. So a half an hour after the market opens.
Yes.
Okay.
And then, funny Mikey, he says, ladies, welcome to the 21st century. Mikey B taught me the ways of naming your positions.
Oh, we did. I just learned it today. Okay,
and then I'm going to read this to you too, so we can do this, okay? And this is a new one. Dronen, Dronen. Welcome to Twitter. What do you do when SPY drops to 590 by May 8th on SPY trade you modeled? Last week, Monday, where you sold. Okay, so he says, what do you do when SPY drops to 590 by May 8th on SPY trade you modeled last week, where you sold the September 18? So go to September 18.
Do we have this?
No, I think it's just them because we don't have anything in SPY. SPY, September 18.
Okay.
Go to it. Sold the 585, 690 call vertical for 73 credit.
585.
690 call vertical.
That
690.
was Tony from Mexico.
Oh, that was you?
Tony from Mexico. Yeah, this was one of Tony from Mexico's hedges.
Okay. And that vertical for $73, and then sold 4 times the May 8th, the 628 May 8 put for $7.
The May 8th,
628 put. 628 put.
For how much?
4 times.
Yeah.
For $7 and 101 total credit. So what would you do here?
So I would buy back all those 628 puts. If I sold those 628 puts, I would buy back all those 628 puts.
We're filled in hood. And then what do you do with the vertical?
And are we sure we sold these puts? Because Tony was teaching hedges. Maybe he bought the puts?
No, he sold the puts.
Okay, so I would buy back all. If I sold these puts for $7,
buy those back.
Buy these back.
Then you've got a call spread on, and your call spread is just
and
it's just barely in the money, which is great. Like so, if you go to the call spread, you've got the 585, 690. We didn't put this.
And that was in September.
It was in
Yeah. So. Okay, so here this is 585, $105 wide call spread, trading for $85.90. So there's still $2,000.
So they sold the entire thing for 101 credit.
For 101 credit.
So they sold 4 of those. If that's the case, this is a win. You sold it for 101 and it's now $85.90.
Well, let's see. If you made $7 4 times, so you made $2,800 on your puts. So you made $2,800 on your puts and you lost $1,000 on this. Isn't that net win? I'd close the whole thing.
I would close the whole thing and walk away.
I would.
That's what I would do.
If you wanted
Nothing is a trade recommendation.
But if I made $1,000 on that trade in a week, I would just close everything.
Yes.
But if you take off the puts for $1 each and left this call spread is somewhat of a hedge
against a long portfolio.
In case the market goes down, but you stand to lose $2,000 on this call spread if we stay here into between now and September. But
and you have a long time. This is until September, which is why it maintains a lot of its value too.
Yeah.
So honestly, I would look at them as a package. If I'm looking at that whole thing, and hopefully we did it right. If we're looking at it as a package, I would close it as a package.
I mean, it was a show, I believe it was a show I had Tony from Mexico on, so that we could find that in the archives to see exactly. But if I did this whole trade and I'm up $1,000, I just take it off. I know this was meant to be a hedge, but those short puts are not a hedge.
It's a hedge against the short puts.
Yeah, maybe.
Yes, so it's a hedge against the short puts. So I would look at them as a package and take them all off together. That would be mine. But once again, you can reach out to him on Twitter and ask as well.
Did we get to every tweet?
That's it.
Okay, time's up. We are going to run into the next show if we don't end this. We are done for the day, and Spoos are up 71.
We will be back, same bat time, same bat place tomorrow.
We are not done for the day. We will be on last call.
We will be on last call, but I mean, we will be back here tomorrow.
Back here tomorrow. We'll be on last call at 2:30. Everybody have a wonderful day. We'll see you at 2:30 with some earnings trades.
Remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show.
See you later.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the board. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
Welcome to the most dangerous show on the tastylive network. It's Engineering the Trade. I'm your host, Jamal Chandler.
I was a chemist and engineer for over 10 years and conducted experiments and research of all kinds. However, for the past 15 years, I've been an options trader, and I've traded strategies of all kinds. While the concepts may be different, there are certain similarities between these disciplines. My favorite strategy really has become selling put spreads. Now that works in a market where we're continually going up, of course, but I love trading everything, and that's sort of a result of trading at a prop firm. We looked at the entire universe, as we say. So, no, I love to trade it all.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade. Think you know where ball's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want with Tasty Trade.
What's up, Tasty Nation? Welcome back to the show. This is Options Trading Concepts Live. My name's Mike. I'm here with Jamal.
What's up?
And Thomas Westwater, as it is Thomas Tuesdays.
Thomas Tuesday.
Oh, yeah. How y'all doing?
Good, good.
Everything's over. Back to 7,000. Nothing to see here.
No, nothing to see here. The worst is behind us.
Yeah, it's crazy.
Just another V bottom. It's insane.
Yeah. Almost in 7,000 on the futures. I mean, I've been preparing for this for like a couple of days now, right? Yeah. You sit here with me every day. We talk. It's just been obvious, like, as we went into contango, as we just kept going higher, it was like, well, clearly the worst is behind us. And this is usually how it feels. When the worst is behind us, it doesn't feel like, and we're like, oh, this move is crazy. This move is not crazy at this point. It's what it is.
It didn't make sense at first until it made all the sense in the world. And now here we are. Crude oil backwardation is basically gone.
Usually I mess these situations up. So this is why I've been trying to be like this. Because usually we're at 6,700 and I'm like, I'm fading this market. I'm getting short here. Like, and then it gets to 68.
That's the Tom.
Yes. Right.
I killed that side of me a long time ago.
I don't do that anymore. I still have some shorts here. But I have longs. That's the reason why I have those shorts on. I have longs. I want those longs to work. I'm actually willing to lose on some of those shorts. I would say if we come in tomorrow and we start going up, so we do have a VIX expiration. Weird things happen on the other side of those. If we come in tomorrow and we're positive, I think I'm going to close all my shorts. Like that's it. We're going up from there for sure.
Yeah, really the only short I have on is that SPX downside butterfly, which, like we've said many times before, like even into this big rip higher that we've seen this week, this butterfly that we put on is only down $200. Like it's going to hold on to value. And if we do get a reversal of 100 points or whatever, it'll come in pretty quickly here. But we were talking about Microsoft just before the show started. This whole package of trades is working out really well. The 500 strike calendar, long term, January of next year, September of this year is up $200. I'm going to leave that on. But then the Super Bowl that you got us into, we had the 380, 370 put spread, and we bought the 425, 440 call spread for a net credit, but we bought back the 440 short call at the bottom of this range.
I should have done that. I didn't do that.
Oh, you didn't do that?
I didn't do that.
Well, either way, it's not going to hurt you because it's still far out of the money. But this trade's looking really good, and I'm not going to close this trade. I'm just going to let this thing run because if we get Microsoft back above 400, 410, 420, this is going to be a couple $1,000 winner and offset a lot of the pain that I took over that sell-off that we sustained. But
sometimes you got to let your winners run.
Yeah, especially after you've already reduced cost basis. I think that's another thing to consider is like if you had a diagonal spread on or calendar spread and your short option is at 90% of value and you've already reduced basis by 40%, like you don't have to keep throwing on a short component that dulls your upside profit potential, especially if your cost basis is already at a place where you're comfortable with. But yeah, JP Morgan had earnings this morning and somehow it came in within the expected move. The expected move is only like 3%. It's always scary to me when it's such a low move, but basically a non-event. And you wrote about this yesterday. What is your take?
Yeah, I mean, Goldman came in. They had really strong equities trading. Fixed income was weak. Deal making, they kind of gave not the greatest outlook on that. But, JP Morgan's a little different. So they posted decent numbers. Goldman fell yesterday on their numbers. Near record, not quite a record, but bouncing back today. Still, I think that was within the move as well.
Yeah.
Banks always kick off the earnings. I mean, it looks decent, but I think the tech ones, when we get to them, are going to be a little more impactful for the market.
For sure. And this recovery is interesting because it's happening before all these tech earnings that are definitely going to post good numbers. It's just a matter of whether the market digests the narrative positively or negatively. But there's a little bit of me that thinks the more the market recovers and volatility gets crushed, the more probability there is for a big rally to the upside in a lot of these tech stocks, especially ones like Microsoft and these others that have just been beaten up over the last couple of weeks. Bitcoin catching a rally too, up 2K, ETH up 100. Both of those up sizable percentage-wise. But yeah, just another strong rally today. Whole market, E-minis, NASDAQ, Dow, Russell, all up over 1%, except for the Dow. But yeah, just strength upon strength. Vol continuing to get crushed here. And yeah, now we have a sizable contango between these contracts for the rest of the year here.
Oh, it's over. It's a wrap.
Yeah, and I think really the telltale sign here, if you are to assume that this market keeps recovering, is just the fact that crude oil backwardation is basically gone. This contract is going to expire soon, the K contract. So, but still down 5% today. Actually, the M contract is down 4%. The K is actually down more. The K is down like $6 or $7 today. So,
What's up with your call spread?
It's out of the money.
Yeah, look at that.
It might be a profit now.
Look at that.
No, it's still a scratch.
Look at
this one would be crazy if this one came in.
Yeah,
I don't think that's possible. But at least we got the 98.99 after so much volatility. This expires out of the money. It'd be crazy.
I have the 90.91, so I'm sitting here now like, ooh, it's gonna happen.
Yeah, it's looking more and more probable as the market continues to rip.
I mean, you're good. Probably good.
Unless there's a crazy tweet.
Something tomorrow. I think at this point, it would have to be like later in the day today and then into tomorrow.
Yeah.
For you to like run into trouble.
Yeah. But yeah, feels good. And the rest of these positions, silver, seeing a nice bid. We're positioned well for that. Micro minis positioned well for that. This trade looks really good right now with it being slightly in the money, but inside the expected move for May. And we just need a little continuation here. Got my eye on this one. Actually, I'm just going to close this one out. This 3-day. This is a short-term iron condor we put on. And we just got a 50% profit today on this rally.
Nice.
So let's get out of that. But yeah, open to new trades. And we'll see what the market bringeth. We do have some slides today with a unique futures product that we talk about here and there. Lean Hog Futures. If you want to join us on the YouTube channel, we're streaming live there. Just pop over to Tasty Live. You can throw in your trade ideas, questions along the right-hand side chat. We'll get to them shortly. But first, Lean Hog Futures. Buy the lows on seasonal support. What say you?
Yeah, so, we're going into the seasonal demand period for lean hogs, and the price has dipped a good amount. The HEM6 contract, which is the one 59 days out, we are trading right up against the 200-day moving average right now. We're at the lowest point since the start of the year, a little under that actually. So lean hogs, we've sold off pretty good. So, just looking at this seasonality chart here, we can see, the orange bars I put for kind of the seasonal demand season. And that's when people are grilling, barbecuing, getting big cuts of meat, things like that. We see April really starts to take off, and that strength persists through May, persists through June, starts dropping a little in July, after the 4th of July holiday, that demand drops off. Summer's kind of ending for the big part of grilling barbecue season. But we've sold off into this. So the trade that I'm putting on is a short put spread. And where am I doing this at? It's going to be right around the 30 delta. So I want to, selling the 100 and buying the 98, it gives a risk to reward pretty much almost 2-to-1 with a 65% POP. So not bad there. The buying power is 231. And I'm kind of playing it as, prices have sold off, but seasonal demand is coming in strong or should be strengthening, staying strong. And, it's just good risk to reward, good POP on the trade.
200-day, maybe it'll hold, maybe not, but you also have the 100 psychological level that could kind of support these prices. But lean hogs altogether, they usually do good these months. April, May, June, you usually see some support, if not strength. So it's kind of just a simple trading thesis there that I'm going off of. If we go to the next chart, kind of see
what does that mean actually, like seasonally for hogs? Like what is that? I'm looking at the actual futures. Which I know we'll get to. I've never really noticed how much they vary, but like what does that mean?
Yeah, so seasonality, it's pretty much you average the prices every month going back. I think this chart goes back to like the 70s or something. You index it and then you just show the run of prices, how they usually perform on average through the years.
Well, right, but why are prices higher for hogs in the summer than they are in like the winter?
Well, a lot of people are buying those big cuts of meat, barbecuing, grilling, Memorial Day parties, 4th of July parties.
That really is a factor, huh?
Buying all those big cuts, just people are out more. So pork demand usually increases in the summer, It's one of those meats, you throw on the grill, you buy a lot of it, you have a party, you buy a big butt, Boston shoulder, those kind of cuts that they call it. So yeah, I mean, that's why the demand goes up, summer grilling pretty much. But this chart is hog slaughters going back to the start of 2024. The orange line is 2026. So the more hogs that are slaughtered, the more supply is on the market. So you see, we started 2026 off really strong, we were near the upper end of where we've been over the past 2.5 years. And, that could have fed into why prices have been coming down, a lot of hogs being slaughtered, more supply, demand not picking up yet. But now the slaughters have come back down to near average if we go back to the start of 2024. So the slaughters are coming in. We meet demand season here. Technically you could say, you have some kind of psychological support around 100. You got the 200-day SMA slightly above that. We're at the lowest of the year. I think this is a decent time to try to pick the bottom here. And, if you put the short put spread down there anywhere around 99 to 95, you can get a good risk to reward. So, you have room for hogs to move a little bit lower. If they go sideways, that's fine. Obviously, if they go higher, that's probably the best case scenario here. So yeah, pretty much looking for a bounce. So if I can get in this trade, we get some strength going into May. In a couple weeks, I could take this off and, reset.
Yeah, I mean, as much as that makes sense, I didn't think there would be this big of a price difference when you look at them. It's a trip.
Yeah. And, I think the same thing happens kind of in live cattle for the seasonality there, just because, same kind of thing. You're getting those steaks, you're getting, those cuts of meat to put on the barbecue, put on the grill, and you get some there. Live cattle's actually been ripping a lot higher. And I haven't traded it lately, but this, joining the rally here makes me a little hesitant. We're trading at 251. We started the year around 225. So, there's been good upside there. And, I don't know. I have to look into the live cattle a little bit more, but
percentage-wise, it doesn't look as dramatic as it does in the hogs.
Yeah, no.
You got something there.
So you're in the M contract?
Yeah, I'm trying to get into the M contract. And, I just want to put a trade on that's not correlated at all really to the markets. You're trading equities, bonds, a lot of commodities. They're correlated. You're exposed to the headline, the Iran, U.S. talks, things like that. Lean hogs a lot more insulated, right? What happens in the Middle East really isn't affecting demand here. It might a little bit. People say higher energy prices, you're paying more for gas, maybe. But instead, maybe you don't buy the prime choice. Maybe you buy Select or something, but buy a little cheaper cuts of pork. I think people are still going to be out enjoying the summer, buying those cuts of meat. So even with high gas prices, I think it could happen here. I think it's a good place to get in.
For a brief second, I thought you were going to say what happens in the Middle East stays in the Middle East. Just for a brief second. I don't know why.
Yeah, I don't think that's true.
It's not true. It's not true.
Vegas
it's proven not to be true.
It's the only place where that's true. And that's not even true sometimes.
Yeah.
But yeah, what Jamal was referencing is this futures curve for lean hog futures prices. So you can see there's a big increase in prices in these summer months, June, July, August, and then it drops right back down to the 90s. So it jumps from 94 to 102 to 105, stays at 105, and then back down to 90. So there's that increased price. And you might think, well, those prices must be high, relatively speaking. But when you chart the M contract, it is actually not. It's been falling. And here's the 102 mark. So Thomas is looking at the 198 put spread, which puts you well below the current range. And it gets you back to December of last year in terms of pricing. One thing to note is if you are trading this, sometimes we do diagonal spreads, but this doesn't really apply here unless you're going to like the V contract, because all these contracts, 59-day, 92-day, they all settle at different prices. So if you're long the 59-day and short the 30-day, these are completely different prices, completely different deltas on the strikes. So you got to stay in the same expiration. So the short put spread, maybe a butterfly, something like that. I want to see what that looks like. If you do like a 5-point wide butterfly, what is the cost on this thing? Okay, $400, $1,500 in max profit if you pin it. But really, you're just looking for a rally to like 107, and you just close it for whatever the value is. It is a longer dated one, so I'm interested to see this Theo. If we get, let's say we pass some time here. Let's bring this to the end of April. May 1st.
5 or something.
Yeah, so you're looking at like $100. If you buy this for $400, you're looking at like $100 if you hold this for a couple weeks here. If you wanted to get more sensitivity out of it, you could go to the near-term contract, the 30-day. That's going to be probably a tighter spread for sure. But yeah, I like the idea of the short put spread. You could even do both, short put spread with a butterfly.
I just back to the, well, we don't have to go back to the chart off of Thomas's memory. Do you typically see like the ramp start in May? Is that what we saw, or was it?
I think it's already started. Getting warmer out, especially the southern states right now. People are getting outside more, so I think it starts to pick up now, as we saw in the graph. But May, June still holding that seasonal strength with keeping prices higher than the rest of the year. And, selling a put spread when the trend is going down, this is something where, if it got in the money, I'd probably just cut it short right away, eat a small loss instead of trying to, be in the money and hope for it to come back. Preferably, I'd like to see some support hold at 100. And, there is high frequency data that comes out that does move these prices. There's a weekly report on slaughter numbers, pork cutout prices, things like that. So, you do see some movement on these reports, but they could change, So I just keep an eye on it. I'll cut it quick if it, moves into a loss, but hoping for that bounce or just, not sell off anymore at support.
Like it. Yeah, I'm going to see if I can get in here. Okay, so 575, it's $230. We're in. And I kind of like the idea of the butterfly too.
That looks interesting.
Yeah, I think I'll do the short put spread and then just do a smaller butterfly here. 104, 107, 110 to the upside for $150.
I guess I can officially open positions again since I'm at 7K. I said I would be opening. I'd be aggressive opening.
That didn't take long.
It didn't take long. It didn't.
All right, so I'm in the short put spread with the upside butterfly. So this is the expiration risk graph here. $230 in the middle here. That's my net credit overall with the short put spread and then the cost of the butterfly. But as you can see, got a nice upside kicker here at expiration. 1.3K if we hold all of this all the way to expiration, but that's not really how we're going to play this. We'll look for a rally up to the middle of the range here. 107's right here. And we'll just close it all if we get up there. Fun trade. Very nice. All right, beautiful. We're in. Someone in the YouTube chat's asking about live cattle. So yeah, that's LE, and that chart and that price supply and demand differential here is shown here. You got 251 in the near term that goes through May and June. Both of these contracts settled to the M contract. So if you wanted to do a diagonal spread 52-17 day, they both settled the same contract. Same story with the 115.79. They both settled to the Q contract. But you can see the price drop off here after you get through the summer months. Very similar curve. But this one's been ripping up at 250. Kind of crazy. We were trading this back in the day when we had the screwworm epidemic.
That was a good one.
And that's what really created this rally here. But yeah, wild to see. Wild to see.
I think I want to do the butterfly in May. I want to do that.
Yeah.
95, 100, 105. I'm going to try and get that.
Now, the big thing with live cattle right now is there's really bad drought conditions in the southern plains where some of these big ranches are situated, and that's what's been driving up wheat prices actually too. So wheat's been on a pretty good rally here.
Nice.
Past few days, and I haven't been trading. I've been thinking about getting into some wheat, but yeah, these droughts are killing the crop condition reports that the USDA puts out. So the USDA, a couple weeks ago, they put out last week, they put out the WASDE, and it added 6 million metric tons to ending stocks for this year because India, I guess, is buying a lot less. So that drove the price down a lot, but now we're bouncing on these drought concerns. So it could be a good play there as well for trading wheat. Not much volatility in there.
Yeah, it's nice to see a little bottoming here. I'm still in the long wheat and corn. So we actually bought back, these were diagonal spreads. We bought back the shorts, 500 and 700 of my remaining long calls at 73 days. So loving to see this rally. And if we see it continue, we'll be golden with those trades, but still need a little bit more there. Ooh, Tesla, I was filled in. So that was a closing order for 50% profit or close to it for that short-term iron condor.
Eat it.
Beautiful. All right, I'm going to pop over to the YouTube chat, see what the people have for us today. Again, if you want to join us, we are streaming live on the Tasty Live YouTube channel. You'll see this video live. Microsoft's dying to be above 400. First target's 413. You betcha. Yeah, it's nice to see a strong rally from the lows here, but this has been the stock that I've been hemming and hawing about for many months because it's at the end of the day, it's a Mag 7 stock that's down 30%.
Yeah.
And sometimes it's as simple as that. Doesn't mean it's going to go back to 550 in a couple weeks, but if I'm going to try and get bullish delta, I'd rather have it in a product like this versus a product that's already at all-time highs, just for recovery's sake. So we'll see if we get a continuation here. All right, Dronin's got a SPY position. What do you do when SPY falls to 590 by May 8th? Well, first of all, it's a 1,000-point sell-off in the E-minis. Highly unlikely. But let's take a look. Sold to September 18th. 585,690 call vertical. 585,690. And sold 4 of the 628 May 8th puts for $7. So you've got some interesting stuff here. 628. Total credit 101 points. At 590, SPY P&L is minus 850, buying power was up. Yeah, I mean, you have 4 times the amount of puts here. So you just have to, your biggest concern is the buying power requirement on the puts if the market were to drop dramatically. But the short call spread would be losing value. You could consider closing that But really, the name of the game is just adjusting and manipulating. So, like, if you get all the way down to 628, let's say SPY does end up selling off down there, I would buy back the 628, roll it out from May 8th to maybe June or July, and just look for strikes that are worth $1. You can move it from 628 down to 540 right now for a net credit, and reduce your buying power pretty dramatically, because you'd be going almost 100 points further out of the money, which is 1,000 points in the E-mini futures. So for me, that's the name of the game. Is if I'm selling puts undefined risk, I'm doing it in a size that I can withstand anyways. But rolling down and out into a big sell-off, especially when the put skew gets a lot more apparent, that's the defensive mechanic. And after a while, you probably just leave the put where it is, and you just roll that put if it goes in the money, and you'll have a covered call risk profile 2,000 points below where we are now in the E-mini futures. Qualcomm, put butterfly. The 128, 132 for May. No. For earnings, 128, 132. Yeah, I'm not sure what this is. If you can let us know. It looks like you got the strikes backwards. You got sell 128 twice. Let me know what you're looking at and what expiration. Back to SPY. SPY butterfly. April 575, 595, 615. Last Friday, it was 7 days to go. SPY at 595, making only $2 profit. Is this normal for a $20 wide, risk 5 to make only 2? Yeah, I mean, you have to hold these things to expiration, these butterflies. 575, 595, 615. It's not too narrow for SPY, but yeah, at that point in time when we were down there, implied volatility was exploding, and that hurts you in terms of realizing max profit. Because for these butterflies, you want to have as little extrinsic value as possible so that it trades for intrinsic value or close to it when the spread's in the money. Extrinsic value being added on top of that value is going to affect your short options, and it's going to prevent you from realizing max value in the spread. So the easiest way to look at that is like, what's the difference between a 695, 690, 700 butterfly, 7 days to go, it's trading for 75 cents, where if you look at something longer term, you're going to see that trade for a much worse value if you're trying to sell out of it, because there's way more value in these options. SMH, this thing must be ripping. Yeah.
It's again.
Look at that. Just a cool 100 points in 2 weeks.
Hey, everybody knows what they want to go after this downturn, going after semis.
Yeah. Mm-hmm.
I just sold a put in Intel, by the way.
Intel, eh?
I know
That's
it had
right.
earnings, but I sold the June 55 to be a little aggressive, honestly. Yeah.
$3?
Yeah.
I like it.
It's my way of kind of like getting some long deltas. Again, you can say I'm like doing this dance with deltas, you know? Like I got certain short deltas. I even adjusted a few short deltas here and there. And so now I'm able to go out and get a few like long deltas in other places. Semis are going to keep going up. This is definitely going to be one of the names.
Yeah. Yeah. And that's big premium for buying power too, which you love to see. All right. 400, 440 strangle in SMH for $15 in credit. Rolled my put side up to 400. Now my credit's $20. What would you do? Roll up the put side to 440 or recenter as you've done with the year-long trade? You could roll up to a straddle. A straddle would make you neutral here. But basically the question is, if you have this here and you roll up to a straddle, you're still going to lean a little bit short. So you'll end up with you'd end up with a $30 credit if you rolled the 400 to the 440 and picked up another $1,000 if you're in May. You could also consider buying this back for $30 going to June. And if the question is like, if you're trying to alleviate upside risk, rolling to June will help you out a lot, because rolling to June, you could go to the 440 put, 465, 470 call, and shift your short delta into bullish delta and still pick up $1,200. So now you'd have a $3,000 or $3,200 credit with the 440, 470 strikes. So it's really just a matter of where you want your risk to be. If you're staying in the current cycle, going to a straddle I think is fine. If you're rolling out in time, I think I'd move the strikes to be back out of the money, because you can do that very easily, as you can see here. So then it's just a matter of like where you want your risk to be. The 440, 500 still picks up a credit, but now you just shift your short delta into bullish delta. So I think that's the question. Where do you want your delta to be? But the world is your oyster. You already have $20 in credit, and you can manipulate it however you want. But my whole thing with the year-long trade is I don't want any upside risk, because these markets have just been behaving this way. You get a big sell-off, V-bottom. So I don't want to be caught with short delta in a low VIX where the assumption is we just keep going higher.
Mm-hmm. Agree with that.
Yeah, this market is wild.
We had the high of the day, 69.99.50. Couldn't quite cross 7,000.
Yeah, it'd be crazy if they just fall right from it. 7,000, boom, sold. Yeah, seeing the markets grind higher all day feels weird now. Lol. I would agree. It's surprising, but it's not surprising at all.
What's that? Markets
Just
being where they are?
Yeah, we're at all-time highs, basically. Yeah. Right back there. Market's going to market.
Yeah.
It's going to be a sell the news event when there's a peace deal.
That'd be wild.
Yeah.
Yeah, at this point, sure, we could fade, but I don't see how we go below 6,800, honestly, at this point. I think, 6,800 is the new floor, I'd say. Again, unless something like completely really bad happens. Feels like 6,800 is the new floor.
A lot of the big banks said, they were changing their near-term price targets, but all of them still have the S&Ps at like 7,500, 7,600 by the end of the year. I don't know what to tell you.
Yeah, a week ago, the floor was 6,600. The floor has been raised, for sure.
Yeah, it's wild to see how quickly these things turn.
Oh, it's amazing.
Qualcomm on its butt, trying to catch a bid here. Butterfly, expiration for April 17th. So this week, Butterfly. I don't know. I mean, it depends on if you're placing it to the upside or downside, but it's going to be cheap regardless. I just pulled up a random just short option at the expected move, 130, 135, 140 for $1.60. You could go another week out and be outside of earnings still. This one you can do wider for probably the same debit, 130, 137, 144. A little bit more expensive, but you can make it 7 points wide. It's up to you. Thoughts on an NDX 0-day butterfly hedge?
What?
54.30, 55.10, 55.90 for $1. 54. Oh, 55.90. 55.90. So big sell-off. 55.90, 55.10. So hard to look at this without the two.
We're starting with the 55?
Yeah.
90?
Yeah. So you're looking for a
huge
move.
See it, but, let me talk you out of it.
I mean, it's $1.
$1 is a great risk. Is a great amount of risk. Totally.
We're looking at the wrong. Here we go. So yeah, you're looking at $1 here in risk. So if you're willing to take a $100 shot, I really don't mind it at all. But same story, like you can see here, the P&L Theo, you get this move right now, you're looking at maybe a $2,000 winner. You'd have to hold this to the end of the day to get 7,800, which is max profit.
I mean, do you know something? Like if you do, you got to tell us. Because this is more than one standard deviation move. I mean, 25,630 is basically one standard deviation. So, hey.
Yeah. 25,510. If we just look at it on this curve
What
here.
does tomorrow look like?
You're looking at a 5 delta. But really, if you get to move down to 25.6 or below, you'll be golden on this trade. But yeah, it's a really cheap hedge if you're playing for a complete reversal. We've seen it before.
Sure have.
Up to you. Anything else? We've got Netflix earnings on Thursday. I wrote an earnings preview this morning for Netflix. I'll post it in the YouTube chat right now. But basically, pretty decent implied volatility, 6-point implied move for 3 days, $106 price point. The $6 implied move for 3 days is over 50% of the implied move through June. So still a decent expectation here. But yeah, I think it's going to be interesting to see what they say. Basically what I wrote up was they're increasing prices every week, it feels like. And they've got almost the same amount of subscribers. They have 340 million subscribers or 330 million subscribers, which is almost the same number of every citizen in the United States.
Yeah, that's crazy.
Which is wild. But yeah, I think subscriber growth, ad revenue, going to be important, especially with the price hikes where everyone seems to be broke. So we shall see. But I think that's the catalyst for a continued recovery here. You saw this big recovery from 75 to 105, 106. But if we want to see this thing higher, I think they got to crush the numbers and they got to have stronger subscriber growth, even with the price hikes.
I mean, it seems like not doing the deal worked out for them.
Yeah.
Seems like
the market agrees. What happens on Friday when the CL contract changes? Does the new month price become the current month price? Yeah, so it already is. So if you type in CL without the M6 or K6 contract, it'll default to the active contract, which is the M6 now. So once this expires, you will basically everyone's starting to trade the M6 contract now. Which is why it'll default here on the tastylive platform. But to answer your question, if you have an options trade in K6, it'll settle to the contract, and then the contract will expire. So just be mindful of that. But either way, got to roll these positions or close them before expiration if they're in the money or teetering in the money, just so you don't have to deal with that.
Yeah, that's why I got to watch mine. Right there, I got the 90-91 call spread.
Short a straddle on MES at 69.50 with 45 days to go. How should I manage this if I don't want to keep short exposure? Ratchet that thing up.
You're asking the right person, that's for sure.
Yeah, 45 days. So the most recent position adjustment that I had was I had the 6,700 in the 37-day. I bought that back. I rolled it out to the end of May, up to the 7,100 for $30. So for your question, if you have the 69.50, you're right there. You could buy this back and just roll it up to somewhere here. You could roll it up to the same one I have, pay a small debit, or if you want to keep the credit, now with this continued rally, you'd have to move it higher. 72.50, 72.25, something like that. Or if you wanted to roll out in time, you could go to the June contract, which is still the M6 contract, which is important because you're dealing with different last prices if you roll beyond that. So if you wanted to, you just need to look at your debit paid, $29.7, $297, and then if you go to June, you just create new strikes that give you the same credit or a little bit more. So you're at $69.50. Let's say you sell the same put, you can roll up to the $69.50, $70.50 strangle for a small credit. So just depends on whether you want really bullish delta with an in the money straddle, or if you want more neutral delta with an out of the money strangle. It's up to you. But I would say just continue to pile on those credits. Don't pay a debit to make an adjustment, and you'll be okay in the long run, as long as this market keeps fluttering around here. SPX put diagonal, 7,000, 6,900. Long June, short May. 7,000, 6,900. What do you think?
I mean, that's a lot of money. It's the first thing that I think about.
Mm-hmm. Yeah.
Cheap stuff.
Buying power is big. It's a 8K debit, but yeah, I think if you're trying to play this to the downside, I think there's just so many cheaper ways to do it. Like if you go to May, you could do like the 6,900, 6,700, 6,500 butterfly. Just like a super wide butterfly. And it's a $2,000 debit instead of $8,000. And you have more profit potential to the downside here if you get an actual sell off to 6,700. So I like these butterflies, especially if they're hedges, just because you have a big reward relative to risk and you can absorb this risk with other bullish positions if that's what you have. So I like the asymmetrical hedges in SPX with butterflies specifically. And even mine, the one that's getting decimated right now, 65, 66, 67, I bought it for $5. It's still trading for $3.50, even into this multi-day, 1% a day move to the upside. But it's up to you. Microsoft April 390, 400, 410 call butterfly for a $3 debit. Is this trade worthy?
Butterfly.
April 17th, 3 days to go.
Oh, really going for it.
3 days to go. Are you trading Microsoft at all?
Yeah, I am. I had to get some. I am in a short put spread, 355, 365, 65 days out, and I probably want to roll those prices up.
Yeah, it's working out.
Yeah.
Working out now. $3 debit for 3 days, max profit $700. I think it's okay. I mean, it seems a little expensive for the max profit. If you're playing for a rally, maybe you go 395, 405, 415 for a little bit cheaper at the money, $2 to make 800. But yeah, I mean, it's at the expected move is 405. You're seeing a big move today. If you get a continuation, you can make $100 or so tomorrow or the next day. I don't mind it. Got to swear off the 0-day SPX sauce after today.
Say what?
The SPX 0-day sauce.
Oh, yeah.
Yeah. I mean, it's tough when these markets want to rebound, it feels like, and the market is only giving us a 30-point range. It's kind of that weird period where it's like, same thing when Trump was talking, he was supposed to talk, and the market was only pricing like a 50-point move.
Mm-hmm.
On a press conference where he could say anything and shake these markets. It's like, yeah, right now it's going to be tough. and it's just going to be more narrow ranges as the vol continues to collapse here. But you never know. Maybe you get a little chop for the next couple days. The key to those trades is just keeping your risks so small to where you can just do them every day and let the number of occurrences really play out.
For sure, that's the way to do it.
If you're going to do it, yeah.
Not one where you're trying to hit big. Swinging for the fences.
Yeah. I'm curious if you three have any yield for income ideas, please. Yield for income.
I mean, I'll be honest, I don't really trade like that.
Yeah. I mean, SPX box spreads are popular if you're just trying to capture interest rates. There's also interest rates trades, if that's what you're referring to. But I kind of see like this MES position as a core position that I expect to make money over the course of a year, or at least give me revenue on my risk with short premium. And then depending on where the market is going to basically change your P&L profile. But if you assume that with this strangle here, it's April and we've collected $2,300 on one contract in MES. So at the end of the year, I'll probably have $4,000, maybe $5,000 in premium, somewhere around there. If we were to just extrapolate this and play it out. So I'm going to have 5K, let's call it, in premium, and then wherever my strikes are relative to the market is going to determine what my P&L is. But I know that because it's an undefined risk short premium trade in a sector like S&P 500 or the NASDAQ, you're going to have credit that you've collected along the way, and that's kind of your revenue on risk. And then however you're manipulating that, for me, it's no upside risk. I want to just lean bullish the whole time. That could be good or it could be bad if the market sells off aggressively and never comes back in your time period. But at the end of the day, you're still picking up revenue on risk, and it's an easier thing to manage. Even through this whole thing, it's felt way easier to manage than any equity I've sold a strangle on. So I think there's something to that too.
Yeah, I mean, I don't really trade like that, but I like you said, like these are those type of trades, whether it's that or whether it's the SLV strangle, or harvesting the call and IBIT when you're long stock. Like those are the only ways that I'm kind of manufacture that. I don't really do anything as far as like yield per se.
Yeah,
I don't have like a trade that I'm just collecting something other than those strangles / straddles year on year. Like I'm going further out and like looking to collect. Those are the only ways I do it.
Yeah. Yeah, and that's really like, other than box spreads and SPX where you're capturing the interest rate, that's basically it. Calendar on Netflix for the 85 strike and 105 strike for Friday. Could work. 10-day, 3-day, I assume you're looking at. Ooh, so you're looking at a double. 85, 105? Is that what I'm... 85, 105? 85 is basically worthless. So maybe you've got something else. Well, let us know. TTWO?
Take two.
Thoughts about building some long exposure ahead of the confirmation of the GTA release date.
GTA. It's been so long.
I love that it's back.
Longer.
It's been so long. I don't even remember when that last one came out.
It's been a while.
Yeah.
Yeah, long the 230 call in Jan, short the 230 in SEP.
First of all, is Vol already pricing that in? Yeah, Jan. Yeah, clearly something's...
Yeah, you've got earnings coming up, priced into this 31-day cycle, and then you can see it kind of tails off, and then you do have something priced into this. There's a slight bump in implied volatility going from SEP to DECE, and then it peaks in Jan and then drops back off. So, yeah, there is something priced in here in terms of a little bit of implied volatility, but You're doing a 230 calendar spread for $10. Long term, I don't mind it. It is kind of close to the current price, but either way, if you do end up getting that rally, and we can do the same thing here. We won't change implied volatility, but let's just look at like the end of May. This could be a $200 winner if you get a move to 230, which is 20% return on debit paid, which is pretty nice. So yeah, I don't mind it. And then if it sells off, I think an interesting thing you can consider is bringing this 230 call into like the earnings announcement cycle. You pay a debit to do that, but if you start with a calendar, there's not much you can do to manage it other than buying back the short call and moving it around. Okay, Netflix was an 85-cent debit.
Oh.
Not the 85-cent. 85 strike. Yeah, 105 strike for Friday and May 16th. May 15th. 105, May.
I mean, you need the stock to just sit.
Yeah, you need this thing to chill. I think it's okay. I like to lean directional with these a little bit. So if like you're playing for a slight downside move, I might just go to the 105, 100 diagonal spread, which will give you $200 of profit to the downside. Or if you wanted to make it cheaper, you could just go to the 100, somewhere around there. Like anywhere between the 105 and 100 is where I'd go, just because the expected move is down to 100. So yeah, I would rather do something like this where you buy it for $1, and if you do get a downside move, you can make a lot more on your debit paid, and if it rallies, you don't lose as much. So that's just me. But yeah, anywhere in that range I think is okay if you're playing for an inside move to the downside in Netflix. A couple minutes left here. Do you have any futures predictions? What's gonna move? What's moving next? If crude oil is no longer the story, what's the next story?
I mean, I really like copper. I'm still long copper. I've been long copper all year, just rolling the put spreads, the short put spreads on it. I mean, I like it. I got to roll this put spread that I'm in again. I just rolled it 2 weeks ago. We've had a good little rally here. So yeah, I think this is going to keep performing pretty well.
Yeah, recovering after this thing. Remember this? Oof. The one-day Reaper move. But yeah, this one's interesting. We've been trading this somewhat periodically with the 6-strike calendar spreads. Now we're at it or above it. But same story here. Just keep your eye on these different contracts. If you're trading calendar diagonals, it's got to be June, May, because both of those settle to the end contract. These other ones are different contract specs entirely. So yeah, definitely interesting. Nice to see that recovery, and we'll see where it goes from here.
Shout out to whoever mentioned that Amazon trade like early last week or whatever. I think it was early last week. Somebody mentioned the idea of like a diagonal, I think. Holy cow.
Oh yeah.
This thing has really run like amazing.
Straight to 250.
I'm curious. Let me see if any of the Max 7 names are positive year to date yet. Some of them might be closing in on it.
It's just so funny.
Yeah.
These are just meme stocks at $1 trillion valuations.
Look at that. Nvidia's positive, Google's positive, Apple is still negative, Microsoft's still negative, but pretty much everybody else.
Yeah. What a recovery here. And they have earnings beginning of May. That's going to be crazy. 20-point implied move right now, but a lot of that's sold some time value. We'll see where it ends up, but it'll probably be 15 points, something like that. But Amazon might be at 300 by then. Crazy.
Yeah.
But yeah.
I mean, Tesla and Nvidia, did I say that? Tesla and Microsoft Apple are the only ones that are negative.
Yeah. Tesla's going to be interesting with SpaceX. The pending IPO. But yeah, Microsoft, love to see it. I'm going to let these rip because this is another core delta position where I just want as much bullish delta as I can. Still in a responsible, defined risk way, but I'm not going to close these considering we've been waiting a long time for this kind of rally. And if we get a move up to 450, like these are going to be big winners.
Like sounds like Jordan Belfort. He's like, you know what? I'm not leaving.
I'm not leaving.
I'm not leaving.
I need to watch that movie. Haven't seen it in so long. Yes. That's it for us. Thanks for tuning in. If you have any further questions, you can find us on Twitter. I'm at Trader Mikey B. Jamal's at Jamal Chandler. Thomas is at FX Westwater. But yeah, crazy day today. Endless strength everywhere. We'll see if it holds through the rest of the day and the rest of the week for that matter. But stay tuned. We got plenty more content coming your way on the YouTube channel as well as tastylive.com. We'll see you same time, same place, 11 a.m. Central tomorrow. Peace.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that. You guys have the most unbelievable customer service in the business.
Email support, call support, get through right away.
They actively listen to the customers to make changes to the platform to make it better.
In fact, I've never seen anything like it in any corporation in the United States.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Step into the futures arena with Tasty Trade's active trader. Multiple ladders, hundreds of indicators, precision control. From micro gold to NASDAQ, all CME one click.
Pay for backtesting? Nah, trade that capital instead. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Check out Tasty Trade.
What is going on, everybody, and welcome back to Risk and Reward. The market is insane. We are just pushing all-time highs. We care not for uncertainty. We care not for frivolous things like conflict, like the lack of a resolution. It's just this train keeps on rolling. I'm joined as always by my wonderful co-host Daryl. Bill, what's going on?
Pretty good. Yeah, no, it's been pretty crazy. These days are kind of starting to mesh together. I thought today was Wednesday. I was like, no, today's Tuesday. So, Taco Tuesday kind of day. We got tacos pretty much all last week. So shout out to Trump. I mean, he's sending this market back to all-time highs. That's good or bad depending on how you're positioned, but nonetheless, a lot of volatility, a lot of uncertainty. I'm pretty excited to see what this resolution is going to be with all the geopolitical tensions. So, although it's been quite a roller coaster with what the market is doing, given the level of lack of clarity, I guess you could put it that way, the lack of clarity that we've gotten with the market ripping like we've seen it doing, it's an interesting spot because I think when we get a resolution, we might see another spike in volatility, whether that's going to poke through all-time highs or pull back. Nonetheless, something may happen here. what a market we're trading right now. But I'm doing well, brother. Let us know what you're looking at. Let us know what you're trading. What about you? How you doing?
I'm doing good. It's just this market is insane. I can't believe we're chasing these levels. I'm going to wind up kicking myself for not keeping my super long bias on a little bit longer, but we still do have a generally long lean to the portfolio, which coincides with a lot of green going on today. So I can't complain. But I got something I want to talk about.
Get it off your chest.
Because,
What's going on?
Because we got
what's on your mind?
We got fugazi stuff happening right now.
Yeah.
So we can jump into the Tasty platform as we talk about this. News has broken today that United Airlines CEO Scott Kirby is flirting with the idea of a merger with American.
Okay, no way. So, okay, that was a spoonful.
Yes.
That was a mouthful, okay.
So they're talking about United Airlines merging with American Airlines. American has reacted aggressively to this news, trading up about 8% today. This cannot happen, or we have completely lost the plot.
Yeah.
Because how in the world could Spirit and JetBlue be blocked for antitrust concerns? We're going to let the two biggest American airlines merge with one another. They have like 50% market share between the two of them. This would actually be an antitrust thing. The Spirit JetBlue thing, you could say, oh, well, it's the budget market is different from the commercial airline market. There is no question that this would be an antitrust thing if we get a tie-up between United and American.
I think all you can do in times like this is really just call it out.
Yes.
Right. I think whenever you try to pull those hypocritical moves, right? Paul Pierce can't go to the Lakers with Kobe. All those kind of things. Right. It's like there's usually some type of business, political reasons going on. Whatever the reason might be, and I think all you can do is call it out. So I love that you're bringing it to the forefront. I didn't even realize that's a way larger merger than Spirit and Frontier, let alone United and Airlines. So that's pretty crazy.
And it's worth noting also that Kirby, the United CEO, his background is with American Airlines.
Oh, no way.
He worked up the ranks at American
and then he went to
jumped
United?
over to United once he was pretty high up, and then worked his way up to CEO there.
Okay.
So he also has ties there, just to even throw more fuel onto the fire here of reasons that this could possibly be unethical.
He definitely lubed up that relationship with them, I guess you could put it.
Yes. I'm sure he's still got friends there and everything. So all is to say, I've gotten short American off this move, and very aggressively so. This strikes me totally as a move that everybody gets excited because this news breaks, and I think it will literally take 24 hours before people are like, wait, there's no way. There's no way this can actually happen. So I have reflected that sentiment with a trade. I just threw this on as we were sitting in studio before we came on air. I'm down one tick now. I've gotten a 12.5-12 short call vertical expiring Friday. So 3 DTE, need it below 12, which would be a 12-cent move to the downside. I'm straddling money in this here. This was just a slightly worse than one-to-one risk profile. It was per contract 28 notional buying power for 21 of credit. So I mean, I guess considerably worse than one-to-one. It's like 30% worse than one-to-one. But only need a 12-cent move to the downside, and I'm not surprised if we literally fill this entire gap down by Friday. I think that people will be very quick to say, wait a second. There's no way that this happens. I think the efficient market lands on that conclusion. So just need the 12-cent move. I thought about being even more aggressive for like a 4-to-1 risk profile and putting this around 11.50, but that seemed like a bit too aggressive. We literally would just need the full gap fill to make that happen by Friday. So I decided that for pretty close to 1-to-1, I would go ahead and take the 12.5-12. But I do have 8 of them because they were so cheap, just making that my usual scale of position size based on the buying power that I'm putting in. So can scale myself out over the next 3 days if I so choose. But I think that this is just noise. I'm gonna buy the news and sell the news in this particular situation. So I like that. I suppose I just am selling the news, getting short at this time. But
what was United up to again? I forget.
United up also, not nearly as pronounced as American, and continuing to climb a little bit, but they're up about 3%. American opened up 9% this morning. So insane move. Jared, couldn't agree more. Zero delta chance of AA and United being allowed to merge. Yeah, absolutely. Yeah, good. I don't know if you were trying to do it, but it's a good pun working a delta in there as well. But yeah, this is crap. I tell you, CRAP crap is what this is. So I'm
They're really trying to pull a fast one.
Yeah, there's no way this could ever happen, and I think the efficient market will quickly realize that there's no way this could ever happen, and that there is no way that it justifies a 8% increase in American's valuation on the potential of this 0% chance event of occurring. And if it is allowed to occur, we've lost the plot. Like I said, there's no way I mean, I guess Spirit would probably be doing backflips if this was allowed to happen, because then they could just merge with Frontier or JetBlue or whoever they want once the precedent is set. But I see no way that this actually happens. So that's sort of my major conviction for the day. Is I am quite aggressively short American short time horizon.
We've lost the plot on quite a handful of underlyings this year. I feel like we lost the plot on some metals, we lost the plot on oil, we lost the plot on indices for a little bit. We're back in business now, but it's been a ride.
Indeed. Tech stocks continue to fly. Meta logging another great day. Don't look now, but this Meta position I got going on might work out. I still have this 710, 715
Yeah, well, you might be in.
at 65 DTE, and we're chasing it down. And 65 days suddenly seems like a long time. When it was 68, whatever it was, 70 days seemed like a pretty short time when we were down here below 600 at this 570 level. It's like, oh man, you need $150 in 70 days. That's pretty insane. But we ripped from the mid 570s up over 660 in less than a week, and suddenly these are looking like
back in business,
way back on the dance floor.
On the dance floor.
So feeling good there. This was a big red bar not that long ago, so happy to see that flipping over into the green finally. Intel.
Those trades, real quick, those trades are almost the best. Like, even if it ends break even, that almost feels better than a green trade sometimes. Those, you know what I'm saying? So
for sure, and we have worked to $7 green on that 710.
No, we're in there.
Position now.
We're in there.
Yeah,
and I mean we're not even at all-time highs yet on the indices. So we could creep up a little bit more there.
Yeah, so plenty of room left, and I said the whole time the reason I'm still holding it is because Meta moves like this. You get these $150 swings just seemingly out of nowhere all of a sudden. So I knew that there was always a chance, but if we get it to come to fruition right here in the 11th hour, I would be very pleased, because these were, I think, north of 200 days, certainly north of 180 when I first put them on. So feeling good about that. I have now three that I've added the American, but I have two positions that are pretty tight here. Intel and SanDisk, both of these shorts. SanDisk in a weird spot. I guess we can talk about that first. It took a gap up into a run down this morning, and then is taken some of the gains back. Really weird spot for SanDisk, but we did catch some vol expansion on the call side, so these are suddenly looking just marginally worse than they were yesterday. With 3DTE, I think this thing is dead in the water, but because we're not any worse than we were 24 hours ago, I'm going to continue holding this for the time being, closely monitoring the SanDisk situation, and just seeing if this red candle indicates that the top might be in, and we could get a gap down into tomorrow, and a more favorable exit could present itself. But it is becoming a little bit sticky. Intel, I'm a little bit more confident in. This was expressing the exact same sentiment as SanDisk, and this candle, this bearish engulfing, gives me much more confidence that the top might be in. I just don't know if I'm going to run out of time. I have a 59.58 on here, so from a chart angle, 58 is like this level here. So would need a considerable move down. I would basically need this candle to happen again for the next 2 days in a row, but seems increasingly possible with the insanely high levels that Intel was at. And it's not like you even have to test these previous January highs to get down there. So feeling a little better about that. But if I'm being real, probably looking at two losers on these. If one of these winds up getting where I need it to by expiration, I would consider that to be a massive success.
100%. I know, kind of similar to SanDisk the other day, MU's putting in another massive day to the upside, kind of flirting with another all-time high on Micron over here too. So once again, these storage companies, these companies are, I'm bullish on them long term, but in the short term, I think they've got a little bit ahead of themselves. Got a little bit more time on Micron, 31 days, but these things are volatile. After they pull back, just ripping back to the highs. So even Micron today.
Yeah, Micron, and this is probably why SanDisk isn't able to hold on to the losses it was trying to put in on the day. You can see,
and vice versa. The other day, Micron was barely able to hang on to the losses that I put in because SanDisk was then making. I'm just like, man, cousins, like you were saying with their earnings again, it can be a weird spot trading both of those at the same time.
Yeah, absolutely. And this SanDisk, when we got the break, we were testing 900 earlier today, and I was like, oh, this is it. Like this is what I need. If we get the break below 900, I think this thing will sink. But really has recovered a lot off those levels and continues to churn upward intraday right now. So a little bit scary there. Micron, why you got to do this to me? I'm not even trading you. I'm not short Micron. I don't got any beef with Micron. Why's Micron got beef with me?
It's because we're affiliated. And I got beef with Micron. I got some short deltas on in there, some out of the money call spreads. Now I sold the 430, $10 wide, collected about, $350, something like that in there. So we got some time on it. We'll be patient.
Yeah, 430 is close. 430 is close.
Yeah.
Much closer than my SanDisk. What is this, 750? Yeah.
I think 430 the break even's around 434-ish.
750 a ways away. 750 seemed like a much more reasonable level right here when I first put this on at 850. But
yeah,
we'll see if we can't get either one of those home. SanDisk $1,000 butterfly 3DG. Oh, we are very oppo. Well, Scotty, I hope it doesn't land. I hope it doesn't middle us. I hope we don't get a Polish middle between the two of us and we both lose. What about a bearish play on car? Oh, Avis. Whoa. I had not seen this. Yes, I would love a bearish play. I don't need to know anything else. Avis Rent-A-Car should not be doing this. Done. You've sold me. Quickest anybody's ever sold me on a trade.
How have I not seen this pop up?
I'm sure there's really good call side premium here as well. This does seem to be running out of steam a little bit. I don't know if it's going to be able to make a new high here. What happened? Can somebody tell me what happened with this? Is this a meme stock right now? That must be the only explanation. Avis Rent-A-Car has gone 300% in the last 3 weeks. What did they do? Anyway, I've never rented a car from Avis, so that's all the real justification that I need here. Let's go 10 days. I'm tempted to go even tighter, but this is a little bit sketchy. Then maybe 350. How aggressive can we get here? That's 2-to-1. If we expand these legs out a little bit, I'm not really worried about getting middled. That's basically the same difference. 350, 250, just test the 350 level. That's not as good. This is just really wide anyway. I don't even know.
Selling a few calls here on SPX for May. The VIX is at least somewhat still elevated. Yeah, May sounds a little bit better, I'd say, Jared. For me on my end, I'm going to be a little bit more hands-off when it comes down to the indices for right now. I think I got a decent amount of deltas on in there that we'll try and manage, but it crossed my mind today, and then I was like, I'll be patient. We also threw on Micron too, so we'll be patient with managing some of these deltas.
This is ridiculous.
Yeah. Car chart makes 0 sense. I mean,
one standard deviation is $130.
Yeah, I'm surprised I haven't seen a headline of car over the last couple of days. Kind of funny. I'm seeing it at its highs now.
I saw headlines this morning. I mean, I saw it like on the fast movers list, but I just didn't even pay it any mind. I had no idea it was to this degree.
I'm curious, what's the float on that? Market cap of 10 billion. So I mean, it's tiny. It has a tiny market cap. I'm curious what the float is.
This is ridiculous.
Anybody know what the float is? I'll look it up over here
this
too.
Is a short squeeze, probably a short squeeze. Y'all might have convinced me to go bearish here too, likely with defined risk. Yeah.
I wonder if you could pull accurate data on ChatGPT. Like, what is the float on car? And I wonder, like, where ChatGPT is going to pull that float. Because I know when you look on different services like Yahoo Finance, Benzinga, whatever service you're using, sometimes they'll show kind of different numbers. You know what I mean? So let's see what the float is, because the float has to be pretty small for it to move this much. I mean, how many shares is it traded on the day? About 3.5. It's only traded 3.5 million shares, and it's trading at 368 right now.
These spreads are just ridiculous across the board. I mean, no matter how you choose to attack this, you're going to be waiting for a fill or just have to do something ugly.
Yeah, massive short squeeze.
I mean, even if you went with the nakeds, it's like these are all, I mean, way too expensive for me for one thing, but I mean, these are $800 wide.
From what I'm seeing, it's saying that the public float is 64 to 66 million shares. So 64 to 66 million shares available for the public to trade, which is interesting because today's only trading 3.5 million shares. That's not even that's a fraction of the float.
I mean, there's $1,000 wide handles, $150 out of the money. I mean, this is ridiculous. Liquidity is rough. Yeah. No kidding. Yeah, massive short squeeze. How about that? All right, well, those shorts didn't run out of money. So they're probably getting short here again. I mean, I'm tempted to just go naked put, but these are so expensive. I don't know where I'd even have to go to get anything reasonable, like 170 or something. Which, I mean, it would just be a gamma play, but I'm not going to do that this tight either. Car is untradeable. I'm thinking the same thing. I would love to do something to get short here, but I just don't see a way to do it. What if I just short a share? What if I just go super...
It may be hard to borrow.
Super old school boring. I'm sure it is. Actually. That's a good point.
The contracts are looking pretty...
Screw it, man. We're going to get short a share. One share. there's like maybe $150 upside to be had on one share. So why not? Why reinvent the wheel? I can't do it. Even then, I don't got the buying power for that. I'm not gonna risk my car and margin to trade this stupid rent-a-car company. What should I even do? Sold the 450s. Sold calls for May. 60 days out. What's going on, Ranch? Good to see you. 60 days out. Yeah, I mean, is there more liquidity out there? If I could find the liquidity anywhere, that's actually a good point. I don't even need to go tight. What could they possibly say in this earnings call to make this go higher? Nothing. There is nothing that they could say. If they could say, we beat everything by 25% and we're raising guidance by 50% and this goes down. I mean, this is preposterous. Yeah, is there more liquidity out here at 65 DTE? I mean, a little tiny bit.
Yeah, Ryan, those hard to borrow stocks, they'll give you an extra fee and extra buying power. Just a lot of craziness to try and short anything hard to borrow, which this one's pretty interesting because typically a lot of those hard to borrow stocks are typically, a ton of them are like under $10, $20. And I mean, this one was trading at around, $70 not too long ago, trading at $360 now, so.
One standard deviation on the 60-day is literally 67% of the share price.
I'm seeing a lot of gains today, mostly because of my long positions in IO and Q, doing very well there. Yeah, that's nice. I mostly had short delta on the Qs, so I wasn't too diversified. I wasn't leaning anything too aggressive, but we had on Micron and QQQ. Would be nice to have on the IO and Q as well, Ranch. I don't think I've looked at that in a little while. I think that's the semiconductors. Have you looked at the semiconductor stocks as of late?
I don't. ChatGPT says Avis is a short squeeze meme stock, endless cutting prices, sell. Yeah, I'll figure out a car trade later. I must get short there, but I don't need to do all the mental gymnastics here. I'll post something in the follow feed in a little bit. That's incredible. Yeah, I saw Iron also having a great day today. Great couple of days. I don't know if anybody's involved with this, but it was this caught my eye on the fast movers list as well today.
I mean, what's not doing so hot today?
Question.
On that high options volume list. Curious.
I mean, this is all really just good stuff as I sit here and look at this. I know Oracle caught a giant move. Yeah, giving a little bit of those gains back right now. Palantir I see over there doing okay, just sort of continuing the repricing stuff. Microsoft doing well.
Everything up on the day.
Yeah, I mean, you're hard pressed to find anything that's doing super poorly.
See, FSLY, ASTS, those are some cheaper underlyings. It's looking like most stocks that are above like $100, $150 are doing pretty well, not as worse. But FSLY is down 13%. And that's the lowest on the entire list, 13% on the day.
ASTS is one of these stocks where you're like, oh, 10%. Whatever. That's a fairly normal day. This thing moves like crazy all the time. And yeah, FSLY is one. I don't know if I've ever traded this before. I have dabbled in ASTS, but I don't think I've ever touched this.
The hell am I looking at?
Those
looks like some pretty crappy fundamentals.
We could be hunting this gap right now, honestly.
What kind of company is that?
I don't know.
Fastly.
If anybody knows, feel free to fill me in.
Yeah, those fundamentals look pretty bad. Something tech, not even sure. Also, HUT treated me very well. I don't think we've looked like that in a little bit.
What is HUT?
Yeah, at its highs.
HUT 8 Corp.
At its highs. Honestly, if you're just blindly long, you're chilling.
Here's a business proposition I have. I tweeted this out the other day. C3 AI owns the ticker AI, and they're like a $1.3 billion company. They should be calling OpenAI every day right now and saying, we want $800 million and we'll give you the ticker AI for when you IPO.
Right.
And they can even get a bidding war going between Anthropic and OpenAI.
Yeah.
You're a $1.3 billion company. There is legit, you could swing your market cap up by 50%, and then you just pivot over to CCC AI, which nobody has.
Yeah.
Make me the CEO of this company. I will figure this out. Put me in for a week. I'll get this deal done. I'll get out. I want a bunch of shares. But yeah, it doesn't make any sense. You're this tiny little company. You're talking about $1 trillion IPOs with OpenAI and Anthropic. They got $500 million to throw around to get this goated ticker. What are they going to do? What's OpenAI going to do for real? Open is Open Door, as we all know. OpenAI or something. I mean, what what are you doing? So yeah, that's me. Maybe GPT. Nope, gone. ETF has it.
So was it? I think I said semiconductor.
LLM?
You're right. Quantum computing.
It could do LLM.
LLM.
Anyway, soapbox over on the airlines car. That's disgusting. I'd love to find a way to trade that, but I just don't know. I don't know how you even begin to attack this right now. It's making higher highs right now too. I'm happy I didn't get filled 5 minutes ago when I was thinking about it. But crazy town. Car seems to be closing only. That wouldn't surprise me. Gross. Anyway, that's all the action from me. Well, my highest conviction is AAL, which is burning me right now, but it's only moved 5 cents. Just swing that back down 20 cents. We're chilling. Anyway, we're at our time here. That was a long, we kept ourselves occupied. Snuck up on me. OPAI? OpenA? Yeah, I mean, LLM seems most attractive to me if I'm OpenAI. Or just lobby and steal GPT from the ETF and make them do something else, which you might be able to do. But anyway, yeah, I guess that's all the time that we have. You got anything top of mind?
Nope, nothing top of mind.
All right. Well, that's all we'll have for today. Thanks so much, everybody, for coming to hang out with us. We really appreciate you taking the time out of your day. We never take it for granted. Errol and I'll be back here tomorrow, same time, same place, 12 o'clock noon at Central Standard Time. Be sure to stay tuned for Futures Power Hour coming up next. See you guys next time.
In the money. It seems pretty easy to understand. If I'm in the money, I must be profitable, right? Not quite. In the money is in reference to the option's strike price relative to the current price of the stock. An in the money option is an option which has intrinsic value. For a call option, that represents an option with a strike lower than the current stock price. For a put option, that represents an option with a strike higher than the current stock price. Being in the money is a good thing for long options. It's not so good for short options.
We wanted to call in because recently, some traders may have known there was some crazy activity in the SPX, and for some reason they were stopped out 200 or 300%. And what happened, unbeknownst to us, is the trade desk just emailed us and said these trades have been busted, and you're not going to have to pay it. It saved us about $10,000. And then Marty calls us this morning and says, I just want to explain to you guys what a trade bust is. When you really get down into the nitty gritty and you're in the foxhole and things are going bad, when you can reach out to the trade desk and you talk to someone that you've spoken with before who understands your account and the way you trade, that is a feature of Tasty Trade, which I think you guys need to emphasize more, because it certainly has meant a lot to us. It saved us a lot of money, and it's taught us how to trade a lot better, and that's really helped a lot.
Well, thank you.
This was not a paid, you're not getting paid for this advertisement.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Step into the futures arena with Tasty Trade's active trader. Multiple ladders, hundreds of indicators, precision control. From micro gold to NASDAQ, all CME one click.
Pay for back testing? No. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial in the DTE, and stack the legs. See what survives. Check out Tasty Trade today.
We're back. It's still Tuesday, April 14th, 2026. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Jamal Chandler. Jamal, 7K. That wasn't on my bingo card.
Yeah, wow. I mean, it was not on the bingo card and not this fast, but yet and still here we are. And, I mean, once it got going, you kind of knew we'd be here.
The market's going. 7K in square sight for the S&P 500 right now. The NASDAQ rallying, the Russell rallying. It's the end of the Iran war rally the past few days. Gold, silver up, oil down, dollar down, yields down, stocks on highs. It's everything that a bull could have dreamed of.
Yeah, right?
Dreamed of, maybe not participated in. But there are legitimately good signs here because we're starting to see the market behave in a manner now after what's been a torrent week of rallying in a manner that it doesn't usually act when things are going poorly for the stock market over the course of the rest of the year. Josh, what we're seeing is not something you see in the bad years, as one might say, as we go to the title here. And as we often do, we go to some stats from friend of the show, Ryan Detrick over at Carson Research. 2 slides here today, Jamal. What happens when the S&P 500 is up more than 7% for 7 days in a row? That's not something that happens that often, but when it does, the return profile for the market is fairly strong. 1 month, 3 months, 6 months, 12 months. It's higher in all cases. A quick correction this morning on, let me explain, I said the 6-month return is greater than 10%. I misspoke. It's the 3-month return that is greater than 10%. And technically the 6-month is too at 14.4. But when we're seeing this happen, Jamal, it's usually something that happens in a good year. These are the past 20 instances in which the market has had 7-day or more winning streaks. Forget the percentage return during that time horizon. Have we seen 7 up days in a row or more? You notice something about this on the left-hand column here, the years. You have 2026, 25, 24, not 2022, the year of the Russian invasion of Ukraine, a year when the market fell until October. 23, so 21, 20, 19, 2018. 2018 was another year where we didn't have a 7-in-a-row rally. That was a year where the market collapsed in the fourth quarter. And but for the plunge protection team, Jamal, we wouldn't have had that year-saving rally between Christmas and New Year's. And then you see around the global financial crisis, 7, 8, 9, 10, 11, 12, no 7-day rallies. So this is just not the kind of thing, the market's behaving in a manner that you don't just see because everyone was short. CTAs were short and need to cover, and everyone was, long the VIX and VIXpirations around the corner. Historically, when this type of price action occurs, it is not the end of a move. It's still a lot left on the meat, still a lot of meat left on the bone, I should say.
Mm-hmm. Yeah, I mean, this is bullishness begets more bullishness. Essentially, is what this is saying, right? And that seems to make sense. I mean, even bigger than that, though, when you look at the most recent rally, I mean, once we saw the VIX futures complex go into contango, I think that was your kind of sign that things were about to change a little bit. Nevertheless, it's hard to jump on board when you have these rallies, right? That's why it's hard to do. I mean, I've been in it throughout in different ways, and even then, trying not to sort of chop my legs off as we got to 6,800 and 6,900, right? I think that's the hard part about all of this. But 7 days in a row, when it doesn't happen often, that's one of those things that kind of sort of piques your interest. I remember seeing this, and I was like, yeah, I mean, this is probably meaning we're going to keep going higher. When this came out on the 9th, I remember seeing this chart.
It also sets some interesting psychology, and I'm curious about your take on it, Jamal. But as we saw last March and April, the folks who were dumping stocks for most of the month of March and into early April weren't retail traders. They were institutional investors. And one of the tent poles of why I was of the mindset that the market was going to rally for portions of last year was there was a chase. If you're a fund manager, as I often say, you can't be long the market. Well, you can be long the market when the market goes down and be wrong and lose money. That's fine. But you can't be short the market or not have long exposure when the market rips 10% off the lows. And it sets up that psychology where you need to kind of chase it to make up for not having the right positions earlier in the year. And that's kind of a deja vu we're in right now, where retail held firm. They may have moved away from single stock trading. We know from that the JP Morgan chart we shared a few weeks ago, single stock trading as a percent of the S&P 500 trading volume went from about 14% or so, 15% in the fall to 8% in March, which was in line with the historic post-COVID norm. But people weren't leaving the market. They were trading the index funds. They were moving into S&P and VU and QQQs and whatnot. And so by and large, if you were a trader over the past month who shifted away from single stocks and just went buy and hold in the S&P, we're back where we were prior to the March open. And so we're eclipsing those levels now. So the folks who stood pat and bought the dip once again have been rewarded here, Jamal. All the institutional traders, when you look at the top performing hedge funds on Bloomberg, it's not this.
Yeah.
And so new psychology is emerging. 7,000, the S&P, it's back. I'm not properly positioned for this.
So, I mean, I'm somebody who's been trading this all the time. You know me, I trade in and out of things, but you're more of a sort of waiting for the trend to be right and get in. Like you said, you haven't been in most of this. I'm curious about your take on this. How do you feel now? Is it too far too fast, or is it this is the right time to get in and we're going to see some new highs?
For the sake of intellectual consistency, when I've been long and the market's going up and people talking to me are short and they say, this is just too far too fast, Chris, I say, according to who? Seems right by me. So I'm not going to pretend that this is too far too fast.
So you're back in?
It has blown. No, I'm still leaning directionally neutral. I still got my 7,100 short strike on my iron condor that I've been trading, a second leg of it that I put back on a few weeks ago. It worked out throughout the month of March. Right now, not working out so hot. I mean, we haven't tested the short strikes yet, but this is the kind of move where, given now that we've had 7 days of accumulation in the rearview mirror, even the 1 month stat, Jamal, still higher yet. So I'm getting a little checking my priors as always, and it's a 5-minute macro market. So you have to always reconsider your view. I just haven't latched on long, and maybe I haven't done that quick enough. I still don't want to chase, but I said that, at 67.90 on Sunday night. And if I had just decided to buy at the 50-day moving average because the 1 week was above the 50-day and it's above the 1 month and blah, 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 I'm letting my macro brain do too much thinking here.
Yeah, I mean, I'm kind of surprised. When Nick and I were on last call yesterday, I just assumed by either the end of yesterday or sometime today, you would be bullish again. I guess I'm shocked. I don't know as well.
I want to know. So I guess, maybe this is me talking my book, and it probably is. For me, the best path forward would be a small pullback, and maybe it's because we get expiration here.
Mm-hmm. Yeah.
Right. Maybe this is all of that. Were you buying vol at the turn in March in the last expiration? Probably. Are you selling it now? Yeah, probably. So there's probably a greater supply of vol coming onto the market than there are people willing to absorb it. Lower vol, higher stock prices. It's all the same thing, at least in the short term. You could see that dip here in VIX futures. We got down to basically the floor where we have been for the entirety of the year, 2010. That's the low for 2026 in the VXK contract. And today, Jamal, we get down to 2015. So, right now, the modus operandi is buy on dips. If you're just looking at it from a charting perspective, you want to ignore the fact that the American Farm Bureau group today put out a survey result that was conducted last week. 70% of farmers in this country don't have enough fertilizer for the sowing season. That seems problematic, but who the hell cares when CTAs need to cover $30 billion worth of shorts?
Yeah. I've tried to trade this market in that I tried to accumulate some longs as things were getting scary. I feel like, that's just one of those ways of trying to be long without getting too overexposed. I also tried to be somewhat neutral and mostly trade vol against it. As we started to move higher, and again, I took pain on some of those longs, right? And then sometimes we had big moves as we had during this whole time period, and I was able to close a couple out at times. Some of them I held long. Microsoft is one of them that I have kind of held long the whole entire time while I've struggled on it. There's been others that I was able to get out and close out even earlier. Point being is I've had longs and I've that are mostly tied to the market, high beta to the market, and I've mostly kept them while adding shorts slowly throughout time. And I do mean slowly. Like there were times where we got to 6,800. I wanted to layer in short to the market. But again, it was more of like, I felt like once we started to run, and who knows when that run starts, right? But like when you look back across times at very volatile moments, and again, the end of 2008 and the end of COVID are not the same as this, but it's just a small little case study. When you look at the end of those moments, the March 9th bottom in the S&P 500 in 2009, for the couple of months where we started to rally, not even a couple of months, a month when we started to rally, it didn't feel like we were going to rally. It didn't feel like we were going to make inroads on the way back. And so the tendency is to want to get short into it, right? And for me, and so I didn't want to get too short into it. So I tried to layer in my shorts slowly along the way in further upside areas of mostly either 6,900 or 7,000. And that's essentially where we are now. And if we don't have a pullback on the other side of tomorrow after VIX expiration, I'm going to close all my shorts, like short call spreads.
That's exactly what I was going to.
I'm totally closing those because that's it.
You. That's it then, right? I mean, if this is not a positioning squeeze in the short term, which again, the futures market does not have the bones in it for a sustained positioning squeeze. But if this is a function of CTAs covering and VIX-piration, then it would stand to reason then tomorrow should be a down day. So if tomorrow is not a down day, then Jamal, and April 17th is options expiry. I think we're going to slice through that like a knife through butter. It's not going to matter. I think it's all about tomorrow.
I also think tomorrow could end up being one of those days where we start the day down and we rally too. I think that's probably even more dangerous than anything because you hold on to shorts and you don't exactly close them, right? Or you're hesitant to because you're like, oh, we become so far so fast. Maybe we go down 60 handles and we start the day down 60 handles. And then you're like, well, maybe we'll be down 70 and then we're only down 55 and then 40. Like that kind of day can transpire too. So, this is
a problem. It's a problem either way. Like 38 days to expiration, when we were sitting at 60, 600. It's like, oh, you're gonna let me sell 500 points in the other direction? Yeah, let's do it.
Yeah.
Short put spread side is good here. I mean, we could actually, if we wanted to take this off, we could take a little winner here. The problem is that there's a short call spread side to this that is now pressing a short strike, which means this is unprofitable. At 45 days to expiration, this is at short 7,200. So does this feel good still? Yeah. Because the market was giving us, at the time, given the volatility profile, we could go 700 points, 800 points in either direction. We got to take that. At a 60% probability of profit, how could you not?
Yeah.
But 60% probability of profit means 40% probability of failure.
Yeah, right.
Yeah, it's great when you string a bunch of those in a row together where you're taking 65, 70, 65, 70, and it's like, nope, wrong. But that happens. You got to push through it. What has me going here is that if I were to think about the short put spread sides of some of these iron condors, and I know we usually don't say, listen, if you go in with a short iron condor, don't take off half of it and then let it keep running, because now you're all of a sudden in a different trade than for the reason that you entered.
Yeah.
Right? Like close out the position, put on a new one here. I'm having trouble getting through that myself because my mindset is, given how much time to expiration there is right now and given where we are sitting at these range highs, it would stand to reason that the short put spread side of something that's at 6,000, 60, how much more is that going to make here? I mean, I could play for theta decay and let this thing just run off entirely. But maybe what I do is I take profit on that. See if I can get a little bit of a pullback here, close out the other side, and then redeploy fresh capital. But even at these levels, Jamal, I think it's worth just quickly mentioning the math on some of those slides that we showed earlier. Given where we stand at the start of the year, the S&P 500 comes into 2026 with an open of 69.52. Okay. 7 days up in a row, over 7% returns for the S&P. If you're thinking about, the next 3 months, a 10% return on top of that, this is a 7,700 market. If you're thinking about 6 months out, we're looking to October now, it's 14% higher. We're talking about an 8,000 S&P 500. If we go to the end of the year, just having done the quick math before the show, that would mean that the market would rally maybe up to 8,400 by December 2026. If this is like an average year, and I know sample sizes aren't huge, Jamal, would the craziest expression of our bullishness, would that be to play for something far out of the money right now?
I like where you're going with this. This is a very interesting idea. I mean, I don't think it would be crazy. It's, 8,000. Wow, end of the year. It's not a crazy idea. Obviously.
When we were saying 7K last year, people I saw the comments. I remember these things.
Kept receipts.
We were saying 7K. Oh my goodness. Yeah, I have that. Little book. When we were talking 7K last year, I remember saying that to Tom and Tony, and they looked at me like I had 10 heads.
Yeah, I know. They tend to do that.
8K. Yeah, but like the difference between 6K and 7K, it's 1,000 points, sure, but 1,000 over 6,000 is a bigger percentage than 1,000 over 7,000, right? We're going from a 16% move to a 14% move, and then like 1,000 over 9,000 is even smaller than that. That's an 11% move. So to get to a 15% gain in the S&P 500 every year, you're going to have to start looking at these bigger and bigger price targets over time, just by nature. So 8,000 seems insane. It's also within the 1 standard deviation move that the market's pricing in right now, even with its deflated volatility profile, with the VIX future sitting near 20. Jamal, the 1 standard deviation move is up to about 8,300, a little bit north of there for the rest of this year. So perhaps that's what I should have been doing this whole time. Instead of talking about chasing for the next 50, 100 points, it's thinking longer term here. Now that we have some of these stats in our back pocket, okay? The market's doing something that it does not do when things are going poorly. In 2022, and my whole thing has been, is this 2003 Iraq or is it 2022 Russia, Ukraine? It's looking more like 2003 Iraq now, given the market's performance. And that's a market that bottomed out 15 days after the war started, down 15.2%. Jamal, we bottomed on March 30th. So we bottomed at a month after the war started in terms of actual trading days. What's the difference between 15 and 19 between friends? I mean, a low is formed in a close enough time window, I suppose. Maybe I'm just playing the retrospective activity of trying to justify why I missed the move, which is psychologically damaging unto itself. But I also want to understand what I did not see to dive in. What was I too strict on? And I know one of the things I was too strict on, Jamal, you and I talk about this often, breadth in the market, in particular, stocks above their 50-day moving or 20-day moving average. So S5TW, we look for 10%. We look for 10%, Jamal, and that was my washout level. We got to a low of 10.13%, and I just didn't. I waited. I didn't buy in. So I'm learning that some of my trading rules that I've been abiding by, which may have served me well for a lot of last year and the year before and the year before that, some of them in this environment, because I've been inflexible or not willing to act quick enough, I've just missed. And that's all you can say about it. You just miss.
Yeah, I for me, that's why I kind of tend to try and layer in slowly, because you just never know what's going to happen. I mean, nobody thought that this would, without even fully being over, without any peace treaty being signed or whatever that may be, nobody thought that the markets would rebound the way that they have. And how can you even imagine that, given everything that was going on? How could you imagine that even still oil being at just a little over 90, that the markets would get back to 7,000? Like, it just didn't comport to what we were seeing. So you may have missed it, but it just doesn't seem that crazy, honestly. And for those reasons, I think that's why I've tried to do little things over time, because when it does happen, that way I try not to miss, you know what I mean? And even on the other side, even as we start to rally higher, I do start to layer into some shorts. I mean, I'm certainly not making as much money as I could have. I am positive, but I'm not making as much money as I could have, because I did start to lay into some shorts for that very reason. I don't know if we're going to reverse. It's hard to say. It doesn't feel like it, but who knows what a one-day reversal of 70 to 100 points looks like and how it happens. I have no clue, man. I mean, there's been such a headline-driven market, Chris. I think that's really what it boils down to. And so it's really been hard to sort of make sense of what the things that we've seen and what's being said versus what's actually happened in the market. That's the real hard part. That being said, you do have my interest on this trade. I mean, look, To see 1,000 points really is it's not crazy to the upside, but it is quite a bit much, I would say. I mean, maybe something like 500 points higher. I mean, how does that look?
The 75 by the end of the year, 7,500, 7,600 short, long call spread is going to, risking 2 to make 3, a little inside there.
Yeah. Those don't look as sexy for sure.
No. And that's why, given the market profile, listen, the whole thing here is I don't like, if you miss a move, I've made this mistake before. I'm sure you have too, Jamal, where you chase.
Oh yeah.
And just for me personally, like when I chase something, it doesn't work out well. So I try to avoid it. And I've set up a garbage scalper. So looking at the market on a day-to-day, an hour-to-hour basis, it just doesn't serve me well. And then perhaps, Jamal, lesson learned here, I've been saying it's a 5-minute macro market, and myself shifting into that headspace has not helped. So lots of reflection here for me as we make our way through the midpoint of April. But this is why I bring up these longer dated calls. I know it's not the typical tasty methodology, 45 and 21 out. But if we're thinking about how we can take advantage of what's clearly a unique set of circumstances here, where the market has behaved in a manner that's consistent with something that only happens in years when bulls are on parade, then maybe it's worth allocating a little bit of portfolio capital in that direction. That way you can ignore some of the short-term noise, because what if this is expiration driven and CTA driven, and tomorrow the market comes in 1% and there's no headline, right? I just know we're going to see people saying like, oh, who knows what? Check poly market.
Right.
Who's insider trading, right? And so just, but you're right. That's the plan, Jamal. Tomorrow, if we get Vixpiration, if we gap open lower and we see the market rallying back, if you're short call spreads, you have any short iron condors on, like get the memo. I'll be getting the memo. I think you will be too.
I definitely will be. Yeah.
There's still more squeeze.
And it's more squeeze, and there's a market that has fundamentally changed at this point. And so whatever type of plays you had prior to the past week and change, I mean, it's time for a new playbook.
Time for a new playbook. 8,000, 8,200. And listen, maybe me doing this would mark the top, but I like the idea of spending $800 of buying power to get upside for a market that would behave average through the end of the year, given what we've seen in terms of the 7 days up, the 7% more, and just 7 days up, generally speaking. Not something that happens during bad years for the market.
It's a cheap upside call. Spread, if you will.
Yeah. And it's like, what is it? A 5-to-1, 6-to-1, 25% probability of profit, risking 840 to make 8,500. Let's see if that gets filled. The Russell is, this has been tough for me too here, but are we reaching an apex? So many of these markets, and this is one of the reasons why I've said not chasing. Look at the inverse head and shoulders measured move, 60,960 in ES. The NASDAQ gives you about 25,980. The Russell's a little bit higher, up at 2742. None of these are on the other side of the all-time highs. So I could just see a little bit of technical exhaustion here. It's just what a perfect coincidence that right as we get into VIX expiration, the bottoming targets are hit. And so all these short-term traders who have been pushing up to these levels, playing the bottom, they have no more reason to be long. I hope my spidey sense isn't off. I don't want to see my short iron condors. My investing's been great. I haven't sold a single thing, right? Like the investing part of my portfolio is fine. I'm not retiring tomorrow. You think I'm giving up my $88 cost basis in Eli Lilly? Are you out of your mind?
Right.
No, right? The trading stuff has been
I mean, look, man, this is the hard part about a headline-driven market. It's hard to exactly figure out what you want to do, how you want to be positioned, right? I mean, definitely fielded a ton of emails recently about like different positioning and what to expect. Look, nobody knows. I mean, most true traders are surprised that we've gotten back to 7,000. I mean, yeah, given the last week, you kind of felt that we were heading here, but we're still like, we're saying it like we're surprised because there was so much negative news. There was so much bad news. And there were so many different market internals that just did not look right. For those of us who follow the VIX, though, we were the first ones to be like, oh, this thing might be really turning. But I mean, for those who look at the 10-year yield, for those who look at bonds in general, for those who look at where oil was trading, you didn't expect that we'd get to 7,000. You figured there was going to be somewhat of a bounce. You figured we weren't going to sit down to 6,400, but holy cow, this has been a massive move.
Yeah, stocks are through where they were the day that the war began. Gold is $600 lower. So,
yeah, that's another thing that changed, right?
That's something that has not typically worked out in other crises involving oil. Historically, that's not how gold has performed. But also, this is maybe a different form of crisis involving energy markets, given the Straits of Hormuz. Jamal, you mentioned that bonds weren't giving a clear signal with the rest of the market, and some of these other cross-asset, things, they really haven't turned the corner still. Notes and bonds are up today here, and this conversation about them bottoming, it feels like it's gathering pace. A few days ago, doji's as we try to crack through the 1 month. Yesterday, the gap opened lower through the former yearly low in January, only to close back above there and back above the 1 week. So today's continuation, not necessarily a surprise, but are we out of the woods yet? I mean, we're still below the 50-day. We're still below last week's high. Notes, same thing, still below the 50-day, still below last week's high. You could tell the market's getting a little bit of relief, like folks aren't selling treasuries anymore to raise capital, as it were.
Mm-hmm.
But the fact that capital is not being reallocated to the portions of the market where people were hiding out for safety, it does raise an eyebrow. It's one of the reasons why, and maybe this is the faulty. I could see the comments coming out. Tom was right all these years. You macro traders are idiots. Trust me. May have had a dream about that last night, but that's a different problem. This is one of the reasons why it's like, why on earth are stocks getting so excited? Bonds are telling you that there's embedded inflation, that there's term premium risk, that there's no Fed cuts coming. Why are we getting over our skis? Or is it just the simple historical reality, Jamal, that when you want to hide from inflation long term, the best place to look is not just real estate or gold even, it's been the stock market.
Yeah.
Why do you want to hold fixed income if you're worried about inflation? You want to have a variable asset.
Yeah, I mean, it's again, this is one of those things that doesn't really make sense as well. We thought bonds would be going higher at the outset of this whole issue in Iran, right? We thought that was going to be the time when we'd really see bonds run. And this has been just a crazy environment, Chris. I mean, things have been so different. Honestly, a lot of it hasn't making sense. And now that the unwind is happening, there's the other stuff that don't make sense once again, right? I mean, this is for that reason. It's almost like you throw your hands up in the air and be like, how does this make any sense to me overall? So, this is one of the reasons why I haven't traded bonds throughout this whole thing, because I really wasn't able to put my finger around what was going on with bonds and during the way that they were trading. So I hadn't touched them, whether it was vol or not. I just couldn't make sense of it, because all I wanted to do was buy bonds, honestly. I wanted to buy the dip in there and see if it was going to bounce, because things were so scary. Hell, I even put on a straddle a couple of weeks ago. You remember that? Because I thought things were going to be that bad. That was not that long ago.
And now we're pinned again.
Yeah.
How's that reverse iron fly doing?
Yeah. I mean, sometimes it makes you want to just close everything and start all over.
Oh my God, that sounds glorious.
Yeah. Possible.
The one thing that just throws me for a loop here today, and I pointed this out in November, that the Trump administration was starting to, and it's one of the issues that the bond market may be dealing with here, the Trump administration was trying out the Biden messaging on inflation. There's no affordability crisis, Trump officials insist, which brings us back to today, where Bessent said, if there was team transitory, it's this.
Oh.
You're really bringing out team transitory in official language again after 2022? All right, didn't work for those people. Maybe it'll work this time. And it's possible it works this time. But that is just the reality. PPI today is, at 4%? CPI is still tracking for another lurch higher next month, with energy driving another 15% increase or so. I think the headline CPI is now look at 3.6% according to the Cleveland Fed. It's just the Fed's not cutting here. But if the Fed can't cut here, Jamal, and problems crop up, it then means that the next problem that the Fed faces is less likely to be inflation and more recession. And so when we do get those cuts are going to be for recession reasons and not maintenance reasons. And that's probably going to be good for the bond market. So is the bond market bottoming here? Maybe a little bit more. You can make that case 111, 112 maybe on ZN. If you get over to ZB, a further push higher through its 50-day, you get to 115. You can make the argument. I'll make the argument at that point in time. But here at a 10.6 IVR, the only thing to do is to buy something that's far out of the money as kind of a lotto ticket. You're not selling vol and having a fun time. Although the last time I did a reverse iron fly, if I just did a short iron condor, I would have been money. So maybe the 10 IVR is the signal unto itself. Everything else is the noise here, Jamal. The signal is the fact that volatility is low. So expect bonds to be a stick in the mud for the foreseeable future.
Yeah, once again, the bonds win. Bonds have beat us. They have figured out the way to beat us, or at least they sucked us into a trade that we thought would make sense, and it didn't happen. So, yeah, I haven't been able, other than using bonds as somewhat of a marker for what's been going on throughout this crisis a little bit, and probably in almost the opposite way. I really haven't traded it because I haven't been able to figure out. I mean, in any other time across history, given what we just had, we would have saw bonds skyrocket, and they just didn't. And from that point forward, I was like, I don't want to touch these.
When things don't work out the way that your mental model says they should work out, you should go back to the drawing board. Mm-hmm. Don't be Principal Skinner and say, am I out of touch? No, it's everyone else. This week, we had some more auctions, but nothing of high interest, a lot of short-term bills, 1326 of that nature. Next week is when we get another real bond auction. The 20 years on Wednesday, the 22nd. And then the following week, we have the Fed meeting on the 29th. And there's 2-year, 5-year notes on Monday, the 27th. But Jamal, when I'm feeling down in times like these, I take a look at gold and silver and I'm like Wolverine laying in the bed, stroking that picture. And I think about gold at $5,400, $5,500 an ounce. And, a boy can dream because we're starting to turn the corner here. And very much like stocks entering a prolonged bullish move, Jamal, if I wanted to make the bull case for the S&P 500, I'd tell you that these energy problems and supply chain problems are real. They're realer for other economies than ours. Incrementally at the margin, if you're allocating to equities, you may not like the US and you may want to do what you did in 2025, but for the foreseeable future, you're probably going to have more stable margins in US equity markets. And so if you missed the move earlier this month and you sold out in March in your emerging market names, what have you, where are you going to go? But consistent with that, Jamal, what was one of the predominant driving factors of gold last year? Central bank reserve accumulation, which Turkey dumped like a third of their reserves over the past month and a half in order to raise capital to insulate the lira. I kid you not, I think like Turkey's foreign reserves in gold went from 400 tons down to 200. I got to double check those numbers and see what currency they were denominated in, but it's ridiculous, like a huge amount. Okay, sorry, from like 600 tons down to 400 tons. But maybe that ends. And now we can see that positive drift of, hey, do you guys trust the US dollar right now? America, if you look to polls around the world, people aren't really fans of the United States of America right now, given our recent actions. If it was from tariffs to Greenland to Iran, I could still make the case that folks will want to allocate at the margin to gold. But is that a trade in the short term? The trade here in the short term is getting back above the trend line from the October and November lows, clearing out the 50-day moving average, which if we do so today, it would be the first close that we've had north of here since March 17th, when things really hit the fan in gold. And you get those 4 days where you head from 5,000 down to, what was that, 41.28? That was fun. So gold, silver, copper already turned the corner yesterday. These charts now look like they are appropriately engaged for longs once more. That is a beautiful turn through the former swing lows in silver. That is an excellent continuation if we want to go even shorter term here in silver. That is a beautiful continuation off the lows of a pennant or a flag, higher highs, higher lows, and breaking through former support turn resistance. So for me, the metals are constructive again. We finally got there. And this is the glove that fits for all the kvetching about the S&P 500, Jamal. I mean, like, there are still some things that can be done here. I'm going to go out to 42 days, where 42 days, this was building into a position prior to the Iran war. So I'm considering the second leg of this, the 5,600. That's probably not going to work out. But with a bottom in gold, we have an ascending triangle here, 48 down to 42 or 41 and change, but that's 700 points. 700 points here brings you back into the highs. Do we do it? What do we do here?
I don't know. I'm not as much a believer in the move in gold and silver. Again, I need more to feel like they're going to do that. In the meantime, I think the vol is still a little elevated, honestly, and I feel like selling vol is probably the best play until otherwise proven wrong. I would be willing to sell vol in something like this and wait to see if there's more confirmation, right? Like, I don't know, like, would you rather buy gold here and wait on a slow run? And I mean slow, like, it's not going to be like, I don't think it's going to be, I know we're getting $100 a day, but I feel like it's going to be slower overall. I feel like the expected moves, the ranges are going to be a little bit tighter compared to what they were a little while ago. Versus, like, if we get to 5,200 and then you start to see the big moves again, I feel like that's more the confirmation. Right here, I don't know. It makes me a little, I don't know if I see it. For that reason, I'm actually
mentioned selling vol, though.
Huh?
You mentioned selling vol, though. I had someone tweet at me just yesterday, gold's going to go up from here, Chris, but it's not breaking through the highs anytime soon. And that got me thinking, like, what if we were to look at a trade where at close to 45 days to expiration, we wanted to make that bet right now. The highs are close to 54.75, so you'd have to go north through there, which is why I'm looking at 5,500, 5,550. It doesn't really matter what width you set these strikes. You're not going to find a very appealing risk to reward here. It's a 91% probability of profit. So when someone makes the claim, I don't think gold is going to break through, the highs that we saw earlier this year anytime soon. The market is very much in concurrence with that right now. And because most people agree with that assessment, given the pricing, you're not going to be rewarded for taking that view. Is it worth laying out $235 of buying power to make $150? In certain situations, yes. But is it worth that if you could incur a $2,300 loss? I'm personally not in the business of putting down 17 to make one.
Agreed.
That seems like picking up pennies in front of a steamroller here. So selling the vol, right? You have to structure this the right way. And looking to the charts right now, given how wide gold has traded, doing that whole, we're halfway between the high and the low around the one war, so let's just go directionally neutral here. The compensation isn't that great. Which is why I'm thinking, like, that if I'm going to take a swing here, it's got to be directional and it's got to be on the long side again.
So I'll tell you what I would do. This is one thing I actually like, and I don't, and maybe this is kind of like the weirdness in me every now and again. I structure trades like this, that if I'm right, then awesome. If I'm wrong, it's not that bad. So I would sell the 45.50, 45.35 put spread.
Sorry, 45.
Yeah, 50. I'm actually a lot tighter than you think. 45.50. Yep.
45.30.
Yeah, so 35. I'd do 35, which is 15 wide.
$15 wide.
Again, it's all about what I could stomach on a loss, right? And then I'm actually not worried about the downside. It's the upside, right? You mentioned 55. I'd actually go 5,200. I'd go 5,200 to 5,215. Thought being, if we really start to go in gold, I think it happens starting at 5,200. And in this situation, I'd lose. I'm collecting 590 to. The max loss would be 900. It's somewhere around 700. You'd already know if you're starting to lose on this thing. I'm willing to do something like that and then eventually pivot and say, okay, I've lost a couple $100 and I think gold is going to start to go now. And that's kind of how I view it. So I'm probably going to put this on.
I hear you. And actually, given recent swing levels in the market, you have 52.75 or so here in the midst of the month of March, where we kind of keel over.
Yeah.
Right. And so you don't need to. And the point I'm getting at here is that, yes, the assessments that the yearly highs probably aren't going to be touched soon, thinking about the typical tasty cycle. I agree with you there, but so does the rest of the market. So you're not going to be compensated materially for taking that position. It is, broadly speaking, the consensus view. What Jamal's trying to accomplish here is, if we think about some of the recent swing levels that we've worked with, and Jamal, just for the sake of what I'm trying to make a point here, I would go a little bit wider out on the call spread side. It wouldn't be as great a risk to reward, perhaps, that you're looking at, but still $15 wide, risking 2 to make 1 and respecting some of the technical swing levels. I mean, that's the way that we start to approach these kind of things.
I like that.
Because right now, the high, we go, looks like we're in for that bullish trade through the end of December now, Jamal. Just got filled. Did you get filled before me before?
No, I did not.
Does this keep happening? If we wanted to go directionally neutral around the highs and lows from the war, which just for the sake of this emphasis, I don't think they're going to be cleared out anytime soon either. But I'm going to go $25 wide, and we're going to keep going. We're going to go 54, go 5,500, 55.25. Okay. That's 10 to 1, right? 87% probability of profit. Again, consensus view. So is it worth risking 570 to make 260? Maybe in terms of the buying power, but in reality, the max loss is 10x. So if you're going to do the vol selling, as Jamal gets at, we can't use the high-low range of the Iran war. It's just the juice ain't worth the squeeze, in my view.
Yeah, agree. Same. I would rather just do something tighter. I eventually lose maybe a couple of hundred versus like sitting on $1,000 loss. I mean, again, you want to be able to collect the amount of premium, but then you also don't want to be giving up too much. And I feel like that would be giving up too much.
It would be. So we have the same setup in silver here. Silver, doing nothing. This is an old legacy position, which isn't going anywhere. That's why with these silver positions, gold positions, I like doing things that are a little bit out of the money, because if I'm wrong, it's like a few $100. If I'm right, it's 3, 4, 5x that.
I get it.
Whereas if I'm doing the short quit spreads, if I'm wrong, it's like thousands of dollars of loss compared to $100 of gain. And I don't know, just for how these trade. Either way, 42 days to expiration here. And it is a 46 IVR, which, not for nothing, that's pretty dang cheap. That's as cheap as we've seen silver vol for basically this year. I don't want to look that gift horse in the mouth right now. So to that point, where have we seen the market find levels of support and resistance previously? Like we were talking about with gold before, you get to March 17th. That's around $82, another $3 in silver here between friends. That seems like nothing. So 82, 83, building into position slowly over time. The problem is that's real fat. That's a $2,500 worth of buying power, Jamal, in SI right now. So perhaps these views are better expressed in something like SLV, which is a smaller product, more approachable for retail traders, and can still give you the, expression silver going up and I want out of the money exposure that SA may not yield. And moreover, look at the 83 strike. 3 contracts traded today. Not a lot of volume.
Yeah, no, not a whole lot.
Like a penny stock. Great.
Yeah, that's a tough one. That's pretty expensive for that trade and for the kind of a quick time period too, 42 days. Which the old silver not that long ago, no problem, totally fine. You probably realized that move within 5 days, but now a little tougher to trust.
So Thomas brought this really interesting point up yesterday about copper, and he actually thinks he's leaning a little bit more bullish on silver than gold right now for this reason. But when you are, so China announced, in the backdrop here is that China announced that they're going to curtail sulfur exports because of everything that's going on in the global supply chain. You need sulfur to, for lack of a better phrase, liberate copper from its ore. And you get silver as a byproduct of the copper smelting process. So if there's less sulfur to go around the world to help with this liberation, if you will, then there's going to be diminished supply of copper and silver moving forward for the foreseeable future. So not for nothing, Jamal, copper yesterday, we were making the argument as Dr. Copper here, it's telling you that we're not going to have the worst outcome. The shape of the oil vol curve coupled with copper's jump in price tells you that we're going to get a muddling through scenario where we don't get recession, we're going to get higher prices, but global growth won't be derailed. And instead, it's like a squeeze, right? Because the demand for copper is still going to persist, close enough to pre-war levels, but the problem is supply will not. So moving forward, like taking note of what's done well here, gold is the laggard the past few sessions. Silver and copper have been the ones moving up, and that is consistent with the longer-term supply disruption thesis. And we shouldn't ignore the fact that silver, despite all of its warts, I don't know, Jamal, this could be one epic triangle. If you tell me that silver is going to be back at 120 at some point this year, that is the chart I would want to see to pave the path.
I don't believe
I don't
it.
think we're done here. I know you don't.
I don't believe it. I don't see it. I don't know.
Our producers are driving.
I see S&P 500 8,000 before I see silver at 120 again.
I think, listen, I don't think they exist in the same world necessarily. And we made the case back in what was it in January and February? One of our ideas was if stocks are going to push to new highs, the gold and silver rally has to break because people need to stop looking at shiny rocks and saying, this is a better return on my capital than investing in the future earnings of all technology companies in the United States. So
that
it's a little, okay. Speculation aside, copper here, we're moving off that to crude oil, which is now, when you go to the platform, it's no longer on the CLK6 contract. But we're going to talk with the CLK6 contract first.
Yeah, it still has the most volume.
Still has the most volume, right? You see M6, 180,000. We're moving over there. K6 is 228,000. But seeing as how it's still the most liquid contract, and it is still technically the front month, may I present to you a left shoulder, a head, and a right shoulder here. A right shoulder that is forming at a lower high than the left one, which is exactly what you'd want to see. The rebound that we've seen here in the market, right? We had this initial, the U.S. is going to be escorting ships through the Strait of Hormuz, and the market crashed and pulled back here. And everyone thought, okay, well, the war is over then because if the straits are open, no one's going to care about the bombings. That's the low. That's the uptrend low that we have here. That's the uptrend low that we have on April 7th with the announcement of the initial ceasefire. So we're breaking that uptrend here today. High is 117, low is 90, $17, $73 price target. I wouldn't be playing for that here, personally, given what we know about the structure of the oil market and the supply disruption that's gone on. And also it's the K6 contract, so getting down to 73 in the next few days, 3 or 4 days, probably unlikely. 2 days, probably unlikely. But it does set up this interesting look then as we go over to M6, where this feels like it's going to be difficult to get this thing revving to the upside again in a really significant manner. $100 oil, Jamal. I know that seems like it's not that far away, but it would also mean clearing out all of the post-initial negotiation highs that we've had here. And that would mean a dramatic reacceleration in the war headlines in a very negative manner. What say you about looking to sell calls in oil while volatility is still high? It's a 50 IVR. It's coming in. Do you feel comfortable selling calls here if that's the cut of your jib?
Yeah, I think gold, silver, and oil are still some of the highest vol on the board. That's why I'm interested in selling them. And today was the first day. I've been in an iron condor in the sim contract, so in that same MAIC cycle you're looking at. My downside put spread is around 76, is $2 right, 76.74. And my upside was around 130 to 132. And I think given the move that we've had recently, this de-escalation, at least with oil, I don't know if there's de-escalation exactly going on over in Iran, but oil suggests that there is. And so I just feel like you can sort of comfortably move further upside stuff down some. I did today. So from the 130, 132 to the 108, 110. Look, we've seen a big move here. And like you said, I think it would be some serious rhetoric being thrown around if for whatever reason we get the M contract back above 100, which right now doesn't look likely. So that's why I feel comfortable doing it.
Again, one of these occurrences that's happening in the curve today, Jamal, yesterday when you looked at oil prices going up in the first half of the session, The M6 contract was up more than the Z6. The N6 was more up than the M. You went out along the curve. Did I say Z6? I meant K6.
Mm-hmm.
The M was higher than the K. The N was higher than the M. So as you went out the curve, the gains were accumulating. Today, it's similar, but the opposite side of the coin. K6 is down 7.3%. M6 is down 4.6%. Z6 is only down 2.1%. Demand destruction is not happening. Supply problems are persisting. Oil, as you move out along the curve, you get past the front month, you're looking at a higher floor. So my view is, and I've been saying this for the past week, it feels like it's better to sell puts than it is to buy calls. Just function of where you sell your puts.
Yep.
Thinking about that, right? Are we going to go back to the pre-war levels in the next 30 days? Realistically, could we? Sure. But realistically, with all the oil infrastructure that's taken offline, the number of VLCCs that have left the Gulf region and have since been rerouted to North America, it's not just turning on the pipelines from all, it's having somewhere to put the oil once it comes out of the pipes from the ground. And if storage capacity is filled up and there aren't enough tankers to offload, then you can't resume pumping at full capacity right away. And it's going to take weeks to get ships back into the Gulf. Because when it reopens, do we think people are going to say like, oh, let's just send everything through? Or are we going to have to find some proof that these lost Iranian mines, if they even exist, but we're going to have to find some proof of these lost Iranian mines before ship insurers are like, yeah, no, go full bore, no problems. We're totally confident it's clean and clear. That to me is the play. Sell puts in oil below recent swing levels. We go out to M6. The big one is probably 73. That's the whole U.S. is helping ships transit the Strait of Hormuz safely. Mm-hmm. False headline from Chris Wright, Department of Energy Secretary. So 73. 73 at 30 days out. 73, 74. Could we do that? We could do that. 73, 74. Risking 4 to make 1. You could bracket this into an iron condor here. Like I've done, I have 113, 114, but if I went 111, 112, it's turning it more into a 2-to-1 type of trade. So I think you can play this on both ends and have the best of both worlds. At least that's what I'm trying to do. I want to have it all, Jamal. I'm selling the call spreads. I'm also selling the put spreads here. I don't think oil is going to rip higher again. I also don't think it's going to collapse for all sorts of reasons.
I mean, this is...
At least I've actually... Yeah.
No, I agree. It's still some of the highest vol on the board. I think, selling the downside is probably the smart way to do it. And I agree with you. I think it's going to maybe start to come in maybe a little bit more, but I don't think it's going to collapse. I do agree with that.
I have a bunch of other things that are just going to be rolling off the next few days. When the war was going on and we had those dips back, I said the markets want to give us enough vol to sell like the 62, 61, 63, 64, 72, 70 short put spreads. Happy to do so. We had an opportunity to sell 122, 124 the first day of the war started. And it's 2 days ago is the first time that it finally moved into profit. Right? And that's going to be able to be rolled off and that's going to be taken for a little bit of a gain. So my oil trading throughout this has been great. My stock trading has been total crap. Oil's worked out fantastic. I think I'm going to be 6 or 7 in my oil trades throughout the war. It's the 0 for 5 in stocks.
I mean, it's been easier to sort of plan on oil fading than it has been on the markets coming back. And I know it doesn't really make sense because it's kind of saying the same thing, but it really kind of has, I feel like, for most of us.
The expression in particular that we've used about this for commodities are Ouroboruses. They are snakes eating their own tails. The commodity prices go too high. They yield demand destruction that undercuts the very demand for the product that was pushing the prices higher. So high crude prices what's the cure for high prices, Jamal? High prices. Because it incentivizes competitors to come in and provide more supply, or it tells consumers to stop buying the crap. You're being pushed out at the margin. So snake eating its own tail. It's a function of time. We can't persist at 150 oil. All right. We move off of what's happening with oil and just quickly go over to the dollar here. I know not many folks are paying attention to the dollar, trading the dollar these days. I think you should, because it is the liquidity gauge for the market, and the liquidity gauge keeps saying things are okay. We had that big break lower last week. We have yet to see a recovery. We had a bearish engulfing bar yesterday. On the downside in DXY, which means in the euro, the largest component of the dollar index at 57.6%, it was indeed a bullish engulfing bar, right? Bouncing off of that 50-day moving average. So I don't care where you look at this right now. Even the freaking yen is rallying in this environment right now, Jamal. But that is the point. The yen is a currency of a country that imports more than 90% of its energy, and it is a highly interest rate sensitive economy. So if the yen is able to rally, what does that tell you about oil? What does that tell you about US yields? FX is the biggest portion of the market. The ship just doesn't turn for no reason, Jamal. So if you're a bull and you're like me thinking, I missed this move, how can I get into this? What could I do? Look longer term. Let's not chase short term. Let's not deal with expiration tomorrow. 7 days up, 7 in a row is a unique occurrence. Let's not ignore it. Jamal, later today, it's Tuesday, so Liz and Jenny are taking out last call, not you. But I know you and I will be reconvening tomorrow for Signal versus Noise, so I encourage people to head over to our YouTube channel. And likewise, Frankie wanted me to mention, tomorrow is What Your Assumption. It's not, what was his joke here? It's Assumption Wednesday, not Feast of the Assumption. So just mail in your trades. Again, what's your assumption? Jamal, we're done here. I'll catch you later. Overtime for Eastern 3 Central. But before then, Dr. Jim Schultz is up next with From Theory to Practice. See you there.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
So what are some things that we know? We know that time will pass. We know that the hourglass will empty. We know that the calendar will march forward. So what do? We sell premium. We generate positive theta. We take the short side of the options contract.
Before you ever think about generating returns, you need to control that risk. The returns will come. You need to make sure your risk is mitigated in the most efficient way possible. Now, the fun stuff. Let's talk about managing those winners, right? You have a long put spread on and the stock goes down. That's going to work out pretty well. You have a long call spread on and the stock goes up. That's also going to work out pretty well. You set your profit target at 50% of max profit. When it gets there, you take it off, you move on, you find another opportunity.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
When you trade options at Tasty Trade, you see your probability of profit and loss right where you need it. Earn up to $3,000 in commission rebates.
I'm Jim Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast, man. Welcome to the Tuesday edition of what it is that we are trying to do. I'm glad that you guys are here because it is only because of you all that we can do what we do. So thank you guys so much. If you're watching over on the Tasty Live network, that would actually bounce on over to YouTube because you can communicate with your brethren in real time. If it is indeed Tuesday, April 14th, Tax Day Eve, then you can pop into the chat. You can talk to your fellow, I was going to say inmates. Why, that doesn't feel right. But anyway, you can talk to your fellow brethren or even inmates here in the YouTube chat. And it's a good time had by most. I can assure you of that. You can celebrate if you are a bull, man. You can commiserate if you are indeed a bear. But don't you worry. We are 100% back. And by 100%, I mean about 45%. All it took was the blockade of the blockade, and we are 100% headed back to all-time highs. I am 36% sure of it. Now, if you have a question for me, I will drop it in the chat box, and I'll try to get to as many as I can right around the halfway mark of the show. I typically get to maybe somewhere between 0.5 and 0.7 per show, so the earlier that you get the guy in, the greater the delta that will get to your question. And of course, you guys have one job to do today, one job only. Pump the algo in the chat so we can push this guy out to more people that might not even know that we exist, which is probably an uptick for them. But nevertheless, let's get this show in front of their faces. So Josh, bring us into the market. Speaking of in front of our faces, yeah, here we go. EMA S&P's up 66. They've sold off a little bit in the last little hour or so. Yeah, EMA S&P is up 65. The risk-free, I'm still laughing about inmates. I don't know why I don't even know why that felt right to say. Like, I say a lot of goofy things and silly things on the show, and we just put them out there, and there's no coming back, and that's fine. But I'm like, why did that feel right to say in that moment? Like, what does that communicate to how I feel about you guys? What does that communicate to how I think you guys might feel about me? I'm not sure. But man, it's already out there. And the good thing is this isn't live. It's not like, it's already out there for all to hear and see. But anyway, I digress. Happy Magenta Tuesday, by the way. NASDAQ up 380. You got the Boomers up 260 on the day. Russell 2000 up 29. And bonds up 19. Notes up 9. Oil down $4. Man, I was assured. I was guaranteed by all of my reliable online sources. Johnny Pool is 47. Johnny Pool is 48. Johnny Pool is 49 and 50. All said, we're going oil 200. 8 days max, 9 days maybe if there's a little hiccup. But here we are, oil down another $4 under 90. You got UB40s up 18. And then you've got gold is, man, look at the shifties out there getting a little something done. Got gold up 95. Got silver up 377. So the shifties are out there celebrating, which, by the way, if you're brand new to the show, the shifties is my effort at paying homage to the biggest gold bug out there, Peter Schiff. He's been calling for this gold rally for the last 47 years, and he finally nailed it. So you got to give my man his due. And then the silver situation, the Hunt brothers, obviously that was from them cornering the market in the late 70s, but they're doing pretty well for themselves. And I think at this point, this will be their heirs that are doing pretty well for themselves. But I mean, they're doing the silver contracts. They're doing a little cheese and pepperoni on the side. Like, they've gone horizontal. They're not even diversifying vertically anymore. Like, they're splashing around in brand new businesses. And it's pretty impressive, I got to be honest. But everybody likes cheese and pepperoni. Like, that's pretty much a slam dunk, right? Like, even bad pizza is still pizza. Like, even bad pizza, like, man, this is a pretty bad pizza. But then you're like, it's still pizza. This is a pretty good thing. And so silver up 373 today. And so the Hunt brothers looking pretty good. You got the British pounders up. You got the euros up. Man, volatility futures down 16 to 20 cents on the day. Spot volatility, the old VIX, it's getting hit pretty hard today, I think. Yeah, I got the VIX down to 18. Whew, man, we had it, guys. Like, we had our chance at greatness. Like, look at the chart of the VIX. We had them, guys. We had them. And we were all crying and whining and this, that, and the other thing. But, man, we had that's like a solid month right there of volatility, basically 22 to 32. Essentially, I think I got to 34, 35 at one point, and it was a little bit below 22, maybe a day or two. But, man, 22 to 32, that's kind of the sweet spot, man. Like, that is a great range or a great kind of area to live as a volatility seller. Now, all of a sudden, Oh boy, we have broke out to the downside. And so here come the technicians on the volatility charts. Although I've been told you're not allowed to do that. But if we could do that, then maybe we're going to start seeing some lower highs and lower lows here on the old VIX chart. But either way, I digress. And we press on. So all right, so what is going on in the portfolio? You know what's funny? So here's what's funny. I'm gonna get to you guys in a minute. I see you guys already in the chat. Man, look at I King Lee is here. John Covington is here. Man, John, thanks for showing up on Friday. That was amazing. And Ash's little deal. Grumpy Mike is here. BDH is here. Man, Steve Aguilera is here. Man, Ryan LP. Man, I see, or Daniel Griffin Jones. Man, Brian Dowdy. Ash Finn in the house. Baker's here. Jared Kramer is here. Man, this is some amazing stuff. So, you know what's funny? So looking at the portfolio, obviously we're having a solid day today with oil kind of leading the charge. The inverted strangle is doing pretty well for itself today. You can see the inverted strangle is 62.5, 87.5, and you've got oil down 450. That's great for our inverted strangle. We're not quite inside the strikes, but man, I'll take it, especially when oil was a whole lot higher not too long ago. Now, to be fair, this is the M contract, and the M contract never got nearly as high as the K contract because of all the backwardation along the oil futures curve, but it still was much higher than 88 at one point. I think maybe, did it get to 100 at one point? Hang on, let's stay on this for just a second. I think it got to 100 at one point. Yeah, it did. It did. So in early March, it spiked up to 104. But then just a few days ago, it was right up to 101. So, you know, having oil back down to 88, 89, that is very welcomed. And I'm not going to look a gift horse in the mouth. And I'm very, very happy with that. But you know what's funny? So today, so I'm watching the market in the pre-market. The market's been pretty strong all day. It wasn't quite this strong, obviously, in the pre-market, but it looked pretty good. Like it's been green pretty much all night, all morning, whatever. And then things are picking up steam, and I'm looking at the market open, like checking to see how things are going and in the portfolio and whatever else. And I'm like, all right. I'm like, the market's up big. Everything's up big. I'm like, I'm really glad I got out of my Dell position because I think that oil's, going to be helping the position. Oil's going to be helping the portfolio. Some other things are going to be helping the portfolio. Gold, Starbucks, Johnson & Johnson, whatever. I'm like, man, I'm really glad I got out of my Dell position because it must be up huge today. Like, I'm really glad that I went ahead and waved the white flag on Dell and just called it a day because that would really be serving as a stick in the mud on everything else going on in the portfolio. But au contraire, Mon frere, look at Dell, down $6 today. Look at this, guys. Look at this. If you ever needed more evidence that you just need to literally do the exact opposite of everything I do, exactly as I do it, I'm not sure what I can do for you. Like, I'm not sure that I can possibly produce any more reliably consistent evidence than what you are seeing right here, right now as Exhibit Triple Z, right? We finally waved the white flag. And Josh is calling out his Snapchat position. Snapchat up 27 cents. Snapchat is our core position. Snapchat is our future. So thank you there, Josh. We finally wave the white flag. We finally say enough is enough. We finally say, man, I've been in the bathtub of filth long enough. I got to get out of here. I got to get cleaned up. Let's move on with our lives. We finally do all those things. And the next day, Dell has its biggest downtick in about 7 weeks. Right, so Dell down $6 today when the rest of the market is screaming higher. Like the rest of the market is up a boatload and Dell is just getting smashed to pieces and we are not in to be able to enjoy it. And it's just funny, man. Like, it's just so funny. Like, I know you might be new to the show. If you're brand new to the show, welcome aboard. I hope that you stick around. Whether it be my show or any of the other shows on the network, like, there's so much great programming to choose from. If you're an active trader and you're looking to take some type of, some type of active control of your portfolio, specifically as it relates to derivative products, you're in a pretty good spot. Like, you're kind of in good hands when it comes to wanting to use options and futures, around the active management of your portfolio. So welcome aboard. If you are brand new, when I say do the opposite of what I do, I'm not joking. I'm not being sarcastic. I spent a lot of other time at very weak, mediocre attempts at internet sarcasm. This is not one of them. And you can ask the people in the chat. There's 500 people in the chat. There's 600 people in the chat, whatever it is. Ask them. They will back me up. Right? If you want to make money, if you are serious about actually making a dent in your financial goals, sight unseen, just fade everything that I do and do it exactly as I do it. And it's safer than a US T-bill with better returns. Like, you're going to get NASDAQ-like returns with US T-bill-like risk. I mean, that's what I'm trying to do for you guys by just taking the opposite of all of my trades. And so, all right, so there is some Dell Oh, Lamentations for you guys. It's really hilarious, man. I looked at that this morning. I'm like, there's just no way. There's no way. There's no way. But oh, yes, there is. There is absolutely a way. So, okay. So speaking of there being a way, let's talk about oil for a couple of minutes. Because now it's getting interesting, right? Now it's like, okay, this is actually in a favorable position. We could use it a little bit lower, of course, but this is better than oil at 95, 97, 100, whatever. It's like, okay, so now when do we start looking for an off ramp? Like, when do we start looking for some type of exit ramp to be done with this position? Well, let's kind of work through that, right here and right now. So number one, when you have an inverted strangle on, you always want to be aware of, okay, what is my best case scenario here? Like, what is my best case outcome when it comes to this specific position? And the way to figure that out is to simply compare the credits that you've collected in total with the width of the inverted strangle. That's going to tell you what your best case scenario is. So my width of the strangle is $25. So I'm $25 wide. So I have a $25 width. And then if we grab a little magenta. I mean, it is Magenta Tuesday. And so if we look at the trade price here, this is actually my total credits collected because I've grouped by my order chains up here. So because I've grouped by the Allison chains, we've got Rooster, we've got Wood, we've obviously got Man in the Box. They're all together. When I look at the trade price, it's giving me the total trade price across all adjustments and all rolls. I would see the same thing if I went over into the chains on the right-hand side of the screen, but I'm not going to do that just to save, the 17 or 18 seconds it would take to navigate over there. So if I look at a $25 wide inverted strangle, I've collected $17.87. So if I look at the difference between these two, what is the difference between those two? Let's grab a third color. I mean, just because we can, right? The difference between those two numbers looks like it's about $7.13. Again, you can never be sure, so we'll put the approximation sign. Well, let's say it's $7.13. Now, you need to think in terms of, okay, does that mean that I can make $7.13? Or does that mean that that the best I can do is lose $7.13? You can do addition signs and subtraction signs and whatever, but I prefer to just think about it more logically and just kind of understand the landscape, and then it just kind of fits together kind of naturally, right? If the width of the spread denotes the minimum value that spread could potentially have if A, I still have it on, and B, it expires inside the strikes, then that is telling me the lowest possible price that I can buy this guy back for. So if I've collected $17.87 on the trade, and the best case scenario is I buy it back for $25, that is telling me that my best case outcome here, do I have a red color? I do. My best case outcome is I lose $7.13. So let's write over that actually, $7.13. That's Fire Engine Red, man. That's Uncle Jay, Fire Engine Red. Is this his last one? The one that's coming up, it's at the end of April, right? Is this it? Is this the sunset ride? Like, is this it? Like, I'm very curious to know if this is where he kind of says his goodbyes and says his farewells. And if he goes out with the Fire Engine Red, I mean, that's a power move, man. Like, he's been lulling us all to sleep with the lilacs and the lavenders and all the royalty colors. But if he just drops just a deep, deep red on us, whew, man, that would be awesome. That would be really, really awesome. But anyway, when it comes to this strangle, my best case scenario is I lose $7. Okay, so now I go back to, so where am I at right now? Well, right now I'm down $15. And so understanding my best case scenario and understanding where I'm at right now, this is critical to kind of having a clear vision of what I want to do with this position. I'm not going to hold it all the way to the end. That's off the table. I'm not going to carry this thing all the way to expiration and just hope I stay between my strikes. That doesn't really make a lot of sense for all the same reasons we don't carry any undefined risk positions all the way to expiration. So that's off the table. Okay, so that's gone. So what is the more realistic outcome? Well, thinking about the simple fact that my best case scenario is I lose $7. A more realistic kind of quote unquote best case scenario to me is, man, if I lost $10 on this trade, I would consider that a major, major, major victory. But to even get to that point, I think I'm probably going to have to hold this thing into the final week or two of the duration of this position. I don't really want to do that either. And so given the fact that we've had to endure quite an outlier move in oil, I mean, I don't know how you're scoring outliers at home, but I would say this is up there, man. Like, this has been a pretty significant outlier move in oil, and it keeps coming back. Like, we just saw the chart, like it spiked up, and then we got a little bit of relief, and then it spiked right back up, And now we're getting the blockade of the blockade, so getting a little bit more relief. But who knows what's going to happen next when they add that fourth derivative of blockades? Like that could be it. It could be over. And then we're right back to oil at 105 or 107. And so when I look at this, I'm like, man, if I can buy this thing back for $12 or $13, that would be amazing. I would be so happy with that. And I would end up taking, a pretty significant, loss on the position. And when I say buy it back for $12 or $13, I don't mean buy the whole strangle back for 12 or 13. I mean, buy it back such that I lose 12 or 13. So if you look at the pricing, just to be clear, if you look at the pricing, because if you are brand new, this is all super confusing. Like if you're brand new, again, shout out to all my new people that are watching, or if you're a new person accessing the audio only version of the show, now that is a power move. Like you are in a league of your own, sir or madam, and so thank you for joining us. You can't even see anything I'm doing, and that might even be an uptick for you. But when it comes to learning this space, inverted strangles, that's way down the road. And so if you're brand new in the last 5 to 7 minutes, they have kind of glossed, they've kind of gone over your head, and you're kind of glossing over what we're going through. That makes sense. That totally makes sense. You're not going to grab onto an inverted strangle just intuitively the first time you hear it. You're like, oh yeah, that makes perfect sense. It still doesn't make sense to me. And I've been doing it for 20 years. Like it still makes very little sense to me. And I've been looking at this thing for almost 2 decades. And so if you don't get it today, that's okay. You'll get there at some point in the future. But when I look at this, if my total trade price is $17.87, if I could buy it back for 30, if I could peel another $3 off this trade, I'd be super happy. I would be very happy with the trade, and then we could just kind of, wipe our hands clean to this guy and just move on from there. So anyway, those are some thoughts around the inverted strangle. That's what I'm looking at. That's how I see it. And now we just cross our fingers, right? We crossed our fingers, we crossed our toes, and we just kind of see, what's what. So going on down the list, everything else, MES, it's just so funny. It's just too funny, man. We've not only been tested on the 6800 call, we've been obliterated on the 6800 call. So that's just funny. And so we're not going to talk about that anymore. We'll come back to that at a future point. So GDX and Autumn's texting me. She learned her lesson. I don't know if we'll get any phone calls anytime really soon. But GDX, I told her today, we were talking about, this is too funny. Hold on. So we're actually, what time is it? 2:45? Okay. So we've got more groceries coming today. She's gone. She took our kids to soccer practice. She told me, she's like, listen, she's like, I'm going to tell you this again. I'm only going to tell you once. I don't feel good. She's like, to speak your, this is her talking. She's like, to speak your language, it's only about a 20 to 25 delta that you come through. But still, you've got another chance to redeem yourself. There's more groceries coming. They're coming between 3 and 5. And so I'm done with you all at 3:15. And so I've got to be on high alert, right, to get out there for the groceries and make sure I'm ready to go, checking the doorstep every 6 minutes so we don't lose any popsicles and all that kind of stuff. And so I told her, I said, hey, you could call again. I said, the people would love to hear from you. And this time they'll actually hear you because your boy's going to crank up that volume. But I have a feeling she's just going to text. But anyway. So GDX, we sit tight. There's nothing to do there. It's coming along quite nicely. GLD, we're really close to our profit target. In fact, let's take it off. We're so close. I'm going to take this guy off. I don't really want to cheat. I don't really want to tempt fate. That's what I wanted to say. Any further on this position. We're very close to 50% of max profit. We're at about 49%. So let's go ahead. We'll close out a GLD. $1.82. Let's just buy this thing back and then we'll be done with it like it never happened. Other than the fact that we made $1, we'll make about $1.70 on the trade or thereabouts. And again, if you use a bonefish converter, that's about 3.5 bonefishes with tip. Like that's about 3.5 bonefishes. Yeah, we got about $1.70 there on the GLD trade. And then Johnson & Johnson, we sold our put. It's looking good. I'm gonna leave it be though. Let's let it get a little bit closer to 50% of max profit. And then Starbucks, and then Josh's Snapchat. Man, look at this thing. Look at this thing. We only need another 10% out of the stock and we're even. We only need another 12% rally and we're back to a scratch. And so thank you there, Josh. That's some nice work out of you. This is about the best you can hope for from a Josh trade, right? To be 10 to 15 to 20% underwater pretty much instantaneously. That's pretty good for him. Like, so I'll absolutely, I'll take it. So Snapchat, there you go. So, all right. So what I want to do though, what do I got? Okay. So let's take a look at, if we look at some earnings, there's nothing going on today. We've got, this morning was Johnson & Johnson. I think JP Morgan was this morning too. But Netflix is coming on down the chutes on Thursday. So you're definitely not going to want to miss Thursday's show. I mean, you don't want to miss tomorrow's show either because, your boy needs that watch time. And so tomorrow's show, you don't want to miss it. Thursday's show, you don't want to miss it because I'm going to give you a Netflix trade, maybe even more than one Netflix trade that you can fade. I'm going to make it so easy and I'm going to make it so simple for you to make money on Thursday by doing the exact opposite of whatever I do in Netflix. I'm not going to take the easy way out, right? Rocky IV style. Like, I'm not going to choose something like, oh, it's a little bit neutral. Oh, it's a little bit this or that. No. We're going to be directional so that you guys can make some money by being on the other side of that guy. So April 16th is Netflix, but look on down the chutes here. Man, look at what's coming. It's all coming. You can't even stop it now. I mean, look at April 29th. Look at that. April 29th. You got CMG, little Chipotle action. Look at Chipotle. Man, Chipotle owes us a bunch of money. So we're coming for a little bit of it back here on April 29th. Look at Google. April 29th. Man, look at Meta, April 29th. And look at Microsoft, April 29th. And we're forgetting, arguably, the most important one, right? Because April 29th, let me do some quick calendar math. Yeah, that's 2 weeks from tomorrow. So it's a Wednesday. That means on 4/29, I'll write it in over here. On 4/29, that means we also have the old USA, right? That's going to be Uncle Jay for maybe the final time. Like, isn't his appointment up in May or something like that? I don't know. Maybe he's staying on as an honorary member or the new guy has not been, whatever they would call it. I don't know. I think this could be the last one. This could be the last ride around the block for Uncle Jay. I mean, we need to throw some kind of party. Like, we need to do something special. If this is the last one for Uncle Jay, man, that's crazy. But USA earnings, along with 4 pretty heavy hitters, Chipotle, Google, Meta, and Microsoft. And that's going to be something. So you're not going to want to miss that either. And then, we've got Starbucks coming up, Snapchat's coming up, Disney's coming up, Amazon's coming up. Look at Cisco sipping on a little scissor on some Cisco. And then got Neo. I mean, I'm a little sick of the love songs too, but Neo's coming up, right? It's June 2nd. And you can't stop that now either. And so, these guys are all coming down the chutes. But lots of fun things in store. But where are you guys at? I mean, I see you guys in the chat. I think Josh Amazon primed me. Did Josh Amazon prime me a question? I think he did. Yes. Okay. Beautiful, beautiful, beautiful. So Josh Amazon primed me a question from Steve Aguilar. So what's going on there, my man, Steve? I appreciate you so much. Steve says, I remember Tom and others saying toward the end of the day, you can get moves higher because day traders are covering their shorts. Is the flip side true? If it's been a really bullish day, are a lot of people selling? I think potentially yes, right? And I think that's, it's kind of like, man, again, you didn't hear this from me, but it's kind of like prices have a little bit of a mean reverting entity to them. A little bit of a mean reverting characteristic to them. Again, you didn't hear this from me. I'm just observing what's going on in the marketplace. I'm just observing these kind of, discernible patterns that just continually show up like over and over and over and over and over again. Right. And so, yes, you get a down day and then you get the shorts covering. You get a little bit of a rally. They goose them into the close. You get an up day and then potentially you could get a little bit of a dip as the longs exit their positions. The only difference here, in my opinion, it's not going to be symmetric because, again, positive drift is a thing. Positive risk premium is a thing when it comes to equities. So longs that are in the market are not usually, I don't want to say usually, they're not always looking to exit. Like, they're not always looking to just get out after a day. Like, a lot of people are establishing long positions for the long term. And so they may be establishing that long position. They may see some momentum, whatever, and they may build into that long position even more and then just hold it, thinking, hey, I feel really good about this. Now, obviously, I feel better about it because my position has appreciated. I've got more capital gains. I've got unrealized and maybe even unrealistic profits on this position, whatever. So they're feeling good. They're like, well, I'm just going to keep it on because I'm not looking to get out of this position anytime soon. Shorts, however, oftentimes don't view the market that way because negative drift is not a thing. Right. And just, negative risk premium is not a thing. And so shorts, even perma bears, right? I can't speak for every perma bear out there, but I'm gonna say a lot of people that like to trade the market from the short side, myself included, right? When I am trading the market from the short side, it's not typically a long-term project. It's not typically something where I'm like, all right, like, look, like I've got the Tom Sosnoff bobblehead. I've got the Tim Wright poster. Like, these things are going to be staples in the room, but that doesn't mean I have to hold these short delta positions forever. right? I may only hold them for a day or a couple of days. And so a lot of times when you get a big down move and the shorts are quote unquote happy with that move, they unwind and it gives the market or the stock a little bit of a boost. And so I absolutely think that's true, but it's not symmetric because of the difference between being long and short in a market that naturally wants to go higher. And so that's just something to think about. But thank you there, Steve. That was a very, very good question. Good job out of you, Josh, for grabbing us that question. All right, let's see. If I do, man, let's go all the way back to the beginning. Where are you guys at? Man, I appreciate it. Look at you guys in that chat, man. You guys are getting it done, putting in some work. And so, oh wait, I got fooled. That was Josh. He's muddying up my chat. There I am. Okay. So let's see. Jared Kramer is in the house. What's going on? Well, I see Baker's in the house, kicking himself for forgetting it's Vixpiration because that was bullish last month too. Oh, is today Vixpiration? Isn't it next week? I think it's next week. Maybe it's tomorrow. It's always a Wednesday. I know that, but maybe it is tomorrow. I'm not sure. I can't keep up, man. There's too many expirations and Vixpirations and, fake imaginary economic data drops. Like I just can't keep up with all of it. And so maybe it is tomorrow though. I know it's always on a Wednesday. Jared Kramer is in the house. Adam Armfield is here. Yeah. Dell's down 613. Yeah. Oh, it is tomorrow. Thank you there, Josh. Okay. Thank you. Yeah, that's just so funny, man. Look at Dell. It's too funny. Is it still down? Hold on a second. I feel like we should buy it now. I feel like we should scalp some Dell. Like I feel like we should just get in there with a little 100 shares, right? And just let's scalp a couple of dollars out of it. And let's get a little bit of our money back. No, then it'll definitely sink like a stone. And so I'm not going to do that. But it's pretty funny. Let's see. Wolf is in the house. Doc, I was a little sloppy this morning. I meant to sell a call, but I accidentally bought one. We've all been there. Then I remembered stocks only go up, so I just went about my day. That's pretty funny. I don't blame you, right? And even just kind of zooming out, I'm actually curious. Let me know, because I would like to know, and the algo's dying to know. When you make a mistake, and I don't mean like you meant to buy one and you buy 10, like that's a big mistake. You probably clean that up right away, of course. But I mean like when you actually mean to buy and you accidentally sell the same size or whatever, you mean to do a short call, but you buy a call, whatever. Those are minor mistakes that obviously could have major implications. I understand that. But generally speaking, if we all kind of assume the market is random, and you may not feel that way, of course, but you're wrong. If we assume that the market is unpredictable, you just keep it on. Like most of the time, like as a default setting, you just keep it on and say, well, now this is my position because I don't know what's going to happen anyway. That's what I personally do. I'll just keep it on. I just keep it on. I'm like, well, I meant to sell, but I'm actually going to buy instead. And I'm not very good at this. So this could actually work out in my favor. And so I usually just keep it on, but I'm curious to know what you guys do out there. But that's pretty funny there, Wolf. And you're not alone, my friend. We all do the same thing, 100%. And so Baker says the children are far too comfortable with this rally. Yeah, they'll get them. They'll get them. It's going to be the fourth derivative of blockades that finally gets them. Ash Finn is in the house. What's going on there, Ash Finn? I appreciate you, my friend. Appreciate you very, very much. Finn West is here. Good morning, Dr. Jim. It's good to be with you. It's good to be with you too, my friend. Thank you so much for being here. Brian Dowdy is here. Hello, Dr. J. So I want to ask about assignment risk. Man, let's go. My 310, 515 UNH put is out of the money. I'm almost break even, but I've got earnings coming up. I rolled to avoid assignment risk, but was there assignment risk? Okay, so the question is, was there assignment risk? Well, the key to understanding assignment risk is looking at the extrinsic value of your position. So when the extrinsic value, again, leaving dividends out of it for just a minute, just looking at purely extrinsic value, whenever there's still some appreciable amount of extrinsic value, the risk of assignment is very, very low, because the other side, if he or she should choose, or it, if it's a bot, if they, to be very inclusive, if they should decide to assign the option to you, then they lose out on whatever extrinsic value is in the option. So again, just thinking in terms of economic significance and just assuming that we are all kind of rational profit maximizers in what we're trying to do. I mean, if there's like 30 cents of extrinsic value in an option, I'm going to lose that. Like I'm going to lose that if I exercise. So I don't really want to do that, right? Because, by doing that, I lose out on that 30 cents. It's gone. I keep the intrinsic value, but I lose the extrinsic value. So it makes a lot more sense to just go in and close the option, and then I get the intrinsic value and the extrinsic value. So the answer to your question, Brian, is what was or is the extrinsic value in the option? Now, let me look at this again. You said my 310, 515 UNH put is out of the money. You said you already rolled to avoid assignment risk. So I don't know what you had before. I mean, I'll look at the one you have now. The 310. Ooh, yeah, you're right there, man. Wow, look at that. You've got earnings. Ooh, earnings in like a week. So I know you've been battling this thing for a while. You're clear of the concept. You know what you're doing. You know what you're signing up for. Just be careful taking this thing into earnings because UNH is obviously a mover. It's obviously a shaker. I would think long and hard about whether or not you want to carry this into a binary event that is earnings. And so it's your call at the end of the day. I personally wouldn't do it, especially since it's come so far back for you. It may still be some kind of loss, but man, if this thing sinks another $30, $40, $50 on earnings, which is not that out of the question for a stock like this, whew, man, that would be a tough pill to swallow. But if I go to the 310 in May, the 310 put, oh yeah, this is going to have a ton of extrinsic value. Just a ton. Yeah, I mean, it's got $10 worth. And so I don't know what you had on before. You said you rolled to this. So I don't know what it was before. But yeah, in my opinion, anything over 15 cents, the likelihood of assignment is almost zero. It's never zero. And there will be times where you will get assigned. And so, I can't say that it will definitely not happen to you because that's just not being truthful. But man, anything over 15 cents, you're pretty safe most of the time. When you start seeing the single digit extrinsic values, now people may want to own the shares or be short the shares for whatever reason. And so that's how I think about that. But hopefully that helps you there, Brian. So Manny TP is in the house. What's going on there, Manny TP? Man, I appreciate you, Manny TP. Thank you so very much. And Steve is back. Steve Aguilar is here. Dr. Jam, I like doing poor man's covered calls, but my issue is I cap the upside too much, even if it's at my basis. So I'm trying to ratio a poor man's covered call or a covered call where I leave 100 shares or one leap open to the upside. That's fine. You can definitely do that. So you're kind of doing like an underlay. Right. So, a lot of times, just to be really clear on the terminology here, a lot of times when people hear the term ratio, they think in terms of it's like an overlay where you have a 1/2. So you're like, you're long one, but then you're short 2 options against it or short 3 options against it. That's typically what we mean when we use the term ratio. What you're doing is still a ratio because it's not a 1-for-1, but it's an underlaid ratio where, you may have, 3 long calls, let's say, but you're only short 2 calls. So you have one that's left to the upside to give you that additional upside potential. That's a very popular strategy, and I think it's a great strategy if you have multiple 100 share lots or you have multiple long calls with the poor man's covered call or what have you. And so that's totally fine. And that's what's great about a covered call. Covered calls, man, they don't get nearly enough love. I don't give them enough love. So I'm part of the problem. Like I'm speaking to myself here. They don't get nearly enough love for the flexibility and the versatility that they offer all of us as premium sellers, especially if you're brand new to options. Now, Steve, I know that does not apply to you, but again, shout out to my new people that might be watching. If you're brand new to the world of options and you're brand new to the world of derivatives and you're trying to figure out a way to be more active in your portfolio, where do I start? Where do I begin? Blah, 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 blah. I think the covered call is a great place to start. Now, it's simple on the one hand. Getting started is somewhat simple, and when you start thinking about the various outcomes, it looks a little binary at first glance. But once you start doing it more, you start to realize, there's all kinds of little nooks and little crannies that I didn't even know existed, like underlays and overlays and rolling in the money covered calls. Like it's kind of sneaky in its simplicity because once you go a little further down the path, you realize, man, there's like a few different forks in the road here. Like this is a city of Chicago intersection. Like in Lincoln Park, like Josh knows what I'm saying. There's intersections in Lincoln Park. There's like 7 different ways you can go. There's like 7 different streets with 7 different lights. And that's just normal. Like that is just business as usual for the city of Chicago. I mean, I did it every day for 4.5 years, 5 years. And so sometimes when you get into a cover call, it's very much like one of those intersections in the city of Chicago. But I digress. And so hopefully that helps you there, Steve. But yeah, I think it's definitely a viable way to think about it. And so Emmett Morrison is in the house. What's up there, Emmett Morrison? We need iPod Touch back to give this market a reality check. Don't you think, Doc? I do think. He could be lurking. He lurks a lot. He might be in the shadows. He may be further down in the chat that I can't see right now. And so iPod Touch, the thing about iPod Touch is he's selective. Right, so he's not just coming out like machine gun, like bazooka blast, like every day, like this thing's going down, blah, 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 blah. Like, no, he's very selective with his event horizon calls. So you can't force it. We have to allow iPod Touch to just tap into his natural ability. Like we can't square a circle. Like just let it come up naturally. Let it bubble up over the surface when it's ready to go, and he'll let us know. He'll be back. When the next event horizon is coming, he will let us know. Usually it's about 3 to 4 days after the fact. And so Ranch is in the house. What's going on there, Ranch? Brian Dowdy, definitely agree, Emmett. This rally messed up my covered calls. Now, wait, come on now. Brian, come on now. We know this is good for covered calls. Again, you might be kicking yourself at the opportunity cost. You might be kicking yourself because you sold the call, you didn't give enough room, whatever, but those are all different problems. This is a high quality situation. If you have a covered call on and it rallies, that's a good outcome for you. Is it the best? No, but you didn't know what was going to happen, and neither did anyone else. And so not even iPod Touch. And so keep that in mind. What's up there, LS? I see LS, RL5GP. Hello, Dr. Jim. What's going on there, my friend? Griffin Jones is here. Man, just pumping the algo. I appreciate that. N1C is here. Brad Munn in the house. Man, Ranch back in the house. Look at that. Look at Emmett Morrison. Forgot to ask you about Wolf on Friday. Wolf. Man, you guys are just doing it to me. Man, do you want to get back into that pick? I do not. I forgot that it even existed, actually, until you brought it back up. And so now I'm going to pass on Wolf for now. But maybe at some point in the future, we'll mix it up in some Wolf. RML is here. What is up, RML, for the algo? My man, I appreciate you. Patrick is here. Dr. J, always a high point of the day, man. I appreciate you. Look at you guys, man. Thanks for everything that you do, and also down with the algo, man. I appreciate you. I'm going to send you that cash that we agreed upon for you putting this comment in the stream at this very time. So thank you very much, my friend. You let me know what you want. You want cash? You want crypto? You want some precious metals? Just let me know, since none of it's coming anyway. So just shoot me an email, and I'll hook you up. So Ash fan, who wouldn't want to get into Wolf? That's right. Steve Aguilar, the algo must be fed. It must be fed indeed. And then Josh hopping into my own chat stream. There you go. This is a good time had by most. Trust me, I'm one of them. There you go. I appreciate you. Man, look at that. That's some good stuff. Ryan LP, this must be the prison yard. Then yeah, that was pretty funny. Again, I don't know why I said that, but you know, you just go with wherever the wind blows you. Like the wind is blowing the market back up. Like the wind is blowing the market back to the highs of the day. The metals are up. The market is up. Everybody's happy. Nobody's getting hurt, unless you got short a couple days ago. So Ordenu, hello, Dr. Jim. In your professional and academic opinion, do you think that an earnings season and ceteris paribus is statistically the same to do tech and or fundamental analysis than tossing a coin for direction? So I think what you're asking is earnings season a coin flip? That's how I'm reading this question. I could be misrepresenting your position, and if I am, I apologize for that. But I think you're trying to figure out, when it comes to doing different types of analysis around earnings season, or do they have any merit? I don't think so. Not for earnings season. Maybe not even at all, but definitely not for earnings season, because there's the binary nature of the actual event itself, of the release of the number, is just so bifurcated. Like, it's just so clearly white or black. It's just so clearly up or down. It's just so clearly left or right. And so I just think that for an earnings event where the potential for an explosive move on either side of the market is so high, it's so great that, you know, doing any of that type of analysis in the short term, I don't think it's going to help you. I don't think it's going to give you any type of an edge that's going to be able to overcome what the earnings event is going to do itself. Now, could those things give you an edge in the long term? I mean, I have serious doubts about the technical side of things, but the fundamental side of things, I mean, there might be like one technical thing that I think might work, but I'll keep that one to myself. But on the fundamental side, so when I just disappear and I'm in Fiji with iPod Touch, now you guys will know why. But from a fundamental side, I'm not even sure that works either. But from a fundamental side, I actually do think fundamentally, fundamental analysis can be really valuable when you're looking out 5, 10, 15 years. Because if you look at, like, if you were to overlay a chart of, you know, a company's earnings, revenues, and stock price, you're going to see, if you zoom out far enough, it's going to be pretty positively correlated. I really, truly believe that. And I think the empirical studies and the empirical findings back that up. Like, if you zoom out and you're thinking in terms of years and decades, not like months and quarters, then, you know, doing fundamental analysis to try to find a company that's going to sell more stuff and earn more money, it could be beneficial, but you have to have a really super long-term horizon to do that. And so, you know, that's typically a bit longer than I'm personally looking to, you know, kind of lock in some profits or some losses or whatever. I'm kind of looking for something by, like, I don't know, maybe Saturday, maybe Friday, maybe Monday at the latest. So, you know, when we're talking years and decades, it's like, I don't know, that might be a little bit too long in the tooth for my liking, at least. And so hopefully that helps you there, Orgdenu. I'm not even quite sure I answered your question, but it's out there anyway. So hopefully it helps somebody. RSU is in the house. What is going on? Let's go, Dr. Jim. What's up there, RSU? Man, I appreciate you. Man, there's some new people in the chat, like RSU. I don't recall RSU having been here before. And then there was, let me see, where was LS, RL, 5GP. I don't recall him or her being in the chat before. But I appreciate you guys, man. Look at you guys. Baker, Orgdenu or Fade Dr. J, always Fade Dr. J. PB Krista is here. Hello, world. What's going on, my friend? And when C says MH was brilliant. Man, thank you, my friend. Ranch says Sellies. That's right. There you go. Steve Aguilar, the algo keeps us prisoner. Now it does. See, now maybe that's why it felt right to say, because we are all just peasants and plebes to the AI overlords, like to the algo overlords. Like we are in a whole lot of trouble. And so let's see. John Covington, good afternoon, Dr. Jim. Tell us what trades we're fading today, man. I got you. What did we do today? We do something today? No, we just talked about stuff. Oh, yeah. But come back Thursday, John. So come back Thursday. Obviously, come back tomorrow, too, in preparation for Thursday. And I'll give you guys a little something in Netflix. But let's see. I King Lee says, long TVTX. Any insight? Man, what is TVTX? I don't know there, I King Lee. Travere Therapeutics. Man, I never heard of it. Didn't even know it existed until you brought it up. But I'll take a look. So earnings May 7th, no weekly options. I'm assuming, are we doing 3 stars liquidity? That's okay. If I go into, so I'm not going to do anything because earnings are in a few weeks. That's kind of a problem, but I am curious now. Okay, I mean, the markets aren't, I've seen worse. I've traded worse. They're not great, but they're not awful either. I would probably pass unless I was really hurting for something to do, which, I mean, that's the great thing about volatility being higher. I mean, even the VIX at 18, it's not the VIX at 20, 22, 24, but it's also not 13, 14, 15. So there's a lot of things to do right now. So King Lee, thank you for the suggestion. I would probably normally pass on this stock because the liquidity doesn't look that great. And the thing about liquidity is you got to remember, it's a problem on the way in and it's a problem on the way out. So you may get in at an okay price, although that's probably not even going to happen. You're probably going to have to give something up on the way in. But then let's say you get the move that you want. Let's say you were bullish and the stock goes up, you were bearish and the stock goes down, whatever. You nailed it. But now you can't get out. Now you're trapped. And so you're left with 2 pretty poor options. A, you pay through the nose to get out of the trade, which is never fun. Or B, you stay in the trade until you get the price you're looking for on a trade that you quote unquote already won. On a trade that already worked. I mean, I've been there before where you find yourself in that spot and then it just totally reverses course. Like you find yourself in that spot and then it's over and it's done with. And so that's never fun and not a good spot to be in. So I'm going to pass on this. But thank you there, King Lee. But while we're done with the show, I can't believe it, man. It's so fast. You guys have no idea. No idea. But I appreciate you guys. I appreciate you guys so very much. If I can ever help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Tim Knight coming up next with with trading the charts. So stay tuned for that. In the meantime, guys, trade them small, trade them heavy, and stay generous. And we'll see you guys tomorrow.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options, profit, and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Think you know where vol's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want with Tasty Trade.
Hello everybody, Tim Knight here, and it is back to another green day. I've lost track. I think this might be the 11th. It's either the 10th or 11th, let's say 11th, day in a row that the NASDAQ's going higher. And as I recall, I think that hasn't happened in at least 5 years, maybe more. So it's a pretty unusual move. In fact, I've been trading and charting for a very long time. I started trading in 1987 and began charting at exactly the same time. Charting was what pushed me into trading. And I can't remember any instance like this before, in which usually you see markets tend to rise, slowly rise, and rise, and slowly rise. And then if they fall real quick. So it's the old cliche about, up the escalator, down the elevator. This is exactly the opposite. Because on the way down, it was slow and grinding, and we had all these counter turn rallies. I think went on for I want to say 43 days or something like that. And that's actually my kind of market, because it's kind of steady and you can kind of daintily keep housekeeping up, and it's manageable. But it went down slowly and then went up like somebody took a tube of toothpaste and just squeezed it. Because we have undone 43 days or whatever it is of damage in really just 3 or 4 key days. This has been an extremely fast descent, and we are either at lifetime highs today or awfully close on just about every important item out there. So it has been a very, very rapid counterattack. And we could absolutely be at lifetime highs on the S&P 500 tomorrow at this rate. It just won't go down. Everything's green. Every single stock index is green. Gold's up, Bitcoin's up, etc. Just across the board. I'm still up for the year, pretty decently actually, because I'm preserving those profits. I've done nothing but short all year long, and I am beating the market. But the profits ain't what they used to be. The past 2.5 weeks have stunk, to use polite language. And but you got to take things real. One reader of mine, he wrote me. He said, a few weeks ago I was up 230% for the year, and I'm only up 123% for the year. I said, sir, I've taken a survey of how many people feel sorry for you, and there's no takers. Come on. So in any case, yeah, I have given back a goodly amount of profits, but still up and still staying defensive because I like most of my body parts and don't want to get completely blown to pieces as this completely confusing and perplexing mega rally continues, which have added thousands and thousands of points to the Dow, hundreds and hundreds and hundreds of points to the S&P. And like I say, we are at or near lifetime highs on just about everything under the sun at this point. And I'm really not sure why, because it's not like peace is completely broken out. There still seems to be a lot of uncertainty, but nobody cares anymore. And it won't be too long, it seems, that Iran is about as relevant as, I don't know, Marjorie Taylor Greene or something. Just, it'll just be way back in the news cycle. And people won't be talking about it anymore. And we'll be talking about something else, hopefully like earnings or something relevant to stocks. I've got some charts ready for you, of course. Let's jump in and kind of catch up here. We'll start with the IWM. This is the small caps. Well, Mr. Lifetime High. Now you may say, wait, that's not a lifetime high. Well, no, it kind of is, because this is intraday, of course, these bars. And it looks to me like the close today might be a new high. The last peak we had was way back on January 22nd. That was the shooting star, which began all the fun. Fun's over. And we are right back there now. So, we could be talking pennies or something like that, but we have certainly pushed back into this high right here, all this trading activity from the highest point in history for the small caps. Semiconductors keep blasting along. The greatest fake out of all time right here. Oh my goodness, this is just plain mean. We have this beautiful topping pattern, failure. It looked like all systems were go right here. That was the bottom, and it just like raged higher. I have no semiconductor positions left. I shot the last one this morning, Micron. I ain't got nothing with semiconductors, and so this has been this explosive rally to, there's those words again, lifetime highs. So yeah, that not going to grab that skillet for a while. The diamonds are kind of unusual in that they're just about the only thing I'm going to show you that isn't at lifetime highs. The Dow Industrial still have a ways to go. They're still cleanly below this price gap. And who knows, maybe that'll be the exhaustion point for the market in general. But the Dow 30, for whatever reasons you may want to assert, is a real laggard right now relative to things like semiconductors, which are, taking no prisoners. Over in ETF land, also overseas, the emerging markets have sealed their final gap right there in red. You can see we've pushed above that. The lifetime high for this one was this big shooting star like so. And this was the fall. And of course, we bottomed back here, and it's been just blasting high ever since. So that gap is sealed. I guess I'll leave it up for now, even though it's kind of irrelevant since the gap is done. But this is my patented phrase, big fat mess right here. Not much to read on this one. And then EFA, this one has not sealed its gap yet. It's got a little ways to go, and a much, much neater chart. Here's the wedge. And as you can see here, there's a couple of cool phenomena that they don't confluence, that's not a verb, but they do match right here in terms of where the gap is and where this broken trend line is. So should it push to this vicinity, that's kind of an interesting section. That might be an interesting bearish opportunity, should we get there, which seems inevitable at this point since we go up every day. But that's a level worth watching on the EFA. Crude oil, it has the habit of doing the opposite of what everything else does. So way back when the bear market was going a couple of weeks ago, crude oil was up, and stocks were down, down, down. And that's just the opposite. Crude oil is falling hard. We're down in the lower 90s now. And we have, as you can see here, a big fat red bar today as things seem to be, settling down, and the blockade seems to be perhaps compelling the opposing parties back to the table. So crude oil sinking, and in turn, of course, the ETFs dedicated to energy are slipping badly as well. Here's XOP, which it's acting almost like a bearish equity fund because it peaked when stocks bottomed universally and have been falling hard ever since. Major price gap there, and we have undone weeks of ascent right here. So this has been a big hard fall on XOP, and then XLE. Not quite as dramatic, but still down very persistently and in the same kind of time frame as the XOP has been. Speaking of gas, one stock which has been just crazy lately, you may have heard of, is CAR. As I recall, back in the days of the financial crisis, various car rental companies got blown to pieces and eventually kind of merged into this like super group. And this is the big one here, CAR, very fitting ticker symbol. This is Avis Budget Group. And as you can see, a few weeks ago, this thing was just a bore. It just went lower all the time. And this is way before Iran happened. It was just like lower and lower and lower, just a garbage stock. Then for whatever reason, this thing lit on fire. It became like a meme stock out of the blue. And so it went from it was down like the 70s here, and now it's around 400. And there's no of course there's no fundamental reason. It's not like a law was passed that everybody has to rent cars now instead of drive their own. It has been a complete sea change, And what's kind of fun in a gallows humor sort of way is to find out, like, when does the music stop playing? Anybody who's dared to short this thing based upon the idea of, well, this can't keep going on, has gotten burned badly. For the record, I would not go near this thing within 4 zip codes. I don't even close to something like this, because it's just gambling. It's raw gambling. Like, when will that mass of people, the sellers, outdo the buyers? So it's going to go to 1,000 a share or 5,000 a share for all anybody knows. But when it does start to sell off, and it sticks, then you're going to see just scorched earth everywhere, because, what goes up this quickly goes down just as quickly, because nothing's changed about the company. So yeah, this is back to the days of AMC and GME and all the other meme stocks. It just becomes a craze for a while until it's not. Amongst the shorts that I still have, which number a mere 20 now, most of them are actually red today. And here's a few I wanted to highlight. Here's CrowdStrike, CRWD. Not a particularly pretty pattern, but this is down 1.5%. I'll take it. I shorted this one earlier today, Cloudflare, NET. And this is reversed nicely, down about 2.5%. Dow, DOW, is also down not quite 2.5%. My one and only energy play, which isn't particularly clever, it looks just like the XOP, but it's the OXY, Occidental, down about 4.33%, so good. And there's a gap there. Let's just mark another gap, because we have been quite weak on energy lately, of course. Another one, ASTS. I've got puts on this, and I'm not sure what's going on, but there was some kind of news, because it just fell out of bed this morning, and it's down nicely, over 10%. So that's pretty cool. So like I say, I talked about it yesterday, I talked about it today. I've lowered risk. I'm still pure short, but I've got 5 portfolios I manage. 2 cash, nothing else. You ain't gonna hurt cash. The options one, commitment level, 25%. Just whisper thin. 5 positions that expire months from now, no earlier than September. And the other 2 are just straight up short equity portfolios. And they are, one's like 66%, and the other is the only saucy one, is about 115%. So across the board, like mostly cash, low risk, because this market's still really confusing. And only an hour ago, it looked like things were kind of like hooking lower, and then the market made the most obscene gesture and just headed to new highs again. So we're at the high for the day right now. So this is a confusing market, it's a perplexing market, and I ain't gonna guess. I'm just playing it safe. To add to the weirdness, quantum is back in vogue. Just about every quantum stock out there is having a good day. Although these are not great bullish patterns in the longer term. These are completely counter trend. They're just undoing some of the wretched damage they've suffered already. But they are up for the day. That's true. Double digits in many cases. Here's Rigetti, RGTI, up over 11%. Here's the IonQ, which I got stopped out of lickety split this morning. That's what stops are for. Get out before the damage gets worse. This is up almost 20% now. And QBTS, which is quantum, I think. And they're up 14.8%. So quantum is having a heyday. Basically, all the stuff that used to be really hot is briefly hot again. As far as precious metals go, just looking at GLD, it has barely sealed up its gap here. The next gap is right up here, like so. The only precious position I've got of any stripe is about a couple of hours ago, I did short GDX, the miners, with a stop right at that gap right there. So that's one of a few ETFs that I'm short. So this GDX, I'm also short, continue to be short XLB, which God bless it is down a little bit today, amazingly. This is down fractionally, but it's respected that gap as well. So that's polite. So just to close up with our old friend, the spider, there's the SPY. This was the distribution top, which has been completely conquered yesterday and today. It's amazing. Yesterday and today alone basically have traversed the entirety of that distribution top. Yesterday's low was pretty much at the bottom of the rectangle. The present price is pretty much near the top. So months and months and months of trading activity have been expressed in 2 days, yesterday and today. And what is that red line? That's the lifetime high, which would be a cinch to push aside tomorrow. Would be easy. So I'm still going to play it safe. Hope you're doing all right. Most of your bulls out there, so I'm sure you're doing just dandy. But this is a really interesting market, but some interesting things should be watched at a safe distance. So I'll see you tomorrow. Bye-bye.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
So I studied economics and international relations, and I wanted to do the hands-on rather than the academic version of that, and the most natural thing was global macro investing. I begin with a sense of where I think the overall direction is for the macro theme for the next 6 to 12 months, and then look at some basic response from the price action to see how it's going. I think the price itself is the purest of indicator. It subsumes within it the collective emotions of the market. One of my favorite mottos, if you will, comes from the always great Ira Harris, who said, if you're right at the wrong time, you're wrong. And so for me, every macro narrative begins with what's the price action saying, rather than this or that economic indicator or some such thing.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
Ring the alarm, boys! Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Hello, everybody, and welcome to the Tuesday edition of Last Call. My name is Les Deerking. That beautiful Burgeonette to the left of me is Jenny Andrews. You haven't done Last Call with me in a while, I feel like.
I know, and I was on vacation last Tuesday thinking to myself, geez, I hope Liz remembers Last Call.
Fun fact, I didn't. And then I had to quickly text one Mr. Anthony Batista and be like, hey, will you jump on with me, please? And he said yes. So
I'm going to give a shout out. I'm going to give a shout out in case he's watching to our viewer that we met on the train today.
That was so much fun. What was his name? Do you remember?
It was an unusual name. It was like Arnav or something like that.
You get an A for effort on that one. It was really nice to meet him, though, on the train. It was an unusual name.
Yeah, but it was because didn't you hear me? I kept trying to have him say it again. I was like, can you tell me your name again? I was going to try to give him a shout out. But I think it's Arnav.
I don't know. Your first attempt was the best. No, but we'll see him again because he lives in our area and is on the train. But I think he was taking the earlier train home when he ran into us. It was really fun. Usually, you and I have been separate when we meet people and get recognized, but this is the first time we were together.
I think so.
Yeah,
I think so. Although I do remember one time us walking together maybe in an airport or in a city, Denver. I remember us getting recognized together somewhere along the way on a road tour.
But it was fun. It was a lot of fun.
And it would be easier for people to recognize us when we're together, because separately, we look like any other face in the crowd.
I don't know that you could miss us. We have Tasty Live splashed over everything we own when we're on the train.
Well, and it's usually
backpack. You were wearing your trading coat.
Oh, on the train, yes.
Yeah.
It's usually our voices. Didn't the last person recognize you from your voice?
For my voice. Yeah. It was pretty crazy. Okay, but this is last call. We are going to talk about earnings. But Josh, can you please hit us with the what's your assumption art card, if you don't mind? Because the boys desperately need your help tomorrow. Make sure it is liquid. Send your assumptions, and the Bat Brothers will take a look at it. For you.
And I think it's, this is going to be hard. It's going to be a stumper. At least you're giving your assumptions, because it's tough. I say this all the time. It's really easy to place trades when the market's falling and products are at their lows. It's tough to pick a direction after we've had the rally that we've had. So
it was last week, Wednesday, where the what's your assumption was so far off because they send them in at night, and then the market had been in fuego. So it was just kind of it's interesting to look at it from that point too.
Yeah. So this is, it'll be, at least you give your assumptions and the boys just have to come up with a trade. Makes it easier. So we have, I don't know if you want to go on the platform. We do have the market. I got the market up. And
the other thing I was going to say is, and I pushed it out, but this happened while we were on the train because I got the ding for it through my phone or my computer, one of the two. BBWI. We also had a strangle and that got closed. So let's pop in the platform and take a look at. I can see it, but I don't think the world can see it yet, Jenny.
We'll pop in the platform. I'll let you know when the world can see it. Josh is on it.
I can see your screen. Would you like me to just describe what it is that I'm looking at?
No. Here we go. Everyone can see it. So here it is, BBWI, and this is Bath & Body Works. This comes, I know this. Is it this one?
No. So if you pop out the side, because you can see what we had, we kind of doubled down. I think a strangle closed. So we put a strangle on top of.
Yeah,
it's a strangle. Yeah.
So we did. So we had a strangle and an additional put.
Correct.
Right. Interesting. And this is compliments of Mikey. Mikey got us into Bath & Body Works.
That he did.
Or was this the day that I turned 50 and I got a candle that said back and body hurts?
You know what? I think we had two trades, one from Mikey and one from you.
I think so. Because this is just 4 days ago. I think it was we added something 4 days ago or rolled, but whatever. We had a strangle that filled. As far as other positions go, we've been trying to take this put spread off and just not getting filled. And I don't want to say pennied it up. I've nickeled it up and nickeled it up. And this is going to be my last nickel it up.
Nickel it up. There you go. Sometimes your last, all it takes is one last time, right?
So we're out of that.
Do you know what I think is insane, Jenny? Take a look at the SPOOs. Go over to your left and see SPOOs are hit the 7,000 mark. That I think was crazy to me because everybody was like SPOO 7,000, SPOO 7,000. SPX hasn't hit it yet, and not that it matters, but we were just in the SPX pit today. I was going to say the other day, but today, a couple hours ago, we were in the SPX pit.
So SPX is at 69.65. And I've said this many times. Can they just all be the same? Can they all be the same? If ES is 7,003, can SPX be 7,003? Can they all just be the same? That would make it easier, right?
But do you remember what we looked at today? We looked at the 69.50 call. And it was out of the money.
69.50 call.
This is exactly what happened with Tony Batista on last Tuesday. It was the 6,900, but it was a lot of them had traded. Here, 148,000 went up.
148,000.
That's what we were looking at the other week too. It's crazy.
Again, when we talk about the I've got volume. Hang on,
I was like, wow, the open interest matches the volume.
And this is what we were looking at today. The calls, 155,000, 150,000, 114. There's so much volume on the calls, way more volume than the puts.
Yeah.
What are you going to say for what Frank's message is going to say tomorrow? Calls leading puts?
Oh, I mean, he has to say calls leading puts. Now, that being said, this is in the 0 day. There's lots of strikes and lots of different levels, but I think in the near term, it's calls leading puts.
Well, I know I'm assuming it's going to be calls leading puts. I was going to try to guess the ratio, but I don't know.
Oh. 4-1.
Yeah, there are a lot more calls in the 0 day, to Liz's point, than puts. SPOO's up 81. Are we going to be down 81 tomorrow and right back to where we were?
I don't know, Jenny. I don't know. You don't know. No one knows.
I asked our conductor, and he thought we were going to be bullish.
Yeah, he says, well, he's talking his book. He doesn't know how to short something.
Yeah, I guess so. And now I know, Liz, you're more bullish for tomorrow. I just bought some puts in XS. I'm showing my phone because I had to do it on my phone. I just bought some puts in XSP.
You bought both? You bought the straddle?
I bought the straddle, sold the straddle for a profit, and I just bought puts for tomorrow. I bought some puts for tomorrow, not thinking like, oh, I'm going to really cash in on these puts. But if we fall, fine. I might be glad I have them because my account's been doing well. I don't mind throwing away some money on some XSP one-day puts.
No, I mean, you do kind of have to throw some hedges in at some point.
I wanted that straddle. The straddle. Here, let's talk about this. I wanted that straddle. The SPX straddle, we were talking about this just before the show. $40, $39 for the SPX straddle. Do we think the SPOOs are going to move more than $39 tomorrow?
Yes.
39 points? I do. So I was going to buy this, and then Liz talked me down to the smaller size in multiple XSP contracts.
Well, XSP, then you can kind of maneuver it however you want, even if you want to, because it's not as expensive. You can kind of ladder them if you need to.
Right. And so I did it in XSP, and maybe my strike was, I don't know where it was, but wherever it was, the straddle already made money, so I got out of it, and just now all I did was buy some XSP puts.
Yeah. No, I don't think
in the one day. And you've got a calendar going on. You've got the
7,000.
7,000 1 day, 2 day?
1 day, 2 day.
1 day, 2 day, 7,000. That's not bad. $6.
I know. That's what I'm saying. Well, I wanted something in for the near term, just in case,
Hey, $6 is going to be 60 cents. We'll watch it. We can watch it.
Sure. So I went with the 7,000 in there just because, and you'll notice in that one day that you saw, I wanted something like when you're putting in a calendar like this, you want to make sure at least you're getting some type of extrinsic value for those. That's why I didn't want to go too far. And in the one day here, you're getting 50 cents. So that would have been $500 in the other one. Yeah. I'm up a little bit of money in it already because we've continued to go up since I put it on.
Right. So, but I'll just put it in. We can keep an eye on it. Then if there's a 7,000 party, and when does the 7,000 party happen? Does the 7,000 party happen
now? I think it's the SPOOs. It's not SPX. I think we've hit it. I think people have their 7,000 hats on.
No, because SPY is 694. I think
SPY is SPX.
And I think SPY's got to hit 700.
Gosh, when do we have the party? Is it SPOOs or SPY? When do we bust out 7,000 hats?
Yeah, when do we get the party hats out?
Well, you take a look. Go to even the S&Ps if you don't mind at the chart because it's been there before.
So, but like, what does and I hesitate to say Gen Pop, but like the other networks, what do they advertise when they're like da is up this percent? They're looking usually at S&P 500 or
they're looking at the futures. Well, they say the futures. But so that's what I'm saying. We've been higher than that. So the 7,000 has been broken before.
I know. So it's not going to be as big of a party, but people are pretty excited about hitting it again.
Yeah.
Yeah. I wish I were in my old studio. I had a whole box of Hawaiian lace.
7,000 hats.
7,000 glasses.
You were ready for the 7,000. All those peaks that went above 7,000, you wore those things, drinking wine out of your 7,000 glass. It's pretty funny. Do you want to take a look? I know I want to take a look at the earnings real quick too.
Sure. I pulled them up here. Here we go. Tell me what you're most excited for. ASML, Morgan Stanley, Bank of America. I don't know if that's Procter & Gamble or I think I go through this every time. BGR, PNC, or FHN.
I'm going FHN for sure. I'm excited about that one. I don't know what it is.
I don't even know what it is.
That's what I'm saying. I have no idea what it is. No, these are all the banks. And some of the banks have been a tale of two cities, right? Goldman was down. JP Morgan was down. Were they all down? I think maybe BlackRock got a bit.
First Horizon. Isn't that a bank too?
It's probably a bank.
So PNC is my bank. I've got I could walk to PNC from here.
Congratulations. Congratulations on your banking, being so geographically close to you.
Hey, I'm friends with everybody at PNC. I've known these ladies at the tellers. They've been working there for 20 years.
How often do you go into the bank?
I don't know.
To go say hi to everybody?
I feel like I'm always in there writing checks that say cash for large amounts of cash.
For large amounts of cash.
I don't know. Like if I ever need cash, I go into the bank and write a check for cash and they hand me all the cash.
Do you know what this is going to be exhilarating TV, but you know what you can do now? You give them your debit card and they'll give you whatever you want.
Oh, really?
Yeah, you don't have to write a cash check now anymore.
Well, I don't know if PNC does it that way.
If you go to the teller, they can give you as much cash as you need. You have to give them they'll put it in, and then there's no limit. On the machines on the outside, there's a limit. On the inside, there's no limit.
Yeah.
Well, I mean, the limit is what your limit is, but like what your bank account is, but you can do whatever you want.
Yeah, I see. Okay, so as far as making a trade in any of these, I'm ruling out FHN. I'm ruling out PNC. We could take a look.
Oh, can you do me a favor and take a look at JP Morgan? They were this morning. I want to see if they're still down.
Sure. Just a little.
I mean, a little bit.
Just a little. And then what do we have? Morgan Stanley?
It was Morgan Stanley, Goldman Sachs. Like they were all down. I think, was it BlackRock that was up? One of them was up.
Well, look at Morgan Stanley. That's up.
Yeah.
And what's PGR? Progressive. Oh, Progressive,
of course.
I don't mind trading Progressive. They insure my boat.
You like your bank. You like your boat insurer. If you can walk the things or you use them, you don't mind being in there. Look at that. That's been beaten down. I don't mind doing something.
Yeah. Let's do something in Progressive. Whether a $6.40 expected move, whether we just go to the one, it's kind of expensive.
Yeah, it's going to be expensive. Yeah, no, close it up. I don't need it. We're not going to use $3,100 to get. We don't care that much about this.
About Progressive. No, we don't. We don't. I didn't expect it. When I looked at the chart, I didn't expect a put to be $3,000. Did you?
No. I mean, it's a $200 stock, so kind of.
I wasn't really paying attention to the price. Progressive. Well, I guess that's 0 for 0 on the earnings trades. Let's each name something new that we traded today, and we'll put those in.
I didn't trade anything new. I was in defense mode all day today. I didn't put anything new in.
Come on.
I closed. My account is in such good shape. I was just protecting and protecting and protecting, and I'm staying with things that are winning. And I haven't done anything else.
I've been taking off my high flyers. Like I took off my Microsoft. I took off a lot of high flyers, big movers, things that were up, large dollars, like up $4, up $10, up whatever. I took off a lot of those, and I resorted to little babies because I feel like this is protective mode. And you put this on today. We both did. We could see our volume. We went to the May 31 day, 20 puts in Campbell's soup, because I feel like, I don't want to say this is like having nothing on, but this isn't going to hurt me if the market crashes.
So I did lie. I did put this on with you if you got this on. So I did this. But I just looked at my trade count. I traded 47 times today, just defense. 47 defensive trades and 1 Campbell's soup. I'm sorry, 46 defensive trades and 1 Campbell's soup.
I closed a lot of winners and put on a lot of these baby trades, because these trades, at least I could make some money if we don't do anything. But if we do fall, they're not going to hurt me too much. Like,
are you crossing earnings?
No.
Why is the implied volatility so high? Why is the IVR so high?
Because Campbell's soup has gone from 35 to 20.
Is it going out of business?
No. Well, I can't. I mean, I don't know what's going on in Campbell's soup. All I know is that
if you think it is, I'm going to start stockpiling my clam chowder.
All right, so I'm going to sell. And watch this. This is quoted in nickels. 75.80. It's quoted in nickels. I'm going to do a test. I'm going to put in an offer to sell it on the bid, and I bet you we get filled mid market. 75 cent offer.
$1 tomorrow.
75-cent offer.
I bet we get filled at 75. Oh, $75. $1. You owe me $1.
I got filled at 77.
I know you did.
And I mean, this has risk. This has risk of owning 100 shares of Campbell Soup at $19.25. That's the risk in that trade.
Yeah, that's real risk. But this account traded quite a bit today. We've done a lot in this. I know we'll do this near the end, but there is a new promo that we're going to pull up the art card for. We don't have to do it yet. We'll do it right before Chris and Ilya come on.
Okay.
So do you think Chris and Ilya are going to tell us what the heck is happening with this market? Because you and I just look at the numbers, but Chris and Ilya dive down deep into what the heck is happening.
Well, guess what? Nobody knows what's going on. I think what the consensus I got on the trading floor today was that the traders, the market makers in the SPX pit were all surprised that the market SPOOs were up 70 points today, 60 points, 50 points, whatever they were up when we asked them, they were all shocked.
Don't
so
you
I
feel
don't think
like there was the most active I've seen them in a long time? And it's weird on an up day because they were consistently active. Now, granted, we were only there for about 2.5 hours or something like that with the whole show from the beginning to the end. But I would say that the noise level and volume and trades that were coming in were consistently active.
it was busy. It was very busy for an update, very busy for a day where VIX is 1840, SPOOs are up. It was very busy in that pit. Usually you get that kind of vibe and feel on a big down day. So
yeah.
we will see. We will see. Now, with the move we've been having, and as I look through our deltas here, long, tiny little short one on this calendar, which, you know what, we're back. Do you want to just take this off?
Yeah, close it.
The chances of Boeing being at 220 in 3 days is slim.
Well, we could put on, what did I do? My defensive move in Boeing was I did a Bob on fire trade and got it the heck out of the way, but it is my earnings trade.
And that's expensive in this. It's a $223 product.
Yeah, it's expensive.
So I say we just take our other win on the calendar because, our Boeing P&L is good on these two little calendars. And then what I was going through, you talk about being in defensive mode. If you look at our account, long, everything's positive. Can you find one? You can scroll through every position we have here, and there's not one negative sign in front of the delta.
No, I will tell you that, but puts are neutral too. So you can be okay in a down move in puts, some of them. So I don't want to disillusion anybody. We're not just going out there and buying Nike. We're not just going out there and buying, Intel. We're actually selling puts against it. But I agree with you. But look at this, Jenny. We've got Boeing has a 46 implied volatility. Now, granted, I know they have earnings, but most of this, I shouldn't say that, not implied volatility, IVR. I stand corrected. It's got a 46 IVR. So we're seeing with a VIX of 18, I still think we're getting some decent IVRs across the board.
Like earnings are coming up everywhere, right? We've got earnings coming up in so many products where the ranks are high-ish, I think because there are earnings coming up everywhere. So here's Boeing's earnings within the next cycle. We've got earnings all over the place. But my point with we don't have one negative delta position. Maybe we should add one. Maybe we should do who's our guy who does the ES crab trades or throw?
It's not Blue Wackadoo, is it?
It's not Scott Somer. It's not Blue Wackadoo. Is it Scott Somer?
It's not. I don't think it's Scott Somer. I don't know, but I don't think it's a bad thing to look at that in ES crab trade.
Or something that will give us a little bit of short delta, just so if we're down one day, we have a winner to take off.
No, he does them short term.
I know.
He does them very short term because they're expensive. That's why he does them so short term.
Let's see. Well, what would we want to do it in? What would we want to do? Like if we were
use ES. I like ES. But the last time we did it in SPY because it was too big.
Right. ES is always more expensive.
Yeah.
It's always more expensive.
Do SPY. Well, I don't think we have anything in SPY, do we?
No.
SPY's got a 35 rank. That's not bad.
Usually we say
he does like 3 days, 7 days. Like it's a short-term crab.
Well, and it doesn't even have to be that. Just something that will give us a little short delta. Like a delta buster. Usually we're putting delta busters on the way down. We never put delta busters on the way up.
Yeah, that's what you do. You put a delta buster on. How do you get short delta? Oh no, it's how do you get short delta when the market's already short?
Yeah, but if we look at a delta buster now, let's see. If I do $10 wide, $693, $683, $10 wide, it's only $299.
Yeah. What's weird is you have a decent implied volatility, and then you do a $10 wide call spread.
Let's see if I could do a 5. Look at this, $5 wide call spread, and all we have to do is pay $1.30 for this.
That's not bad. Well, you're paying $1.30, so you could lose $641.
Right. Otherwise, you make it $10 wide, and you got to bring it down.
You're still
a debit. That's still a debit. Oh, because it went $5. It's $5 wide strikes. It's tricky because it's like $5 wide strikes here. 705, 750.
There you go. You got a credit there. That's a bearish trade. And you can see you're getting short 25 deltas. Now, granted, what's great about this is that delta is beta weighted to the SPY because it is the SPY.
So we've been making money in this account on all these up days where if we turn around and go down, yes, we've closed some positions, but we don't have anything that would come off and be profitable on a down day.
What do you think, without looking, what do you think our overall beta weighted delta is on this portfolio?
It's not much. 25.
It's 75.
Oh, 75.
Yeah. So
this would only cover 25 of them.
If you take a third of it off, it's not the end of the world.
Yeah. And honestly, look, where was our short call here? Is it the 710? Or do I have to move it to the 705?
705.
I like the 7. I don't mind paying $1.50 for this.
Well, move it to a $10 wide because right now you're $5 wide.
Okay, then we're just paying 25 cents.
Yeah.
So if we pay 20 cents for this, we're short a $10 wide call spread, long a $10 wide put spread, but our short call is the 710.
Yes, true story. In 31 days.
Yeah. And
I'm only saying this because you and I have a tendency to blabber on. It's 55. So you're going to want to make sure you put that in if you want it in.
I just think it might not be a bad
idea. It trades until 3:15, but still.
It might not be a bad idea. And if we want less risk, you can make 5 by 5. So
and I don't mind this. I think we should put it in. I would do 5 by 5. I like that just because we're small fries anyway.
Oh, here. Yeah. 5 by 5 is costing nothing.
It's costing nothing. Now, the old other adage is close your bullish delta. So there's two ways you can hedge. You can either put this on, which is great. And I like this. I actually kind of like adding trades instead of removing trades, or you close some. Do you know what I mean?
We did. So today we went through and closed everything that was 50%.
Yes, we did.
And now...
And we'll do that same thing again tomorrow. The only thing we left at 50% was Oklo, and I'm fine with that.
So here now we have short 13 delta, which... Like you said, we have 75 long beta weighted deltas.
Oh, you cut it in half. It was 25 when we had the 10 by 10. Got it.
Yeah, now it's only 13 because it was 5 by 5. But we're only risking $500 to make 500. At least if the market's down tomorrow, we'll have one bearish trade to take off.
Yeah, but it won't, like with those, I will tell you, because your debit spread to credit spread, the debit spreads, even if it does go down, it's not going to be like full profit, even if it does go through it.
No, we'd be lucky to make $100. If we had the 10 by 10, maybe we'd be lucky to make $200. But we'll make something. What I know we're almost out of time. What is our biggest delta here? DraftKings, which I'm not.
Wait, I think it's just 2 puts, isn't it? See what DraftKings is. Open it up.
Well, no, we changed it to the zebra.
Oh, that's fine.
Oh no, we do. Oh, it's the combo. It's the combo.
But that's it. Well, okay, I was going to say it's defined risk if it was 2 put. If it was the.
And then what else is big? Palantir. But Palantir is already so beaten down. We could take that off if we wanted to.
No, but I mean, look at that. You've got the 115 put. It's trading 135. We only put it on 1 day ago.
I know. And then this 9 delta XSP, what do we have?
We just did this.
That's giving us 9 deltas?
Yeah.
That's a fictitious delta. Kind of.
Well, and that's what I'm saying. These are all theoretical numbers. So if it goes up, theoretically your account's supposed to go up 1 for 1, but that's just in theory.
I mean, this like 700. That's the biggest delta on our board, a 60-cent calendar in XSP.
Yeah.
So I'm not worried about it.
That's right. When you were looking at these being long deltas, I was like, I don't know that we're that long.
No, we closed a lot. We're good. And 2:58. We got 2 minutes till the bell rings.
Okay, so Josh, can we please pull up the new promotion? I don't think Jenny's seen it yet, and you're gonna have to read it, Jenny, because it's gonna be about this big for me, because that's how big
that's how big it is for me. But I can see. Here's what I can see: earn a 200% commission rebate.
Yes, it is. It's a pretty good deal, and I think I remember seeing it was up to a couple $1,000s. So if you pay $1 in commission, you're gonna get $2 back. I think it's only for 1 month.
And is this for new accounts only?
I don't know. That I don't know. Get double commission rebate on stock and ETF options for 30 days. That's pretty good.
What does it say right here in the fine print under the bulls?
Oh, you want me to read the fine print? The fine print under the bulls? When I get
Josh, you're pulling up this slide for 2 50-year-old women. What does it say above the bulls?
Above the bulls, it says get a double commission rebate on stock and ETF options for 30 days. Above the bulls. I thought you wanted beneath the bulls. I can't read the beneath the bulls. I was like, you're just being mean. That's just mean, Jenny.
Well, new promotion came out while I was out of town. I had no idea.
I mean, it's a pretty good one, and I think it's kind of fun because everybody says, and it's kind of thwarting that we're just generating commissions. That's not true. We're going to give you double your commissions, 200% commission rebate.
No, that's not true. And I keep in my account like year-to-date P&L with commissions. Right now, my commissions are a little high right now because my P&L is not as what I would hope it to be as far as this point in the year, but it took me a while to make a comeback after a few hits. But my commissions are probably 20% of my P&L, maybe less, maybe 15% of my P&L.
I think 20% is high for you. I really do. I think it's
normally it's 10%. Like normally I would say like an average 10%. And I think I've got maybe it's 15%, but my commissions are 10% is normal.
And we closed on the highs. Spoos up 82, 7,005. All right, Jenny, you have a wonderful afternoon. I will see you live from the trading floor again. Everybody stay tuned for Chris and Elia. They are one of my favorite shows on the network.
Yeah, they've got a great show. Everybody stay tuned, and we will see you tomorrow live from the SPX pit. Have a great day, everybody.
Have a great day.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
When you've got a futures contract that's in contango, what does that mean?
Futures, unlike stocks, have multiple prices appropriated to them. That's known as the forward curve. So when a futures forward curve is in contango, that means that the front month is trading cheaper than the corresponding futures back month. So you'd see that forward curve most likely looking like this in terms of prices.
And backwardation, what does that mean for futures contracts?
Backwardation is the opposite of contango. So where contango front month futures contracts are trading cheaper than the back months, backwardation is the opposite. So those front month futures contracts are trading richer than the corresponding back month contracts.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Think you know where vol's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want, with Tasty Trade.
The bad guy. I want it all that don't make me the bad guy. I want it all that don't make me the bad guy. I want it all that don't make me the bad guy.
We're back to 7K. It's Tuesday, April 14th, 2026. This is Overtime. I'm your host, Chris Vecchio in New York, Elias Spivak in San Francisco. We're here to take you through the next 26 minutes as we wind down the trading session. Continuations on the menu for this Tuesday. The S&P 500, which put in a bullish engulfing bar yesterday, finds more gains today, 7,004.75 right now here in ES. NASDAQ, as we turn to the charts, of 1.7%, 25,996, basically 26,000 here, Ilya. And your Russell up to 2716 right now. The day largely defined by that continuation of vol contraction where VIX futures, volatility futures rather, we see ourselves down at 2048, and we did briefly brush up against the yearly low in the K contract. Oil, which rolled over into M today on the platform, you'll see in the K is down 7%, in the M, which is the default, is down 4.4%, and maybe that divergence is worth discussing. Gold and silver breakout, we have the dollar falling back, but Ilya, let's give the people what they want. They want to talk about the S&P 500.
Yes, they do, and rightly so.
This thing is back to the highs.
Basically.
You and I, we can't do our fun little Hannity and Combs type of thing where I'm like, you dumb liberal. How come you're not long stocks?
Sure.
And the market goes up because I've been long the entire time. This has been a rally that you nor I have had the benefit of enjoying for the most part. And quite frankly, we're now in the danger zone for the short volatility, directionally neutral things that were set outside of the yearly highs that I've established. So,
yeah,
Ilya, do you trade this or fade this, considering that we have been wrong not to be long for a bit here?
Well, so needless to say, there was lots of soul searching over here around this move because most importantly, it's cleared some important underside levels of a former range that broke earlier. And to your point, we are back at the highs, essentially. We're not quite there, but we are within very close distance. And so the question becomes, well, has the down move been thoroughly invalidated? And there's a couple of things that would lead one to believe that it is price action wise, and a couple things that suggest that the violence and speed of this rebound on news that feels relatively flimsy to justify such a move, and that isn't being confirmed in the bonds or gold and sort of other kind of key assets that were mainstays of the move on the way the other way. So when the move started, when the war move started, you had basically four assets moving in, or four markets moving in lockstep. You had rates, you had gold, you had stocks, you had oil. Dollar largely found a way to reflect both because risk aversion with higher rates is the dollar's dream scenario. And so as you look at this on the way the other way, stocks and the dollar are doing their thing, the dollar echoing sentiment, stocks obviously very buoyant. That's not what you see in oil. It's not what you see in bonds. It's not what you see in gold, where things are moving in that direction, sort of, but much more circumspect. And so, to me, the sense is tempting that this is one of those violent bear market rallies, kind of notorious for how strong and fast they come. But that's not a good enough excuse to stay short. For me, it really comes down to risk reward. I put a bunch more duration into my exposure just before this went. I know what my risks are. Should I have to allow it to expire? And that'll be fine. It still makes this entire episode a profitable endeavor, much less so. But nevertheless, because of all of what I've peeled off so far, rolling this forward, this will be a winning idea, if only by a margin, as compared to where it was at the lows. But if I had to look at this with fresh eyes, and I think you alluded to exactly this, what's the risk reward setup here? In my mind, it's to be short, because you're much closer to the highs with much less distance to be shown wrong than if you were to try to buy this nose up against the highs and you were wrong on that.
All due respect.
You have much more room to travel on the downside.
Weren't you and I saying that at 66.50?
We were. It was also the case then. And so far, it hasn't worked. But that doesn't mean that the risk-reward math without the benefit of perfect foresight is any different.
Well, on Futures Power Hour today, for the folks that missed it, maybe you heard it. You're going to hear me repeat it again. I am sorry for the duplication, but it is pretty compelling, so maybe it's worth hearing once more. From friend of the show, Ryan Detrick over at Carson Research. We had the 7 days in a row stats come through, 2 different variations. So first things first, what happens when the S&P 500 is up 7 days in a row and up by 7% or more during that time horizon since 1950? We don't have that many occurrences here, Ilya. I'm counting this being number 10. This is number 11, excuse me. So this is not a statistically significant sample size. But given those instances, 1 month later, 4.4% higher on average. 3 months later, higher by 10.2%. 6 months, 14.4% on average. And 12 months later, higher by 14.2%. More importantly, perhaps, forget the percent gain. Let's just say 7 days in a row to the upside. It's not something that happens in bad years. On average, in years where the market, in the last 20 occurrences where we've seen rallies of 7 days or longer in the market, the annual return for the S&P 500 has been 18.8%. Years in which we didn't have 7 day in a row rallies, 2022, that was a really bad year for the market. 2018, those are pretty bad years for the market.
Yeah.
2007, 8, 9, 10, 11, 12. We didn't have rallies that were 7 days or longer. So my point is, among the most recent winning streaks that are at least 7 days, the only instance among the past 20 where this has not been a sign that more gains have come was in 2000. But 19 of the past 20 times where you have at least 7 days up in a row, the year has returned positive the rest of the way, 18.8% higher on average. So to that point.
Well, when you're in a structural uptrend, pullbacks follow trend continuation. We have not been in a structural uptrend since October of last year.
I'm looking at the monthly chart here. This looks like an uptrend to me.
On the monthly chart, sure. Fair enough. And if you were to clear this high on a monthly close, which is still 2 weeks away, you'd have continuation. But
maybe I'm getting over my skis
2 weeks away.
Maybe I'm getting over my skis then. But consistent with the stats that we've seen, the change in market behavior, I obviously haven't been wanting to chase this to the upside, so I haven't been getting long. I've been staying directionally neutral, and which on a day like today, that's a little bit more painful as we start to test the top side of the range.
And by the way, you might be exactly right. I don't think anybody knows that this isn't bullish continuation necessarily. And that's why it comes down to the risk-reward math for me.
Well, the risk-reward math for me
nobody knows.
Was getting long for the December 31st expiry, right? I'm not going to try to time this. But if this, my macro brain has hurt me the last few weeks, for stocks at least.
Sure.
It hasn't hurt me, and maybe for bonds too. But it hasn't, staying away from gold wasn't a bad idea. The way that I traded crude, it's worked out really well. I think in terms of directionally neutral, selling the puts at the bottom, 6 of my 7 trades have turned out swimmingly. So I want to avoid...
Flipping on the dollar is what's bailing me out here from having a huge issue.
So what I want to do is then, instead of trying to time the chase to the upside right now, it's if the market behaves consistent with how it does on average, 7 days up, what does that price target look like realistically? If we go 10% over the next 6 months, if we go 14% through the end of the year, or 18% for the average yearly return, what does that look like? Well, the market just crossed through its opening prints for 2026. So an 18% gain on top of what we'll call it, 69.60. That's bringing us to like 8,400 by the end of the year. So today with Jamal on Futures Power Hour, forget chasing this to the upside, forget trying to see if we're going to go to 7,100, then fall back and then reload and go up again. Long the 8,000, short the 8,200 call spread. 261 days to expiration. So that way I can trade in and around the market, losing momentum, pulling back to the middle of the range, maybe carving out a sideways range for a little bit. I could trade neutral within that. But the North Star right now for me, I've seen enough. I've missed the last 400 points. I'm not going to miss the next 1,400.
Well, I mean, I certainly think that it is plausible, given this momentum, that there's follow through, and I don't think you can ignore that. I likewise think that when you are standing with the tip of your nose against resistance, and the very thing that got you to a sell-off in the first place, crude oil, is not coming off, and neither is gold. It's not re-engaging its up move. The bonds are doing maybe a scratch better, but only just so. I think you have to be exceedingly careful, because market lore isn't market lore for no reason. Bear market rallies are famously harsh. And this is not a rally that's being confirmed across the same assets that marched with stocks lower when it was time to be selling. And so if the logic to being long is purely a price action thing, I can understand it. But then the risk reward math is troubling unless you push a little bit higher and take out these highs. And otherwise, if the logic is narrative based, none of your narrative has changed. But for the relief that apparently Tehran and Washington can talk to each other. Now, that's not insignificant.
Not just that. I mean, I'm trying to find the confirmation of the data, but this afternoon, the Wall Street Journal is reporting, and again, I take the Wall Street Journal as an authoritative news source. Okay, I assume they have their sources. 20 ships transited the Strait of Hormuz in the past 24 hours through the international shipping lane that's been cleared by the U.S. If you're not using Iranian ports, the oil can still go through. That's why yesterday I saw that there was news that a Chinese vessel was trying to run the straits, and how would it get its way around the blockade? It wasn't a Chinese vessel coming from an Iranian port. It was a Chinese vessel coming from the UAE. Mm-hmm. And the UAE is not subject to the blockade. The U.S. here, and I think maybe there's some confusion. Even from people, I've seen some folks in the chat say like, "Oh, how's that blockade working out?" Like, Trump's an idiot. The blockade isn't no ships in or out. It's no ships in or out that are leaving Iranian ports. So if you're Saudi or you're Bahrain or UAE or Qatar, you can get your energy flows start moving again. In theory, it's just the Iranian flows aren't going anywhere anytime soon. So,
well, of course, the Iranian position is they're disrupting all those other flows. And so what you end up with then is everybody is disrupting everybody's flows, and the whole thing is a trickle. Is it better than it was when there were literal missiles flying? I mean, maybe to some extent, the U.S. is at least escorting some ships and backstopping that out of the Gulf. But this again gets back to the conversation that we were having yesterday. What's the timeline that we're talking about? Are we talking about the week and a half that we have remaining on this ceasefire? Or are we talking about the consequences of this war beyond that? And I'm not talking years, I'm talking weeks.
Later this year, the American Farm Bureau put out a survey today saying that as of the first week of April, more than 70% of farmers in the United States had not secured enough fertilizer for the spring sowing season. Yep. The farmers, by the way, the folks who have received buku bucks of bailout money over the past several years. Helene Meisler, who we conducted that interview with a few weeks ago, she tweeted at me in response to that. The payments from the government from the tariffs last year arrived too late for most farmers to pre-buy fertilizer before the war began. That was what she responded to when I sent that out earlier. So yes, second order effects notwithstanding, they are certainly coming, right? Can't dismiss that.
I mean, they're already here.
They're already here. I paid $4.89 yesterday to fill up my tank. It was over $75 to fill up my car. I have like a 15.9 gallon tank in my Audi. Like what?
Yeah.
That's usually like a $45 fill up. And not that we should be complaining, Elliot, like we can absorb that a little bit better than most, but for every American, let's call it an additional $20 or $30 a week over the course of a month, an extra $100 over the course of a year, $1,200 out of pocket. But this scenario, I was trying to pitch this on yesterday with copper and the shape of the crude curve. You're seeing it more today where oil is down in the front month. CLK6 is down more than CLM6, which is down more than CLN6, which is more down than
Mm-hmm.
And then you look at copper here today, it continues to run to the upside. I mean, we've been told we can pull up our macro textbooks. I know you keep all Paul Krugman stuff on your shelf like I do, alongside Thomas Sowell and all the greats. But I think the argument would be made in a muddle through scenario from an economics perspective where you don't have recession, but you just have a higher floor for prices. It's asset inflationary again. It's late 22 going into 2023 type of mindset. And then overlay the psychology of all these institutional traders and hedge funds that dump stocks in late March and early April, who, if you're looking at these tracking boards, and tomorrow for overtime, I'm going to pull up the Bloomberg scoreboard of how hedge funds are performing so far this year. You're going to see many are underperforming the S&P 500 again, like last year.
Yes.
Which sets up the chase market once more, where people, because they've underperformed and they're misallocated at the wrong times, they're forced to take more risk and pile in and chase things to the upside to make up and catch up. So, Ilya, I mean, like you and I could very well be right about the supply chain problems and the horrors that are going to come. But like water, capital always finds a level. And in a world where Asian and Latin American and African markets may be pressured because of the energy issues and supply chain issues that are still are forthcoming, if you have to allocate the marginal dollar to equities, do you feel good in 2026 doing it to US stocks or to emerging markets?
Well, I think this really gets to the essence of the issue, because when we were looking at what this crisis was, pointedly, as typically happens in these types of situations, differences regionally, differences sector-wise, largely went out the window. And what you were left with was a kind of risk-on, risk-off scenario. Now, typically, you might expect that if you were to get a pure risk aversion kind of a thing, bonds would be on the upside. But of course, the essence of this thing was that it was inflationary. And so bonds went down, and this whole thing was about taking away rate cut potential. Very clearly, the markets did not react to this war as, for example, they did the Russia-Ukraine war. Bonds went up, gold went up, pure geopolitical jitters. That's not how the markets read this. From the very beginning, as a matter of fact. They read it as an oil shock with knock-on effects for interest rates and policy. None of that part of the sell-off has unclenched at all. And so when you look at this and you go, well, is this about muddling through for demand eventually? Doesn't seem like it. This seems to be the same old saw. This is not about recession, although, of course, demand destruction enters this conversation eventually. The markets didn't respond to this with that in mind at the onset. They responded with, oh no, we're not going to get our rate cuts. Hence the decline in gold alongside everything else. And so when you see that those things haven't moved, those things haven't improved as stocks have celebrated this ceasefire, that's where you start to go, well, why? If sentiment has really shifted, if the boogeyman that was unleashed is really back in the box, why aren't these things unclenching? And it's because the upshot of the story has not changed whatsoever. If anything, this makes it less likely that the central bank is going to move on rates sooner rather than later as a foregone conclusion at this point. And so why should those markets unclench? But if this was the reason that stocks came down in the first order and now they're up because we got a headline, it sure does look like a sentiment sort of reaction, vulnerable to finding that Wile E. Coyote is out of ground to run on.
Ilya, stepping away from the macro for a second, or at least the Iran war, we did have bank earnings come out today. I have BKX, which is the KBW Nasdaq Bank Index here. It's had a really nice turnaround the past few sessions. Dare I say that it completed a measured move to the downside and has since returned back into an area where the market was finding support previously. But JP Morgan, they beat on EPS and revenue. Citigroup was a clean beat. Wells Fargo was an EPS beat, but a revenue miss. Wells Fargo was probably the worst of the group. Citigroup was probably the best. But I think the read-through here, when I'm just looking at everything that folks like Jamie Dimon had to say, the fundamentals are fine right now, okay? Broadly speaking, this is still volatility plus rates plus geopolitics influencing the earnings cycle. But that is really the problem right now when you look at the banks. They're not saying that credit deterioration, the private banking credit issue that we've highlighted previously, Ares, KKR, Blue Owl, that's not something that's seeping into the mainstream banking system. It's not becoming systemic risk just yet, which I think is probably good to hear. We likewise see that the economy is in good shape. One of the read-throughs here is that the consumer has not cracked, even with higher fuel costs over the last few weeks. These lines of revolving credit cards, they're staying firm. We're seeing that debit card spending rates are holding up. And so the consumer's still there right now. The guidance is cautious. It's definitely not bearish. I wouldn't go that far. They don't want to paint an optimistic picture with the macro overhang, but as we're getting into earnings season here, there seems to be a read-through, which is from the banks that we heard today, Wells Fargo, Citi, JP Morgan, BlackRock. Were it not for the macro uncertainty of it all, things are going fairly well. So you get Iran off the table. If ships start going through the strait, the U.S. economy is kind of on an island. And that is, of course, our greatest geopolitical advantage, Ilya. We're surrounded by two oceans and friendly neighbors to the north and south, or they used to be friendly neighbors to the north and south. Either way, though, right? We're a little bit more insulated than other economies here going into the war. We're a little bit more insulated coming out of the war right now. So I am not chasing this to the upside in the short term. I don't want to pretend to chase it to the upside in the short term. I'm going to trust the stats. The stats for stocks have rarely led me astray, Ilya. When we have these kooky stats about markets doing X and then Y happening in a vacuum. But 8,000 S&P now. That's my North Star. What's another 16% be friends?
Yeah. I mean, in my mind, I think it would be overly optimistic to conclude that we are an island in this environment, if for no other reason that while we're certainly closer to energy independence, and that's obviously the big thing that we've run aground as far as shipping is concerned, we are certainly not immune to the price of plastics. We're certainly not immune to the price of food. We're certainly not immune to the price of fertilizer. We're certainly not immune to the price of aluminum. All of these things have been disrupted. And I just want to point out what's going on with shipping costs here. Take a look at our favorite ETF here, Be Wet, for the cost of shipping, and you can see. Is this time to get optimistic? It surely still looks like the market has not unclenched as far as shipping costs are concerned.
That is true. But to end this on some Dow theory perspective here, Ilya, the OG DJT, not the newfangled one, but the original Dow transports. This is something that broke out earlier this year. We hold this out, if transports are up, if semis are up, if telecom's up, if the banks are doing well, you've switched back to a growth mindset. I'm not convinced about tomorrow, but I think the market's telling us this war is over. And, not for nothing, Ilya, when the market stutter stepped in January, right? It stopped rallying in late January. What did we hear on January 28th? That was the day that the first carrier strike group was deployed to the region. So if we've taken the Iran war off the table as an issue, yes, we have AI in the background and we have Fed cuts in the background. So, but then are we at fair value again? Is fair value a little bit higher if we don't have an Iran war looming anymore? If we sign a 20-year peace deal with Iran, Ilya, this is going to be a non-issue now. So
I just cannot see how, even if we sign a peace deal in perpetuity for all time, with all forgiven somehow.
Well, if we do that,
Trump deserves a second FIFA that have already been caused go away in any kind of short-term way. Don't end up in CPI. Don't end up holding back the Fed. And that's precisely why crude oil isn't moving, shipping rates aren't moving, bonds aren't moving, gold's not moving. And one has to wonder, when you're testing resistance and nothing has improved, which is the asset that's out on an island?
Overtime's out of time for today. We'll be back tomorrow, same time, same place, 4 Eastern, 3 Central, right after first call. Nope, last call. So for Ilya Spivak, I've been Chris Vecchio. Good luck trading. Be sure to stick around. Ilya's here next with Macro Money.
See you there, everybody.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
I'm like the Tupac of economists, going out on top. And will I ever really be gone? Say bye to Ben Bernanke. Cry your eyes out past the hanky. Gone from the Fed, but still looks swanky. Bye-bye, Chairman Ben Bernanke. Ben Bernanke, hardly knew ya. Ben Bernanke, glad we're through ya. Sayonara, Mr. Yankee. Closing bell tolls for Ben Bernanke. Now, say hello to Janet Yellen. New blood, maybe start some selling? All around the world like a market Magellan. Hello, Janet Yellen. Janet Yellen, Professor Shady. Janet Yellen, new chair lady. Welcome in the new Miss Yellen. Different from the old, there's no telling. And I'm out, like Tupac, in a peaceful transition.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Pay for backtesting? No. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial in the DTE, and stack the legs. See what survives. Check out Tasty Trade today.
Stock markets have the faith. That's the story as they continue to rally in the wake of a ceasefire between the U.S. and Iran, in the sense that after an initial set of talks went nowhere, more talks can be had. Not all is lost. It's just a little slower. It's still good. It's still good. That's the readout from the markets here, at least on Wall Street. But how come the rest of the landscape refuses to comply? That's what we're going to try to have a look here and see on Macro Money. I'm Ilya Spivak, head of global macro here at tastylive, and we'll begin with a look at the price action as ever and what it is that these markets have shown us, not so much by anybody saying this or that, but by the price action speaking to what sentiment is relaying. And then take a look at some economic data that came out over the course of today to see if maybe this part of the equation can give us some insight about what's next. Now, as ever, the most sort of critical bit here seems to be that the hope springs eternal for stock markets and that the US dollar is increasingly a pure reflection of sentiment because it appears to be clinging on to what the stock market is setting as the pace. And that, of course, is not to be dismissed, because the US dollar here could be more attuned to what's happening on the yields front, could be more attuned to what is happening with other sort of typical considerations that shape it. But no, it seems to be much more in a kind of risk on, risk off mode. And so we see here another powerful jolt higher for stocks. The S&P 500 now coming in on that top that's been effectively in place since late October last year. That was, of course, set by the Federal Reserve when we had that month's FOMC meeting, and Chair Powell came out and chastised markets for over-extrapolating rate cut expectations, telling them that the central bank is not nearly on the autopilot that the markets seem to think that it is. Of course, we then had the beginnings of a turn lower well before this war. And then once the war finally struck, of course, the bottom fell out. And we've now, in mere days, erased that part of the move. Now, from a sentiment perspective, this is obviously a heroic recovery. And to the extent that the dollar is a creature really of sentiment, it would seem. We've seen it come off against this backdrop. We of course saw the dollar was going up as stocks turned lower, finding the appeal of a cash liquidity haven, as it tends to do at times when the markets get panicky. And so you see the same thing here. As the markets unclench, so too capital comes out of cash, and we see the dollar largely fall in with this narrative. Where it seems like stocks are willing to give this sort of nascent ceasefire the benefit of the doubt, it is not uniform. And this is where things seem to start to get a little bit confusing. When you look at what's going on in bonds, obviously we can see that the essence of the move lower was built on what the war would mean for rates and for inflation. Because what we find is the war trade as such was a trade lower in bonds, a trade higher in yields, on the expectation perhaps easy enough to discern that if you get higher oil prices spiking as oil did, what this means is that you'll invariably have a situation where the central bank is unable to cut rates with the same level of conviction as you might have expected. And that's because, as we've talked about before, you have a clear read-through from energy costs into inflation. And of course, we've just seen CPI data showing us as much just last week. So with that in mind, you get a run-up in rates when all of this occurs. Now, you'd think if the rundown in stocks and the run-up in rates, and therefore a sort of parallel decline in bonds to what the stock market is doing, if that's what the driving narrative is here, and if stocks are telling you the driving narrative has reversed because the markets are prepared to have faith that this ceasefire will become something that is a lasting thing shaping the situation, well, then you might conclude that what's going on here is going to show up in the bonds. And although the bonds have come up a bit, what you're not seeing is some sort of a convincing view that echoes anything that looks like what the price action in stock markets is saying. Now, we are a little bit more chipper today, do make a little bit more headway, but what we don't do is meaningfully come back through what was the former area of support, now resistance, where you have whatever this fuzz is. And we can see it's not ever really just a line. It's sort of an area. And we can see here's that area here, and there it is here, and we're bouncing around it here. But needless to say, we are a long way from overturning the sell-off in bonds in the way that we are seemingly a hair away from overturning the sell-off in stocks. So the level of conviction here is markedly different. Okay, can we get some more confirmation? Well, let's take a look at gold. It was selling off through the war, again, because the read-through for markets seems to have been first and foremost about rates, about the idea that if you were to disrupt crude oil in the way that this war disrupted it, you'd have higher inflation, you'd have higher rates. Gold is, needless to say, not an asset that yields anything. And so higher rates alongside a stronger dollar, that's the kind of thing that gold kind of famously does not like. And so you end up with a situation where, because the market's read-through is about rates and not about geopolitical risk as such, even gold sells off. This is, of course, remarkable because when we compare this to what happened when last time we started a war in the recent past, or a war was started, the Russian invasion of Ukraine, gold had a very strong initial upside reaction, and that was a conversation about bonds. Again, in a situation where there was a major oil exporter, Russia, that was disrupted. There was a major gas supply chain from Russia through Ukraine to Europe that was disrupted, and yet that read-through was more about the geopolitics. This one seems to be more about the rates. And so what you end up with is gold showing you that it's heading lower as a consequence of all of this, not higher. Okay, so now we don't have bonds confirming. Now we don't have gold confirmed. But what about the bogey du jour itself? What about crude oil? Well, it's not really confirming either. Crude oil is still sitting pretty much where it's been sitting since the start of this war. It gapped higher to kick it off. We had a level change. This enormous back and forth candle here kind of sets where the new level is now, it would seem. Give or take, let's call it 102 to 92 kind of oil, somewhere in here. And we end up sitting right there and not going anywhere. And so, of course, we've oscillated within the bounds of this range, but it's almost as if crude oil has said, well, after a few days of war, the impact was going to be what it is. And we might get some shifting around the margins here, but for the most part, the impact of the war is oil at these levels as a kind of new normal. And perhaps because of this, you don't see an unclenching in the bonds. You don't see an unclenching in gold. Because if their upshot through this thing was that the war would be inflationary through the channel of higher energy costs, well, then that hasn't changed as a consequence of what we've seen here from a political perspective. And instead, what we're looking at is stocks, a more sentiment-based market, cheering on something on that sentiment basis, but the upshot of where the problem arose to begin with, that remains intact. And we can see that in the cadence of the crude oil move as it leaks into CPI. We, of course, just got that CPI data on Friday last week, and we can see that it seems this initial rise in crude from the beginning of the year, crude, of course, began rising in January, that seems to be entering the price now with about a month's lag, as seems to have been the cadence. But this big jump here, that's still ahead of us. We can see that although crude oil has come in a little bit, break-even rates continue to remain elevated. This is the bond market's measure of inflation expectations. And perhaps most importantly, the gap between 5 and 10-year break-even rates, this kind of wedge of nearer-term inflationary pressure, note it was essentially non-existent at the start of the year, that is still holding up. And so you have this situation where the market clearly still perceives an inflationary risk and an inflationary shock from this episode. Now, that makes the data we got this morning appear particularly interesting. That was the PPI report, and it came out refreshingly normal and even a bit better than expected. Here's the month-on-month increase. We can see at 0.5%, it matched what we saw in the prior month. That, of course, was a little bit better than expected. There was looking for 1.1% for the surge. And clearly that just did not materialize here. Looking then at the year-on-year numbers, this is the headline year-on-year reading. We rose to 4%. That was the highest since 2023, the beginning of the year there. And of course, that's eye-catching, but also not unexpected and a little bit better, in fact, than economists had it. They were baking in 4.6%. Looking at the core numbers, we have the increase, you might think, but not so much the runaway concern that you would worry about. We're looking at numbers here that are telling us that, as was the case in recent swings within the range, so too we remain within that range. And so there doesn't seem to be the kind of hysterical concern around energy prices that you might worry about, at least in the PPI numbers for now. They are moving higher, but they're not moving higher in a way that would tell you, oh, there's some kind of a crisis here. Now, when you look at the category breakdown, needless to say, energy stands out. You can very clearly see that you have a kind of mix over the past 2 months, especially the March and the February data, where energy is a huge month-on-month increase in terms of its contribution, but the rise in overall PPI is relatively steady, about 0.5% for the past 3 months. And what that seems to suggest is that energy is just not a very big part of this calculus, at least for now. And so when you then see this trade services component, that's the cost of essentially moving stuff around the supply chain. This is basically wholesalers' margins. When you look at this and you see, well, when the price of energy was falling as a contribution, margins were expanding. And now, of course, there's been a giant jump and now margins are getting squeezed. Maybe what's going on here is just too early to really show up, because inventories are still being spent down. You don't necessarily have the mechanism to pass this through just yet. And perhaps, as we saw with the tariffs, wholesalers are eating some of the cost, waiting for the thing to blow over. Now, in year-on-year numbers, of course, the energy jump is still astronomically eye-catching, but everywhere else, things look relatively on trend compared with the last 3 months. Goods PPI is a bit off the charts here. That's quite the jump at almost 5%, and that probably speaks to the cumulative impact of the tariffs alongside what we have in this energy shock. But nevertheless, the overall situation still seems to be, for now at least, relatively anchored. But whether we can really hang our hat on this or not and say, well, the data doesn't suggest that there's really an issue, really seems to depend on timing and whether we can really surmise that all of what is on display in this data is what we are going to see going forward. Now, of course, the jump in energy costs obviously tells us that the increase is already on display to some extent. But it is important to consider whether what we're looking at here is the same thing that we were considering when we were looking at CPI. And here it bears looking at CPI broken down in a kind of core components way. Note here, this is taking energy out of the equation. And we can see that even without energy in the equation, we can see a little bit of a pop. And so it looks like maybe the Fed's bet that we were going to have a unwinding of goods inflation as we get into April, as we start to get these things factored out, because we have the kind of year-on-year calculation adjustment reset. One might say, okay, well, most of the tariffs came out in April, so maybe we're ready to see that get rebased in the data. Certainly that's been the Fed's argument. They were looking at this kind of flatlining here and saying, well, by the time we get to April, May, we can start to think about rate cuts. because the tariffs will have been a one-off impact and it will base out of the numbers and we'll be back to about 2% as long as nothing else goes wrong. Well, energy completely notwithstanding, it's out of this calculus. We've seen that inflation is perking up in the most recent CPI data, and it's perking up in services and in goods and in housing. And that's not something that the accounting reflects. That's something that the PPI story might well still be catching up to. Because again, once we look at where we are in this sequencing here, it looks like, yes, energy is a big contributor, apparently, to what's going on right here, but how much more of a contributor does it then start to be as the impact from the war really starts to work into the data? And so although we get this jump in the month-on-month and even in the year-on-year numbers, we still have things looking relatively as expected. Though we see these rises, these are perhaps akin to what we're seeing in CPI. Increases outside the impact of the war. And that impact perhaps still very much in front of us. Which then explains how it is that we haven't unclenched on bonds and gold and, frankly, oil itself. Now, from the market's perspective, of course, this whole thing has been a drill down into Fed policy expectations. We can see rate cut bets for this year have evaporated as a consequence of this war, and they've not rebuilt, which again tells us the inflation risk here is not over, and the exuberance that the stock market is showing is not being validated by the very assets that seem to have been the driving center of the narrative on the way down. For next year, we're looking at 33 basis points in cuts. That hasn't changed much in recent days, but what we can see is that this cumulative sum this year and next has continued to be a great guidepost for what stocks are doing. Note, the bottom in stocks was when we reached maximum hawkish repositioning, where we hadn't started to build rate cuts back into the mix for next year, but the ones for this year had already vanished. And since things have gotten a little bit more dovish, stocks have recovered vigorously. Now, it's not as if we're back to here. This story in policy expectations, as it is in bonds, as it is in gold, is a lot stickier at inflationary and therefore more hawkish policy levels. But stocks have made it all the way back, almost. And so again, you look at this and you have to ask yourself, are these stock markets out on an island by themselves? Is this a sentiment move, first and foremost? Does this reflect what is likely coming next? Or does this reflect what is already here that the markets are understandably happy about? Once you price that in, do you then get back to the status quo preceding the risk-off one? And so with that in mind, we then look at what's going on here with the situation in policy expectations around the world, and we find it's not just the US. Yes, the hawkish sentiment has unclenched, and it's unclenched almost everywhere. Bank of Japan was the only one that was really left by the wayside in this entire narrative, and by the wayside, it remains. Things have moderated for the ECB and the BOE and the Bank of Canada and to some extent the Fed, but the Fed is still not coming back to a rate cut conversation. Neither is the Bank of England. The ECB has not come back to neutral. The RBA has not unwound. So this exuberance in stocks is just not being matched by virtually anything else that was marching alongside them lower. So, from a positioning perspective, what does this mean? I'm still sitting on the short side of the US dollar, where I flipped once this move started to take place, and that's happened. That's helping to take some of the sting off what's going on in stocks, because obviously I still have these put verticals here, and clearly the market has rallied in their face. Still have these put verticals in the S&P, in the NASDAQ, in the Russell. I'm going to have to figure out something to do with the Russell here in the coming days, either roll or not. But it occurs that from a risk-reward perspective, if this is wrong, and if you had to look at this from the risk-reward math perspective with fresh eyes, not with positions that are already on, we are much closer to resistance than we are to support. And so it would seem strange to do the equivalent of buying this market by closing shorts when the risk reward seems to favor the other side. And that seems to reinforce the idea that the move is not being confirmed by other markets, and the dominant narrative there holds. So I'm going to stay long oil for now, staying short the bonds for now via these put verticals, and begrudgingly holding these stock positions, suggesting that at least for now, this looks more like a sentiment melt-up and not a concerted sentiment shift engulfing other markets. And of course, being short the dollar and having a little bit of long gold exposure by having sold put verticals there is helping to mitigate and helping to sit through what could be a return back to the prior narrative. But of course, we're going to have to wait and see. And that is macro money for today. As ever, we are here just after overtime. That's a show that I co-host with Chris Vecchio, looking at the Wall Street close and where things might go therefrom. I'm also writing for the news and insights portion of tastylive.com and commenting at Ilya Spivak on former Twitter and on Blue Sky. If you're watching this on YouTube, like and subscribe. Macro Money returns tomorrow. Happy trading.
Get tasty, free market. Come on, you know we can't